Hello,
Yo,
everyone.
what is good?
How's it going, guys?
Jonathan, how are we doing?
I am good. The traveling trader, is that your new thing?
Apparently, apparently so.
Right. So where are you heading, William? Where are you traveling to?
Well, right now, as you guys know, I am in Hong Kong.
Nice.
However, in April, I have been invited to speak in Dubai, the first international event that I'm speaking at. Super excited. But there's also an event in Hong Kong. I think it's May. So when I'm back from Dubai, when I get back to Hong Kong, there's another event here. So that'd be super cool. And then there's rumors that I may be going to Thailand for a couple of weeks as well, just before I go back to the UK. And then who knows where I'm going to end up. So, I don't know. Hopefully, I'm going to stay
Nice.
in the UK for a bit, I think. I miss
Yeah.
my setup so much.
Maybe you could go into politics. It seems like they need someone to figure stuff out over there.
Dude. Oh man,
Getting
I don't know if
crazy.
I want to be in I don't think I want to be in UK politics right now.
No,
Oh, dude,
crazy times.
man,
Yesterday we had
literally.
the Scottish leader. I think it was the Scottish leader of Labour said
Yeah,
they called for Starmer to
yeah, to
step
step
down as
down.
PM, which is
Yeah,
interesting development. But we didn't see any other what is it called, ministers or whatever jump on that.
yeah.
So
Well,
it seems
there's
like
a few people underneath him, like a few of his team, who actually, hired this particular person that's in discussion at the moment. So there's a lot of those guys have stepped down, and then the Scottish MP, who's actually the head of the Scottish Labour Party, basically said it's a shame. I'm good friends with Keir Starmer, but I think he should step down. Keir Starmer was actually supposed to step down. I think he said that he was going to step down, but then he changed his mind last minute and said, I'm not going to step down. So I think there's going to be a lot of backlash coming through. Like there's even like talks about a new PM coming in. But then they're also discussing the idea like if there's a new PM coming in, perhaps like why shouldn't there be a new general election? So there's going to be a lot going on in the UK now. I reckon over the next 3-4 months, and yeah, it's going to be interesting. It's going to be really interesting.
yeah,
Glad I'm not in
definitely.
the UK.
I'm watching gold here, so I want to break down something that I just did some did some analysis uh, on uh, on gold here, and I kind of want to break down what I looked at. I always want to organize the chart a little bit here before I do that. So let me just, man, TradingView is just really good charting platform for this type of stuff. Let me just see, where do we have the? Okay, let me just add everything to a 4-hour folder here. You know, when you move around in the different time frames, it gets a little bit messy. Yes, we're gonna do that one. We're gonna remove this one. Okay, so interesting developments on gold here. I mean, I think that the underlying the underlying fundamental reasons for gold to be bullish. I mean, everyone's looking at this and thinking, okay, this is a sell-off. This is the top on gold. Now the rally, it's all over. But we got to think about, the fundamental reasons for gold to really rally in the first place. And we have, we got the stake inflation data. It kind of continued to challenge the narrative of immediate rate cuts. We have a broader debasement trade. Basically, that's where investors, they seek hard assets like gold to hedge against currency devaluation and expanding government debt, and this is what keeps gold higher. Even after a move like this, it's still generally quite healthy if we're looking at the local structure here. And what I like here is we're forming this ascending triangle here on the 4-hour, and we're getting close to kind of the apex of this triangle. And what I mean by the apex of triangle is when price is, I mean, at some point the upper horizontal level and the lower trend line, they're going to converge, and that's kind of like the end of the pattern, and that's the what we call the apex of the triangle, and that usually happens around 75% of completion. If we added a trend line here, let me remove that one. So if we add a, where's the trend line? Trend line is here. So if we add a trend line here, you can actually see that this is not really the end of the triangle. It goes kind of like that. And 75% of completion of this triangle pattern, this is where you enter the pattern. So let's take the middle to the end. This is the middle, right? That's the 50% completion level, which would be around here. And then, of course, the middle of the middle is 75%, right? And that's going to be right here. So we're getting close to the 75% or 70 to 80% region where we can expect a ascending triangle to have the highest probability of a breakout. Now, to notice, we have some context here, right? An ascending triangle is a continuation pattern, and it's where you have an uptrend and it hits a resistance and then the low like this. That's the textbook ascending triangle. But as you see here, this ascending triangle was formed by price entering the pattern from the upside, which is not the classical bullish continuation pattern that we know. So the probability of this pattern actually breaking to the upside might be different than the classical bullish pattern. I don't think there's been a lot of research on this. The research that I've seen is that a ascending triangle with price entering from above looks more should be viewed more as a consolidation pattern and has different probabilities of a breakout. But when we do have the breakout, the measured move still applies. So you have the measured move where you measure the height of the pattern. All technical patterns is measured this way, from the low to the high of the pattern. And I've done a little bit conservative measurement here with the candle closes and the midpoint of that resistance. But what we see is the conservative measured move of this breakout aligns perfectly with the area around 5,500, which is the previous all-time highs. So what I'm looking at here is also the RSI. We have on the RSI, we got on, first I should mention on price, we have technically a equal highs on price, but we do technically have a higher high on RSI. So there's a small divergence here between price and momentum. RSI has recovered the 50% level nicely and might be starting to range between this 50 and 80 level. And I'm not sure if you're familiar with viewers watching here, the theory, the Cardwell theory with RSI, that traditionally look at RSI as oversold and overbought. That's like a textbook case to look at RSI. But one way to look at RSI is it has different ranges in the RSI. So one range starts between 40 and I believe it's 80. So when prices trade within this range, you're most likely in a bull market where buyers are dominant. And you can see here that all throughout this uptrend, RSI kept nicely within this range. And when you break into this range and you use that 50% level as support, it's a type of signal that you might have a Cardwell range flip on the RSI. So down here, you're bearish. And then you can break out, hits the 50, starts trading higher. And even if you have an RSI moving down like this, it still finds support on the 50. And that's that nice uptrend right here. So we do have that type of flip right now, where you kind of see RSI go from oversold, recovers the 50, and potentially starts trading within this range on the RSI. So that's a good, nice bullish confirmation. You also see on the OBV. Now the OBV is a very simple indicator. It just takes the I'm not going to go through the calculations how it's done because I have an idea, but I don't want to sound stupid trying to explain it. So the OBV here, higher highs, price equal highs. That's a bullish divergence between the volume and price. So you can see that now buyers are stepping in. Buyers are dominant within this overall pattern right here. And it looks like gold wants to continue higher. So that's what this is the setup that I'm watching most closely right now today. And of course, tomorrow, we have the NFP at around 1:30 UTC. We got the US non-farm payrolls. It is delayed because of the partial shutdown in the US government. It was supposed to come out last Friday, I believe, but it's coming out tomorrow instead. So I'm also thinking that maybe gold can start, ranging within this low time frame range, and this is where the folders come in handy here, because I can then go in and remove the 4-hour drawings, and we can go into the 1 hour. And here, what we have in the 1 hour is this low time frame range right here. And I'm thinking that whatever direction the breakout from this range is a tradable signal. So we break the range lows. That's a tradable signal to the downside. And if we break above, then that is a confirmed breakout and a confirmation of the ascending trend line. So that's what I'm watching today. Now, of course, because of the fact that we do have NFP tomorrow, might be a case for calm in the market, right? Usually what we see is when we have a major news event like the NFP or FOMC, something like that, we see the markets kind of, they try to price it in the few days before, and then a few hours or the day before the event, markets kind of become quiet because they're waiting for the outcome of that event, and then all volatility breaks loose, right? So that's a possibility for gold. But as long as prices stay above the range EQ, I'm bullish for gold. I'm bullish on a break of this triangle pattern to the upside. But again, to go back to what I said in the beginning, context matters, right? Context is key here. This is not a traditional bullish continuation pattern. This is more of a type of consolidation pattern after a drop. And with that said, if this triangle invalidates, if we break below this trend line, I view that as a very bearish development for gold, because it now shows that buyers have really tried to establish a fundamental base for gold, but it failed and broke down, and that I see as very bearish for gold. All right, that's what I'm watching on gold.
That's super interesting, man, because I'm looking at something similar. Well, gold, GU, and EU are playing out quite similarly at the moment. But before I go into that, I'm just going to bring my screen up real quick and show you guys the news that we've got out today. So we have got high impact news out today for the US dollar. Yes, it is today. I had to think about that then. Yeah, so today, 1 a.m. This is low. So this is UK time. Yes.
Yeah, it's 1:30 UTC.
Yes. So yeah, sorry, this is Hong Kong time. So my laptop is in UK time, but because my Chrome is in Hong Kong time, so I got to try and remember whether Forex Factory gives me HK time or UK time. So yeah, this is HK time, so which would be 1:30 p.m. UK, which is GMT. So 1:30 we got core retail sales and unemployment cost index. So not 100% sure whether they're actually coming out with the potential shutdown of the government at the moment, but potentially right now it's in front of me, so I'm assuming that they are going to come out. We have to see if they do or not. Jonathan, do you know if they're coming out or not?
Yeah, I haven't heard anything other than I haven't heard anything about that. So yes, I do think they're coming up with US retail sales.
That's what I believe. Okay, awesome stuff. So like we said, we haven't heard anything other than so right now, yes, they're still coming out at 1:30 p.m. UK time. However, at the moment, depending on what's going to be happening you should see my screen now, okay? So depending on what's going to happen now over the course of the next couple of minutes will depend on whether I buy GU and EU. Gold is also looking really nice. GU is not as probable as I want it to be. However, EU, if we can come down into this area here, I think I'm going to be buying Euro USD, which is going to be super nice.
Yeah, Euro USD is super bullish. I did some analysis on that yesterday, and it's definitely a lot of confidences here. We do have from a swing trading perspective, it's just a beautiful, like a perfect break and retest setup on the daily. We have major U.S. banks talking about Euro USD being trading around the I think it's the 1.22 to 1.25 area this year. Looking at more dollar weakness, more euro strength, and that's also we got the interesting rate differentials between the ECB and the U.S. Federal Reserve Central Bank as well, and it's just overall a very bullish pair on the daily. On the 4 hour though, what I'm looking at is on the 4 hour maybe a move back down to like 1.18 800, so 1.188. I think potentially pull back down there. We had an explosive move yesterday. We're also seeing actually we're seeing a nice bull flag here, type of, not pennant. I think it's a pennant, yeah. So on the 1 hour, nice pennant pattern here. Looks like it's coiling here. Actually, it looks like it wants to break to the upside, and I do see a lot of times on EU when there's a lot of momentum, especially when you have like a huge daily breakout candle like we had yesterday, and if the conditions for that move is still around today, a lot of times what I do see on EU is just continuation. It's potentially a lot of fundamental factors driving this move, and then you have like a pennant formation, a coiling price action with bullish underlying fundamentals. That to me looks like a good recipe for a break to the upside. And so the measured move on that breakout would be around between I'd say potentially all the way up to like 1.20, somewhere around that level, 1.198, 99, 1.20. I think a good target for Euro USD. I'm gonna see if I can open up MetaTrader. Do you know if they've fixed what happened in the last update?
I'm not 100% sure. I've just placed a couple trades now on my MT on my phone, as you can see. So I'm in Euro USD and gold, as you can see here. I think I got shafted a little bit on gold. So yeah, I did a little bit.
I'm gonna see. I have two MetaTrader 5 terminals, and I think one of them is updated, and yeah, that one is just not even loading. So I'm gonna have to close that one down and open the other one.
Nice.
It's just absolutely amazing that the trading industry, and this is I think it's a good testament to the where the trading industry is in terms of innovation. We're using
technological advancement.
It's the worst, like execution wise, sure, great, it executes, it does all the things it's doing, but come on guys, like you gotta cheap, definitely cheap. This is infrastructure wise good, execution wise good, but the UI, and now they're coming up with an update which is just crashing everything, and they haven't updated, rolled it back. This is incredibly bad by MetaQuotes, the creator of MetaTrader. I'm glad I'm not directly associated with that company, so I can say things like this. Okay, so I opened a previous version of MetaTrader, which works. apparently. Oh, looks like you gotta learn Chinese to understand that. Do they speak?
Oh,
Do they
God,
speak Chinese in Hong Kong?
yeah, well, Cantonese.
Right.
Yeah. I do not. Well, actually, no. I was apparently. Well, the missus said that I was flirting with an old woman this morning. I went to pick up some eggs, so I asked her for 10 eggs, and then I said thank you, and then she was like making a lobster broth, and then she was like, smell it, smell it. So I was like, homemade, which is like delicious, and she's like, oh, thank you, thank you, thank you, thank you, bye bye. So yeah.
Nice.
That's as far as my Cantonese goes. So, like, it's very, very basic, but I mean, it gets me around, so it's getting better slowly.
It's difficult to learn as well. It's way different than English. Like it's
So
completely
hard.
a whole nother world.
Yeah, like if there's anyone, like even the missus, like she can't be bothered to teach me. Oh, there we go, gold's looking nice. So I'm going to be looking at entering in gold any minute now. On a scaling entry. So like the missus has said to me as well, like I asked her about teaching me Cantonese, and she's like, yeah, sure, I'll teach you Cantonese. Yeah. When it comes to actually teaching me, I swear she just runs out of patience with it. She's like, I can't be asked anymore. I can't be bothered to teach you. I'm like, oh, gee, thanks. She's like, you do realize it's one of the most hardest languages in the world to learn, right? I was like, well, yeah, but you speak it, so teach it to me. But I don't know, she just can't be bothered to teach me, apparently.
Right, I'm gonna see if I can log in to.
Just entered in on my scaling on XAUUSD, which is literally here. So I'm going to get rid of that. Move this over. We'll see how this goes, because this is my nicest entry. I like this entry a lot.
Right, finally I'm in. Okay, so EURUSD, I'm kind of liking USD for a potential trade. Let's see if I can clean up my chart here a little bit.
If Euro can touch this point down here, I think I'll enter in there. Okay. Oh no, it literally tapped in and then wicked. I'd never have had time to enter that in. Okay, let's have a look again. Euro USD. Trade. I'm going to chuck another 2 lots in on Euro. I want to wait for it to come down now. Oh, this is me missed on Euro now. I mean, I'm not going to be miserable about it, but I'd be happy that it's in my direction, but that'd be so frustrating given that it tapped me into the location as well. Alright, how's gold getting on? Okay, gold's starting to wick now, which is quite nice. What's that look for? Okay, well apparently I didn't get in where I wanted to get in. I got in about here instead. There, okay, that's where I got in. Let's see how this goes. I'm risking about $800, I believe, on gold altogether. And I'm risking
I'm going in on Euro USD here.
You're entering on Euro, yeah?
Yeah.
Nice. Yeah, I'm waiting for it to come. I need it to come down like 2 pips. If it can come down like 2 pips, then I'll enter in on Euro.
All right, good stuff. I'm in on that one. I just have to close down my. I'm gonna change the use screen quickly because I need to log into a broker here.
Yeah, no problem. Waiting. This is the thing about trading, guys. You've got to be so patient. Like, I could enter in now and just get in at an okay price. It's not going to be a bad price. It's not going to be a good price. It's just going to be almost like an impatient price, and I don't mind missing it by a pip or so. But I'd like to get as close to this area here as possible if I can. Anyone else want to translate whatever this says? Okay, there we go. Boom. There's 2 lots on EU. So just entered in on another EU trade. So we're currently $70 up on gold, $80 up on gold, and about break even on that EU trade. I'm monitoring it all from my phone at the moment, risking $200 on it. So, like I said, monitoring it from my phone. I will open up my MT terminal in a bit, but I don't want to risk it just yet. So we're finally back into the net, overall positive, $17 up. Okay, that's quite nice. Just poured myself a coffee as well, forgetting that I was ill yesterday. And every time I go to I think about taking a sip of it, I really don't know if I can be bothered to drink it. Like I'm like, ugh, the thought of how heavy it's going to be in my stomach. Right, let's have a bit of a catch up with chat as well. I'm going to have a quick catch up while we wait to see what happens with. Oh, there we go. So $130 up on gold and $10 up on EU. So whilst we wait for that to play out, let's have a bit of a catch up. So MGN coming out. Good morning. Good morning, MGN. How you doing, my man? Or what is good? Seeing the correction there. Good. Awesome stuff. Gold is going up to 50-50. Yeah. There's a 50-50 chance that that'll happen.
Yeah, and then I'm trying to enter a position here on. All right, good stuff. So I'm in gold. I'm in that Euro USD trade. Looking good here on the lower time frames as well.
Awesome. Henry, good evening. How you doing, Henry? I'm about $150 up on gold at the moment. Which is quite nice. It's looking good. Let me see if I can bring my MT up, actually. Let's see if I can load it up without it. Hopefully it won't crash. I don't think it will. I just don't want it to crash my internet, because like MetaTrader at the moment seems to be just playing with my internet on my computer, so hopefully it works for me. So EU yesterday was chef's kiss. It was absolutely beautiful. So I'm hoping we can get the same on gold and EU today. That would be super cool. So $215 up at the moment. Nope, back to 180. Right, there we go. So I'm just going to stop sharing my screen, and then I'm going to bring my MT up for you guys. There we go. So you should be able to see my MetaTrader. Okay, 166. Okay, we're looking pretty good at the moment. I want to break and close preferably kind of soon on this high here. Okay, we've not got it. Okay, that's not the end of the world. Let's see how it goes.
Man, this is why I love trading on personal brokers. I've held this trade now for over 2 months, and what is it up right now? I'm up 3R on this one. I risked 2%. I'm up 6% on this one. Entered it in December, so only this trade. Up 6% on the personal account this year, and with it only possible with doing it on a personal broker. So I would really recommend, like, if you guys are swing trading, like if you're trading prop firms, probably focus on like the lower time frames. You know, intraday trading lower time frames with prop firms, and then like the payouts that you get from the prop firms, you put that into personal broker, right, and do more swing trading, or put it into like an investment portfolio, or something like that. Because I've seen some people, you know, they try to swing trade gold and swing trade commodities and that, and indices, and then they look at the swaps, right? So if you're trading prop firms, make sure that, you know, obviously trading prop firms, because you were here with fibers, check the swaps of the instrument that you're trading, because on some assets the swaps are very high overnight and over weekend. It's just not worth it, you know. So yeah, if you're a swing trader and you're trading prop, be mindful of that. But honestly, I think with prop, the money is in intraday low time frame trading, definitely.
Yeah, no, I definitely agree with that. I know that Euro JPY got pretty good swaps. I think I actually had positive swaps on Euro JPY when I was swing trading that strategy, but I've never swing stratted with gold. Never done it. And truth be told, I have no intention of doing it either.
On my personal account, I love trading trading gold, like swing trading gold, but you know, gotta be different trading strategies require different conditions.
Yeah, absolutely. So looking at taking out of gold very soon. If we can come up a little bit higher. Okay, I've taken out one position, which mitigate a little bit of risk. Can we push a little bit higher on EU? Seem to be struggling a little bit with that volume. I'd like to see a break and close. I'm gonna take out of all positions. You know, it's like $400, I believe. Let me have a look. Yeah, nice. So this is my overall loss. That's why I'm down. So I'm down 2.5% on this account, which is pretty good if you ask me. So if I go into my today's history, no, 360. Okay, I'm just $40 shy of what I did see. Let me just add in. For some reason, I can't see my commissions. Let me just add in. There you go. So $19 commission, 382 banked. It's pretty good going. Pretty happy with that.
Nice.
So $360 for the day. Like on an intraday, especially like depending how you trade. I'm a very discretionary trader. I trade, and this is going to sound so stupid, I know. I trade very much with instinct and what I see in the market. Now, this could rally to like $4,000, and I'm like, yeah, cool, is what it is. I've passed this account based on my discretion strategy. I have a very mechanical entry criteria and a discretionary stop loss, a hard stop loss. So they're two different types, and then a discretionary TP as well. Like I'll usually take TP on where I think price is starting to. Clearly, sometimes I'm very wrong on where price could be going. However, it's nice to see a break above. So what I can do here is now that we got a break and close above, and wait for a pullback and just re-enter. It's literally that simple, because now what we're seeing is instead of this being the entry criteria, this is now entry. Come back. This is now
gold's
entry
breaking out. Nice. Okay, so we get is that the breakout?
Yes. Yeah, this is the breakout.
Let's see. Okay, no, it's not. It's just that low time frame breakout. Okay, I thought it broke out above the.
No. This is only on the 5 minute.
Okay.
I mean, 50-minute, it has broken out of the 50-56 high, which is quite nice. We haven't closed it though, but we have broken it. Hourly.
No, I just want to show you, dude. I want to show you on EU. Look at this. Look at this entry. That's a nice entry right there. Like literally right on that low. Looks like it's breaking out now. If we zoom out, yeah, it looks like potentially going to be breaking out here. Let's see.
Yeah,
I'm going to be moving back to yours here.
Awesome stuff. Yeah, that's super nice. So I'm happy. I've met my quota for the day. You know, as long as I can bank minimum but $200. If I'm going to like my cost per trading day, like if I don't really like to come out of the market unless I'm going to earn around $200. No, I like to. I don't want to be greedy and go, yeah, I want 2 or 3% per trade. Yeah, cool. If I can get that, amazing. But if I can get a minimum of like $200, I'm pretty happy because I know that if I can just get $200 here, there, and everywhere, eventually I'll get out a drawdown and I'll get some nice payouts. However, if I get much less than $200, like if I'm like $100, $80, 150, usually what I'm risking, it's a little too negative risk reward for me, and that'll end up being potentially a hazard in my trading. So I don't like to trade that way. Now that we've seen a break on the 5-minute high, which is beautiful price action, by the way, because what this does, it actually breaks and closes above this. Oh God. Hang on, let me delete that and try again. Now that we've broken and closed above this whole consolidation zone here, which was this area here, it wasn't the highest probability, but it was still nice. We've pulled back, broken and closed above. If we can close with a nice bullish candle here with not so much of a wick on the upside, there's potentially a chance that we can scale back into this position. So, which could then end up in more profit. So we'll just have to see how it goes. I'm glad that I did what I did and took out. Not only that, you know, I'm still recovering. I still feel a bit groggy for the day. So I'm just gonna, you know, try and ease my way back into the markets and take profit when I can without, you know, putting too much stress and strain on my stomach. Trin, morning, gents. Good, Trin. Moner saying, morning, guys. What is good, my man? How you doing? Theola, good morning. William and Jonathan, good morning, everyone. What is good, Theola? How are you doing, my friend? Aura saying XAUUSD, so gold to the upside, 100%, my friend. Gold and EU. In fact, I think we're going to get a really weak dollar. Gold, EU, and GU seems to be heading up at the moment really nicely. Hola, I'm from Madagascar, so I'm happy. That is sick, my man. Glad that you're happy. Hola, ¿cómo estás? To you too, my friend. Awesome to see so many of you in here today, both new faces and familiar ones. Absolutely. If you are new here as well, by the way, guys, make sure that you smash that thumbs up. If you're not new here and you haven't already, make sure you smash the thumbs up and subscribe to the channel. Also, if you are new here, drop us in chat. Let us know like where you're coming from. Let us know how you found us. That'd be super cool. Yes, RJ. Good morning. Really don't understand that fish emoji, but we got Unbiased Trader. Good morning, my man. How are you doing? 15-minute has the same pattern. It does, but I feel like the 15-minute isn't as mature yet. I feel like we've still got a little bit of time to wait, Vic, on the 15-minute when it comes to gold and EU. Yes, it's coming out. It is coming out. So there you go. LJ is confirming that the news is indeed coming out. We got CC, the cat lady. What is good? My fantastic partner. Good morning to you. It's Vinny. Good morning, Will and Jonathan. What are you trading this morning? So as you've seen, I'm in and out, quick as a flash, for $350 on gold and EU longs. Looking to potentially enter back in a little bit later on once price can mature and develop a little bit more. Don't like the close that we had. I like this close that I closed out of the trade on. Don't like the reaction to the 5-minute candle just after. Gold, drop down to the 5-minute. Try and catch price up. Again, didn't like the reaction. Glad I took out. I'm glad that I did. Like I said, I trade very much on instinct. I hate that word because it basically makes me sound like an absolute degenerate gambler. But I basically trade through discretion and my experience in the markets. The only thing that's mechanical about my trading is purely the fact there's my entry criteria. Everything else is very much my gut instinct, and that's why I don't like trading when I'm ill, because my stomach is killing me at the moment. It's going to give me false signals. I can't tell if I need to run to the toilet or take out of the trade.
Yeah.
Also, yeah, guys,
Because
let us know what you're looking for. And
you said earlier, like, oh, this is gonna sound stupid, but I'm trading on, my just gut feeling. But I don't think that's stupid at all. It's just that's what discretionary trading is all about, right?
Yeah, exactly, literally that. Like a lot of people will think gut instinct is just gambling, and they'll be like, "Oh yeah, well you're just guessing where it's going to go." Gut instinct is basically another way of saying discretionary trading, and discretionary trading isn't gambling, isn't guessing. It's basing your analysis and your outcomes based on data and experience that you've had in the market. So if you hear a trader say to you, yeah, I'm a discretionary trader, and then you ask them how long you've been trading for, and they say a couple of months or a couple of years, they're not discretionary. They are guessing. They're gambling. It's straight up, because discretion comes with experience. I've been in and out of the market for 7 years now. I've been full time. Like, this has been my life for the past 4 or 5 years. That is, I can comfortably say that I'm a discretionary trader. However, I'm still a pup in the industry. So I'm still pretty new, still pretty fresh and pretty green. A lot of people would laugh at my experience in the market when I say 7 years with 5 years full time. Like, so many people would say, wow, yeah, you're still a beginner. How can you say you're discretionary? But to me, I feel like I've had enough market experience to predict or understand what I think is going to happen.
Yeah, no, and in the have you read the Trading in the Zone, the book?
No, I haven't. No, I tend not to read trading books. Like, I like the sort of, I like books that are like general life advice, and then basically I just try and relate it to trading, because I find that a lot of life advice helps with trading, whereas I find trading books are too niche and too like honed in.
I think you'd like Trading in the Zone, though.
Really?
Yeah, I think you'd like that, because I think it's probably it's really a lot of the things that you've probably already read about, but applied to trading. So it's very broad. It's very I mean, I read Trading in the Zone, and it has really helped me with discipline and focus, and in overall life, everyday life. It's a really good book, and it could have been written for a different type of industry as well. It's changing a couple of words
Yeah.
and the perspective. It's actually really good book that I think it's just every trader should really read it.
Okay, nice. Mark Douglas, that is, isn't it?
Yeah, Mark Douglas, Trading in the
Yeah.
Zone. He's also written The Disciplined Trader, but I think Trading in the Zone is like, for me at least, mandatory reading. If I remember when I had a lot of I had like I was mentoring people and coaching new traders. I remember they were asking me about trading like trading psychology tips, and I just asked them, "Have you read Trading in the Zone?" If they said no, then go read the book and then come back to me. And then if they read the book, I say, okay, read this chapter again, and then get back to me if you still have the same issues. No one ever get back to me. They read the book, they understand the problem, and they fix the problem. And if I said, okay, read this chapter again, they read the chapter again, they studied the book, and that solved most of the psychological issues.
Yeah, that's really interesting. Maybe I'll give it a read. Maybe I'll see if I can get it like. I don't have like a Kindle or anything. I don't have an iPad. Maybe I'll see if I can get it like downloaded on my phone, or I'll just see if I can find it in English in Hong Kong. I'm sure they do. Like, I'm sure that I can go out
I
to
got
some.
it. I got it right here. Actually, I have it. It's always on my desk, and
All right,
anytime
check it
when I
here quick.
have when I have so when I have the time, I go through the book. I've marked out a couple of things. For example, on page 121, you have something really good. He says there are five points that you should go through. Right here, you can see those 5 points right there. It's um, five fundamental truth of a probabilistic mindset. And let me read this quickly. It's just five quick ones. So number one is anything can happen. Number two is you don't need to know what is going to happen next in order to make money. Number three is there is a random distribution between wins and losses for any given set of variables that defines an edge. And number four is an edge is nothing more than an indication of a higher probability of one thing happening over another. And number five, every moment in the market is unique. And these are rules to live by as a trader. If you truly understand what these means, there is nothing to fear in the market. If you have a system, you follow the system. There is nothing to feel FOMO for. There's no fear in the markets at all. And it helps you get rid of the gambler's mindset. In a casino, the odds are already stacked against you. The probabilities are already decided by the casino, but in the markets, it's all random. Every new occurrence is completely unique and has a 50% outcome regardless of the previous trade, which is just a very interesting way of looking at things, because every individual trade, 50-50. Where did he go?
Oh, he's back.
There we
He's
go.
back.
Right, back. Hello. That was a quick in and out there. Quick break.
Quick timeout. Yeah, that's really interesting. So a lot of you guys are also recommending this book. Mohammed also saying would definitely recommend reading this book to struggling traders. That's really interesting because, like I said, I started The Psychology of Money. I was loving that book, and then I moved to Hong Kong. I left it back in the UK. So I'm currently looking for a book to read at the moment.
Trading in the zone, you're gonna love it. I mean, you're gonna like it. You know what I mean? You like those types of motivational books, probably self-help type of books, things that you can use in everyday life. But trading in the zone really takes a lot of the things that we know from from all of these original self-help gurus like the Stoics, etc., and just takes it into a framework that's very easy to understand from a trader's mindset. And then if you have that trader's mindset already, you can read that book and really understand how you can apply some of the logic to your everyday life. I mean, Trading in the Zone was the book that convinced me to start meditating, even though it doesn't mention meditating, I believe, in the book, but it's definitely what caused me to build positive routines. I would say there's like a deadly combo within like all of these different trading books. And if you haven't read these books, I would say do so right away. And for everyone that is asking for trading books, I would say there's three books that you should read. Everyone talks about The Best Loser Wins by Tom Hogarth. It's basically
I've heard a lot of hype over that book, like a lot of hype.
So Tom Hogarth's Best Loser Wins, a great book, fantastic book, but it's basically a rewritten version of Trading in the Zone.
Fair.
So
I find a lot of books are rewritten, though. I find a lot of books are rewritten just in the way of the author's personality type instead. And so I actually let me know what you think about this, Jonathan, as well, because I think it was Atomic Habits by James Clear. I finished reading that book, and I loved that book, man. It was a great book. And then I read Diary of a CEO by Stephen Bartlett. Crap book. I hated it. Couldn't get into it at all. And I love Stephen Bartlett. I think he's a fantastic guy. He's very motivational. I love what he says. I even watch him when he's on Dragon's Den. I like how he speaks, and I like the way he portrays himself. But his bookmanship, should we call it, rubbish. I didn't like it, couldn't get along with it. Now, a lot of people were actually slagging off and slating, had nothing good to say about James Clear and his Atomic Habits, saying that it's rewritten, saying that it's a pile of garbage. However, on the argument side of it, on the devil's advocate side, they were basically contrary and saying that a lot of authors will rewrite already, like evidence that have already come out, stuff that's already there. However, the way that they put it may work for you, Jonathan, whereas I may not like it. So I've heard like a lot of people choose similar books based on different authors, though. Like a lot of people will actually choose and stick loyal to one author, especially like fictional books. They'll stick to one author because they like the way they write. What's your thoughts on that?
So yeah, just give me a quick just a second here. You're sending a message, right? Okay, good. Yeah, I 100% completely agree here. So what interesting enough, you mentioned Atomic Habits. So what I was going to say is 3 books that I really love, and I would say that everyone is asking for. Okay, so what is the best trading books? What trading books should I read? So 3 books: Trading in the Zone, Atomic Habits, and Technical Analysis of the Financial Markets, if you're a technical analyst. So 1, Trading in the Zone by Mark Douglas. Number 2, Atomic Habits by James Clear. Number 3, Technical Analysis of Financial Markets by Murphy, I believe. Great books. And like you said, everything's pretty much, I mean, all the self-help books, it's just stoicism, isn't it? It's just Marcus Aurelius and Socrates and all of those guys back in the the old Greek original Stoics. That's just basically what it is. So if you're in that type of if you like the whole self-help hype that is going on right now, I would just recommend that you go back to the source. So for example, when it comes to trading psychology, Trading in the Zone, that's the Bible. That's the Bible of trading psychology. And then you have a lot of different books based on trading psychology, which is basically just Trading in the Zone, and then they have rewritten that with maybe adding a few things, right? But if you have Trading in the Zone, you know how to think in a probabilistic mindset way that you need as a trader, right? And then to create the habits and the routines around your life as a trader, that's going to be Atomic Habits. And then to actually learn how to trade technically, that is the book Technical Analysis of the Financial Markets. You don't need anything else, right? But then if you want to add something, where it's like, okay, I want more self-help, more personal development type of books, well, you go back to the originals, right? You go back to the Stoics. And there's one really good book that I would recommend, and that is called The Practicing Stoic. It's basically a handbook through life where the author has taken the best knowledge from the Stoics and put it into a handbook based on different things that you might be going through or experiencing in life. That's the 4 books that I read consistently throughout the year. I've read Trading in the Zone so many times now that I feel like maybe I don't have to reread it, but it's some of the chapters I do. Yeah, I mean, some of the chapters I do read. Atomic Habits is also one book where I've already integrated the habit loops and the whole idea with creating new habits and all of that. But when it comes to technical analysis, that's the part that is continuously in development. But yeah, wonderful books. I would highly recommend.
Yeah, Atomic Habit changed my life when it comes to trading. Like, it changed the way I saw trading because I was able to actually bring it and think, right, how can I relate this to trading, and how can I make trading easier for me and my personality and the way that I want to see and get the best outcome of my personal life. This is why I recommend it to everyone. And because I'm a motivational speaker as well, and I'm a public speaker, predominantly I speak about trading, but I have spoken at events where they've not been trading related. And that's why I try and relate everything. And that's why I call myself more of an entrepreneur, because I have got other businesses as well as trading, but it's just my heart and soul belongs to trading. That's why I like these non-trading books, because I can speak to a trader and I can say, look, read this book because here, that, this, that, and the other will help with this in your trading and with that in your trading and that in your life, which will subconsciously, as a byproduct, improve your trading. And then it goes the same with other people in, like, for example, e-commerce, or let's say someone's got a roofing company and they're like, maybe they're not scaling the roofing company enough, or maybe they're not trying to get the best outcome in their roofing company. I'm like, well, okay, have you looked at this book? Because it could be a mindset issue. Are you stuck in old ways? Have you learned from your parents? Like, was your dad a roofer or your mom a roofer? Maybe you've learned from them and they've taught you old-fashioned ways. Read this book because it gives you a more modern outlook on it. And that's why I love these non-trading books. I think I was talking to Richard Wells, and because this is where I heard from Trading in the Zone, and I'm pretty sure he actually said to me that trading in the zone will actually help. Like, you can take parts of it out and actually use it in your everyday life. And a
Yeah,
book like
100%.
that is it's a book with its weight plus more in gold. It will always be worth millions, just due to the fact that a book that you're able to take more than it gives is a really valuable book.
Yeah, it's really a wonderful book because it talks about the nature of beliefs. So it talks about your belief system, and
Mm.
that can be applied on in everyday life. I mean, when you come to the market and you're looking at your USD, there is nothing inherently dangerous or there's nothing negative or positive with the chart. It's just price, and especially when you're looking at a price chart, it's just you're seeing live price action, but you're also seeing past price action. It means absolutely nothing. If you're not a trader and you're looking at that chart, it means absolutely nothing. And if you're not in a trade, it means absolutely nothing. Then you enter a trade and all of a sudden this starts to mean things, right? You start to have different type of beliefs looking at price action based on your, and then you're getting different emotional reactions based on that belief system. It's the same thing as if you're talking to someone. Imagine if you meet someone on the street of Hong Kong and they're going to insult you and you have no idea what they're saying. You're just nodding, ha ha, laughing, nodding and smiling and walking away. Like, you have no idea what they're saying, right? You have no idea what they're saying. But then if you walk past someone in English and they insult you, your belief system built up in a way where you're going to be like, oh, what the hell, dude? And but this book teaches you to, like, challenge that. It teaches you to and then this is also where stoicism comes in, right? Because stoicism says that that's just, and someone insulting you, that is something external, and you choose how to react to that. It's up to you if you're going to be reacting to that with anger or happiness or just being completely indifferent. That's an external thing. And in stoicism, it teaches you to look within yourself and look for, the internal emotions that really matters, what happens inside you, and how can you decide to react to the externals in ways that are positive for you. So if you're having a conversation with someone and you're starting to become irritated, stoicism tells you that relax, this means nothing, it's just an external effect on your psychology. And you apply that to trading in the zone and to your trading, you will then learn that you're in a long on Euro USD, price moves against you, that's something external. It has nothing to do with you or your eternal emotional life. And all you can do is just be completely indifferent to it, because you know that you're following your system, you have the stops in place, and you know that by the laws of probability, you know that you have no idea what's going to happen, and it's basically just up to random and some luck for that trade to move to TP or to stop loss, and there's just nothing you can do about it. And if you're feeling emotions based on that, then that's something external affecting you emotional self. So yeah, trading in the zone has all of these components that you can take from the book, take outside of trading, and apply to your everyday life. I mean, I don't know about you guys, but when I'm out on a walk, I sometimes look at traffic and I'm like thinking about, what's the probability of that car is crashing, or this happening, or this
No,
happening? Like, what's
that's called intrusive thoughts, Jonathan.
we have a comment here saying meditations by Marcus Aurelius. So I actually wouldn't recommend reading meditations by Marcus Aurelius. I would rather have people read the practicing Stoics, because I read meditations, and it's a very boring book. It's a very difficult book to get a grasp on if you're reading the original. I would then maybe look towards Ryan Holiday, right? Ryan Holiday, I believe, has rewritten the meditations, and he's written books based on meditations. It's much easier to grasp, much easier to understand, because the original is just basically what it is Marcus Aurelius is taking notes. And sometimes just random notes and putting it into a book. It wasn't even planned to be a book, right? It's just notes that he's written throughout his life. And it's a difficult read. I would highly recommend maybe just going with the Practice in Stoic, or going directly to Ryan Holiday, which is a big personality in the Stoic space.
Yeah, when it comes to like ancient autobiographies, and I don't mean Jeremy Clarkson's brand new autobiography that's just come out. I'm talking like Marcus Aurelius, like Stoic, proper original Stoicism.
Wait, did you say Clarkson's biography?
Clarkson does actually have a biography. I think it was written when he was younger, though. It was like his motoring biography. I don't think he's got a new one. I'm pretty sure he does anyway. I maybe I could be wrong. But it's not a modern take. So they are hard reads, because like you said, they're not for the light-hearted reader. Like, if you're a very impatient reader, like I can be, I was never a bookworm. I was never the sort of person that wants to put their head in a book. I'd have to be really passionate about it. Then an old-fashioned, ancient autobiography isn't going to be sort of storytelling. It's not going to be in the modern sort of written sort of language that you'd read now. It'll be very boring. It'll be very slow. It'll be almost very ugly to read, which could take some probably a lot more mental energy than you want it to. So just bear that in mind when buying books, guys. As well, and not only that, as well, I can be quite an impatient person. So when I buy a book, I like to buy a book like that thick, not that thick. So bear in mind, like, don't buy a book because it looks cool. Like, I've done it before. When I first got into reading, when I was like 20, I'm joking. When I first got into reading properly, I bought a big book, and I thought, yeah, I want to buy a big book. I'm gonna get my head in. I'm gonna love it. I bought a really big, thick book. I can't even remember what the book was called. It was crap. I read like 10 pages and put it down, never picked it up again. And I must have been like 14, 15. And I bought it because it looked cool. I bought it. It had a cool front page, and it was really thick, and I thought I'd look awesome because I was reading a thick, heavy book. It wasn't. I hated it. It was crap. I just thought I was cool for buying a big book. Try and buy a book that you can finish pretty quickly. Like you can finish nice and chip sharp. Digest it. Read it again if you want, and then just move on to another book. Ease yourself in a little bit like trading. When it comes to trading, you don't just jump straight into the markets and put your head in the markets for like hours and hours and hours and end. You got to ease your way in, because markets are boring. Markets are like reading a book. You're going to sit there for hours on end, and hours and hours and hours, and watch videos and watch live streams with people like us who are super fun and entertaining to listen to.
Definitely.
And then you're going to fall asleep. You're not going to absorb it and digest it. So instead, take snippy sections. Watch an hour and a half, then go away for a break, then come back, do an hour of back testing, walk away, come back. Take it small steps at a time.
Yeah, I'm not really. I haven't really been much of a reader throughout my life, and I wouldn't say I'm a big reader, but I do read. Like, it's a good routine every night when I go to bed. I read a book. Nice to calm down, and good routine to have. And usually for the last 2 years or so, I've for the last 2 years or so, I've just been reading up on the CMT curriculum, reading up on technical analysis. I did pass the CMT too. by the way. So
Oh, dude, yeah, I saw on your LinkedIn, mate. Massive congratulations on that. That's awesome.
yeah, thank you, thank you. So I've just
Yeah, that's pretty
registered
cool,
for
man.
the is registered for CMT3 as well. So I'm going to start studying that, and I have um, that test coming up this summer. So that's going to be really interesting, really interesting. Hopefully, I get the all the knowledge I need. Speaking of books,
Fire.
though, I mean, you said like start with something simple. I remember one of the first books that I read was The Old Man and the Sea by Hemingway, and that's just a wonderful book. So I think that's a really cool book if you're starting out reading and want a small book to just go through fast. But if you're a trader, I mean, trading in the zone. If you like trading, then you're gonna get
Yeah.
hooked with trading in the zone. Definitely.
Try and get hooked on a book that's mindset based as well. Like, as long as you're passionate about trading and you understand that mindset should be a thing, try and get hooked on the right thing, because like a lot of people will go, I want a trading book, and then hope that there's some magician in the book that's going to give you the wonderful trading strategy. Just be very careful, guys, that do not get hooked on those sorts of books. There is no such thing as the holy bible of trading. There is, however, the Holy Bible of mindset. And the reason that is that there's loads of traders out there that have similar mindset, that have different mindset, and a lot of them have put it into some form of book. So therefore, you can read on their experience, maybe their studies, maybe they've done podcasts where they've interviewed other traders who are like-minded and very different-minded, so they can put that sort of experience in a book as well. So mindset is something that very much you can teach. Or you can teach to advise. Like you can very much sort of help someone along their journey with their mindset. But when it comes to strategy, if someone's going to write in a book how to trade, strategy, don't read that book, man. Don't read that book. It's probably not going to be the best book in the world, and it's probably going to actually confuse you a little bit more when it comes to the markets. Whereas if you're going to read psychology books in the market, you'll find that your trading and your
All right, there we go.
Awesome. I've got a couple of comments as well up here.
Did you disconnect, or was it me?
Oh, did I disconnect? Did I?
I think so. I think so. Well, let me know in the comments if that was me or if that was. Well,
That's really interesting. Good segue though. So Decoder saying, "What a nice conversation." If you like the conversation, guys, and if you like what we are saying here, please absolutely smash that thumbs up. Absolutely awesome to see 150 of you watching right now live. So please smash that thumbs up as well. And if you are new here, make sure that you subscribe to the channel and please share as we edge closer and closer to our 10-year anniversary event, which is coming up very soon. And if you do want to check it out, then link is in the description below. So make sure you get into that because it is going to be absolutely awesome. We cannot wait to see you all there. Also, edging closer to 100,000 subscribers. How bloody awesome is that? We're closer to 100,000 subscribers. Now, not only does it show that 100,000 of you love what we do here, it also gives us a cool little play button, apparently. So that's going to be pretty cool. So apparently even YouTube think that's 100 subscribers is a pretty big monumental event. So guys, we would love the support, and we're super grateful because we wouldn't be able to be here if it wasn't for you absolute legends joining us and watching us live.
yeah, definitely. All right, so we got a breakout on Euro USD. It's breaking. If this is a pennant, then we have a confirmed breakout right now above the descending upper trend line. So I'm liking what I'm seeing on that one.
Okay, yeah, apparently it was me that disconnected.
We got the Japanese stock index, the Nikkei. Is it Nikkei? Nike. Do we say Nike or Nikkei?
I say the Nikkei, but I mean, I don't know. I don't know. Dude, I've learned that it could very well not be the Nikkei. It could very well be something completely different. I've learned that now, apparently. Trying to learn an Asian language, you could say something you think it's right, it's really not. So
Yeah.
I call it the Nikkei, but it may be the Nike. As far as I'm aware, Nike is a sports brand.
Yeah, exactly. Nikkei. I have to Google this. I have to Google this. How do you pronounce that?
Do we have any Japanese fellow traders in chat? If so, let us know. I don't know how you're going to let us know how to pronounce it, but maybe phonetically spell it out.
According to Google, it says it's pronounced Nikkei with two syllables and the stress on the second syllable. The first part sounds like ni, and the second part sounds like k. Nikkei. Nikkei.
Okay, Nikkei. Nice.
Nice.
It's like a bit of both. It's like a concoction of Nikkei and Nike. Nikkei.
Yeah, Nikkei. Nikkei. Now let's just talk about Nikkei. Okay, Nikkei. All right. I actually Googled it, and it says like a lot of videos on this. Is how to pronounce Nikkei.
Wow, there's actually like videos on that? Fair.
Yeah, that's like a big thing. All right, so not alone. Good. Nikkei.
Coming soon to the Fivers, a video on how to pronounce Nikkei.
I feel so sophisticated now. I'm like, hello, we're gonna look at Nikkei breaking out. Nikkei about 5. Actually, it's insane price action. Let's actually move over to. I'm gonna switch to my my trading view here, and I'm gonna look at some insane price action on Nikkei.
This is cool. Never suffer saying it. It's from the Greek name Nik, meaning win. Really?
Nah, it's also, not.
I'm not saying you're wrong, but I can't believe that because ancient Japan. Yeah, no, I don't think it is.
Why would the Japanese care about the Greek? Like they have like their own,
They have their own philosophy, In fact, the Japanese have a really rich philosophy as well.
No, it is not derived from the Greek word of victory. Nikkei is a Japanese word with an entirely different origin. It refers to the Japanese immigrants and their descendants who created communities outside Japan. I don't believe that either, but that makes more sense.
Really? No, that sounds about right. Because I'm not going to go into the history of Japan, but I did look into it a little bit once.
Oh, no. The Nikkei index is... Okay, so the word is an abbreviation of a newspaper, which I can't pronounce. A Japan economics newspaper, which is Nihon Keisai Shimbun, which
that sounded Japanese. I'll give you credit for that. That's
really.
It didn't sound half bad.
Well, maybe I should go in along here. Maybe it's my lucky day here. Actually, on the 50-minute, I'm just waiting for a pullback here on the Nikkei to potentially go long here. This is a wonderful setup right here. Potentially down to the 50% fib right here. Perfect retest of the 50% fib. And then probably going to go into all-time highs. This is a really nice... Maya trader said, let a Japanese confirm this origin theory. We got Google.
Please, if we have any Japanese traders out there, please confirm this.
That would be real humans in the age of AI.
Yeah, who needs Japanese people when we have Japanese AI?
Well, we still need Japanese people. It's just we need people in general, I think, not just Japanese people.
Dude, I watched a guy talking about like they were basically interrogating AI and its whole... I don't even know what it was. It was like one of, when you have these late night watches. I was like watching this video and it was talking about like the future of AI, and this guy was interrogating like Alexa and ChatGPT and the future of AI and dude, it was scary, man. It was. Oh, it
Yeah.
has to be absolute bull crap. Like it has to be bull. It can't be true. I'm not
So
going to go discussing and diving into it, but yeah, it's we need we need people. We can't actually be like Will Smith and iRobot, and this it can't
but
actually
I
happen.
don't think like the direction that we're going with technology. I mean the humans that we have today. We're not. I mean, so Elon Musk is working on a human, brain internet
Mm.
interface. We're basically going to have a direct connection with. Basically, going to be like a.
Like a SIM card for your mind.
It was going to be like a faster bandwidth between your brain and technology. So it's going to be like a brain to technology interface. And you're basically going to be thinking about the things you want to do. So instead of typing with your thumbs, you're going to be thinking what you want to write, and then it's automatically going to write it into into the phone or the PC or whatever. And obviously that's already we already have we already seen that working. People are playing games with their thoughts, and people are moving wheelchairs with just thinking, and moving things with just their thoughts. So we're already there, right? And then with
Mm.
AI, I mean, when we get super intelligence, there's no need for human intelligence, right? We're gonna probably, um,
Which be big
we're gonna become
globule.
some type of mix between. We're going to be integrated into the world of AI. Like this, for me, there's no question about it. I mean, the world in 200-300 years from now, it's going to be so vastly different from what we have today. I mean, think about where technology was 200 years ago, and
Yeah,
then think about where it is today, dude.
dude.
Like
I
the
know, yeah,
future.
literally. Like you imagine 20 years ago now. So like I remember growing up and like I think BlackBerry was just about a thing. So like, I remember like BlackBerry coming in, and like you had BlackBerry Messenger, and you had the games and all. Dude, that was like next level tech. Like, I remember
Yeah,
my dad having a BlackBerry, and like I thought he was the coolest guy on earth. He was like, "Dude, he's got like a BlackBerry. Have you seen these things? Like, how awesome are they?" Now look at us. We're trading from our laptops all over the world, and just trading from computers the size of literally our hand. It's
yeah,
bonkers. Who would and all in the space of 20 years?
yeah. It's going to be crazy. I mean, the future of AI is just insane. I don't think
Yeah.
I've been I'm not gonna say I've been studying AI or anything like that, but I remember it really it's something that I've been fascinated. The idea of artificial intelligence, I've been fascinated about that my whole life, and I think ever since I started watching, like I watched the Terminator movies the first time, I'm just that looks awesome. Skynet and all of that, terrible, scary, but also really cool idea. So I remember reading, following we have a Swedish scientist here called Max Tegmark, which is big in AI, and he wrote a book called Life 3.0, basically arguing that we are at Life 2.0 right now with evolution or whatever, and Life 3.0 is us going from basically biological humans to becoming, you know, biological machines, basically. And he wrote about that a long time ago, and then there was a book released called Our Final Invention. And this is way before ChatGPT and OpenAI. And he released a book called Our Final Invention, which basically was a very research heavy, science driven book talking about how if we develop AI, it's going to be the end of humanity. And then a few years later comes OpenAI and ChatGPT. And I remember they sent out a survey to scientists working on AI at the beginning of all of this, and 50% of the 50% of the scientists surveyed says that there was like a 25% chance or higher that this will be the end of humanity. And I'm like, okay, well, that's interesting. So we
Yeah,
live in
fair.
we live in interesting times, definitely.
Yeah, no. To be fair, AI has always interested me. It scared me a little bit because you guys know that I'm a typical farm boy. I grew up playing army soldiers with sticks as guns and running about building, dens in the woods with my brother. So I was very much wouldn't touch technology, didn't know much about, I still don't know much about computers. When my computer goes down now, I got to speak to some of my really awesomely intelligent, like, nerd friends about computers. Otherwise, I don't have a clue. So it's always scared me a little bit, AI. Not only that, but do you know the one thing that I've loved, and that it's such a shame we haven't. Like, we're developing AI, and it's super cool. The one thing that I really want to happen was I grew up watching Star Wars, and I love Star Wars, man.
Yeah, me
Like,
too, man.
it was a dream of mine to have a Land Cruiser hovering. Like, so I have a convertible M4, as you guys know. I put the roof down on the M4 as I was driving through the Cotswolds in England, and it was such a nice evening. Like, the sun was going down, it looked super red, and like you could see the fields, and they were like the fields looked red. My brother put on like Star Wars music, and I swear to God, we felt like Luke Skywalker as he's going through. As he's going through the desert on a Land Cruiser, bro. Like, I proper geeked out. Like, that's the sort of, like, that's my sort of way of saying I want technology at this sort of advancement. Not as far as robots. I'm not quite ready to see C3PO walking around, but the Land Cruisers and like the spaceships, yeah, give me that any day. But I don't think I'm mentally ready to see AI develop into like iRobot just yet.
Yeah, but I think it's like that for a lot of people. I don't think we're ready for what's coming. I really don't think so, because I mean, it's just even the chatbots. Like, when ChatGPT came along the first time, it changed society. I mean, we live in a different society now. Like, we can talk about some of the bigger changes that has happened in the world. We can definitely talk about pre ChatGPT, right? Because before ChatGPT, how work was done was very different, right? Now, if you need a spreadsheet done, you ask ChatGPT or Claude to make you a spreadsheet, and what took several hours of work, years ago, is now takes 5 minutes. So it's like we live in a different world now, and now with Claude Code, if you want a software, you can create a software. You don't have to go out and, if you want a trading journal, for example, you create a trading journal. You tell Claude Code, I need this and that, and then it creates a trading journal. Yes, you need to be a little bit, comfortable with going through the technologies and understanding and asking questions and setting all of this up, but you no longer need to go out and buy trading software, because you can already create it. Right now, imagine in 10 years, if I can I've created a lot of applications. I created a trading journal. I created a algorithmic statistical, like, trading engine that gives me signals and all of that. And I basically, I can't code. I have no idea how to code. I don't know what Python is. Basically, I have no idea. But I ask ChatGPT and Claude, and it creates it for me. Now, imagine in 10 years, you probably can use, one prompt, and then you have it, right? So the world that we're going in is so vastly different from what I think people imagine what AI will do. It's a fascinating time to be alive, really, and it's a fascinating time to be a trader as well, because as traders, we talk a lot about probabilities, statistics, numbers, edges, all of that, right? And it goes hand in hand with technology and mathematics, right? So as traders, we can really enhance our trading by using AI. Like, for example, I would assume that in a few years, we're just going to be copy pasting a price chart into an AI, and then it's going to do all the technical analysis for us, right? There's no need to do any more technical analysis, because we're going to have applications doing the technical analysis for us. which kind of sucks for me because that's that's my job.
I know what you're specializing in.
But it's interesting. It's really really interesting. I remember like a year ago, I was coding indicators in ChatGPT, and it got a lot of things wrong. And now I'm not just coding indicators with Claude Code. I'm creating like an algorithmic trading engine that 24/7 goes through millions and millions of rows of 1 minute tick level data from in the forex market and the crypto market, and it goes through 24/7 and it just scans everything and looks for patterns, repeatable patterns, and then sends me reports on that. And that development happened in the year. So from ChatGPT not really being able to create basic indicators in TradingView without having a lot of errors, to now creating an application that institutions paid millions for 10 years ago. It just blows my mind, really.
Yeah, dude, it's mind-boggling. Also, just want to let you guys know I have entered in again on EU. Why
Nice.
my MT5 had a 5-lot position there, I have no idea. I went to buy and then I bought with a 5-lot. So I lost $20 on it. No, sorry, I lost $40 on it, as you can see here. And then I paid $20 commission. So I lost $60 just for absolutely fat fingering the market. So I'm fuming about that. But I moved it back to a 2-lot, rebought, and now I'm $24 up. So now I've got to make a minimum of $60 on this, otherwise it's going to be a losing trade. That's really annoying, but I mean, I'm still up on the... I'm risking a hard stop loss of $300. So if this hits a full loss, then it'll be break even for the day, which is a nice feeling. It's a nice feeling knowing that today, this trade right now is technically risk-free on the account's balance. As I'm risking today's already closed and secured realized profits as liquidity was collateral for this next trade coming up, which is pretty nice. So we got a nice break and close above here. I didn't like this one, to be fair, but we got a nicer close here. It dribbled on back down into a pullback, had this 2-wick rejection, which was beautiful, and now we're starting to print a little bit higher. So TP is very discretionary right now. I'll probably try and find a better place for it. But we're just, in fact, let me move it down a little bit because we're at these highs just here, which is about $248, $250. Obviously, that's without taking commission into consideration, which is going to be about 8 lots, I believe. Sitting at about $45 profit now, $50 profit. So if we can see this move up, then happy days. It's going to be pretty nice. If not, if we break and close under this area here, this line here, which I'm actually going to go ahead now and put an alert. So now I got an alert here. If it breaks and closes under here, then I'll just take a stop loss because that's my discretionary stop loss. If it absolutely tanks now, then I've got an emergency hard stop loss just down here as well. So we're just going to watch now, see how it goes. And yeah, we'll probably come back in a little bit later and see how it got on.
All right, I got a limit buy order on the Nikkei. So waiting for that to be hit any moment now. My entry order sits at 57,966.35, 34. It's where the 20 EMA and the 15-minute is. So we'll see what we can make of that. Currently
Go on.
Currently about half an hour up on the EU trade. Nikkei is coming down to hit that support level. I'm getting ready to enter a market as well, depending on how the reaction is here on this support area. go down to the 1 minute to kind of judge the reaction. Obviously, the perfect level to be hit would be around that level right here, that white horizontal. So depending on what price does here, you can see that I'm front running that level just a little bit right here. We'll see in 1 minute if we can have a rejection or a bounce around this level, then I might just enter at market. The personal broker that I'm trading on here is just my, I'm trading this on TradingView, and then I got it connected to MetaTrader, but I've had to withdraw some money out of this. So I don't even think I have the margin available to enter this, but I do have the orders set in MetaTrader as well. Because, when I enter orders here, limit order, it gets automatically entered in MetaTrader as well. If this one doesn't fill, it's still going to be filling in MetaTrader. So we'll see what happens here.
Yeah, nice. Also, we've got a fantastic gentleman ready to come on. Are you good? Awesome. So we have got Pedro. How are you doing, Pedro? What's good, my man?
Morning, everyone. Morning, Jonathan.
What's up, Pedro? How's it going? Good, man.
Congrats, first of all, congrats on passing the second exam. So
thank you.
I saw your tweet. Congrats, man. What's next? What is going to be the next phase? Is it done, or is it going to be a third exam, or what's?
No, the next phase is the third exam. So the second exam was 4 hours and 170 questions. Oof. And the third exam is 4 hours. It's only 50 questions, but I have to. So level 1 and 2 was multiple choice questions, okay. Which is, it's a big number. 170 questions. That's a lot of questions. But when you have multiple choice, it becomes much easier, right, than if you have to write it yourself. But now it's CMT3, 50 questions, and you have to write every single answer. There's no multiple choice, and so it's like it's going to give you a scenario. Maybe a question like, from a portfolio management, like how would you, maybe how would you have managed risk during the COVID crash as a portfolio manager? And then you have to actually write that out and say things like, oh, maybe I would have had 60% in stocks, 30% in gold, and then 10% in cash. And like, how would you hedge the positions and all of that? Because
nice.
CMT3 is a lot about understanding risk and understanding correlations between different market and portfolio management. So that's interesting.
That's going to be.
Dude, that sounds really interesting. I'd love to interrogate you on those sort of questions. I'd love to ask you those sort of questions just to see how you'd answer them out of curiosity. That sounds really interesting, man.
Yeah, well, I just started studying, so maybe you can wait a month or two.
Maybe also Googling your questions, doing some some, what do you call them, like prep exams, like mock exams. We'll do some like mock exams on stream, maybe.
Yeah, definitely. That would be interesting for sure. And then when I'm done with the CMT3, when I've done the test, then I have to apply for professional membership within the association. And to gain professional membership, you have to be recommended by 3 CMT charter holders in good standing. So you need to be recommended by them, and then you need to pass a personal ethics and evaluation to make sure that, if for example, if I would have launched a crypto scam project, then I wouldn't be able to come into the association. If I maybe they're gonna see past live streams on here and be like, that's questionable behavior, and then if I get accepted as a professional member in the CMT association, I believe I will be the first or the second person in Sweden to have the title, which is pretty cool.
Mate, that's epic. Dude, that is a real achievement, man. That's super cool.
Yeah.
Anyway, guys, I got to dart out really quick. Something's coming up. Yep. So, guys, I'm gonna have to love you and leave you. Make sure, guys, there's 146 of you watching live right now, which is absolutely epic. Let me know. I'm seeing a genuine trader just went long Euro USD with Will Davis. Let's see. It aligns with my setup too. That's absolutely awesome. Glad it aligns with your setup. Please do not copy my trades, guys. But if you're seeing validity in the trade, then please do not hesitate to take the trade. So make sure you are sticking to your plan, sticking to your risk management. Do not do anything stupid with the account. Please be careful. But guys, I got a dart, so love you and leave you. See you all in about 2 hours time.
Awesome. We'll take care.
Peace.
Peace, mate.
Yes, I'm looking at the Nikkei here, and what I'm seeing is a potential front running of this level. So a breakup. So what we see here, first of all, is this is obviously some type of price reaction happened here, and then what we saw was prices went straight through that level, initial resistance being hit here, and then straight down. Now this to me looked like it was going to go down here, but this might be front running that level, and if we can get above this level again, it means that we have now reclaimed that level, and I think we're going to go into new all-time highs if that happens. So I will be adjusting my my trade levels here slightly if that is the case, and I will be instead looking to enter this one at market, because we're breaking out right now, so this looks like a good opportunity to actually get into this trade. So I'm going to be closing the limit orders that I have right here, and I will be looking to potentially enter a market order here instead. Where is the, okay, I'm going to be removing the limit order. My stop loss for this one needs to be much higher. Here, if we break out, then I will be entering a trade at market. I will not have a TP on this one. I will be simply trailing my stop up with this right here. Given the political, so looking at the fundamentals fueling this this trade right here, I'm not going to go into the details because I have not done the proper analysis necessary for me to talk about this with authority. But what I've seen is the election that happened in Japan over the weekend, major landslide victory for the new prime minister, I believe.
Mm-hmm.
And that caused this huge move to the upside. And people are talking about a potential strong bullish continuation of the Japanese stock market following this election because of the policies that is, okay, I'm going in right here. So we're entering trade right now. Okay, good. Let's go. So I'm in here, market enter on that breakout right here. I do think that the move down here was front running the level that we saw. So the Nikkei strong bullish momentum right here. We got the fundamentals backing this as well. I do think that what we're seeing right here is a typical front running of the obvious level. A lot of times we're looking at, from a break and retest perspective, we're looking for a previous all-time high level or a previous resistance zone to come down and then nicely retest that level and then continue higher. But when you have such a explosive move to the upside, you can look at here on the daily, we had a massive gap to the upside over the weekend because of the elections. And then looking at today's candle, we filled the gap over the weekend gap. We filled that one already. Looking at the momentum coming in today, very, very strong. The local trend is very, very strong. And the fact that we have now reclaimed this low time frame level, if we zoom out to the 1 minute, you will see what I mean here. Consolidation prior to that all-time high move. We didn't really reach all-time highs, but yeah, pretty much the same thing, right? We strong momentum, almost all-time highs, came down, front run that level, and we now reclaim that that level right here. To be on the safe side here, I'm thinking probably move stops to entry when we hit that level, but eventually, what I'm looking for is for this move to continue. I'm looking for a move up to new all-time highs, hit that 59K region. So this was the original trade. The trade that I'm in currently looks like this. So it's a pretty good risk to reward. We're looking at a 4.6 risk reward on this one. And I'm hoping that we'll see some continuation here to the upside, the momentum. and the bulls definitely favor this this move right here. Just a quick update on USD as well. We are now back inside the back above the descending trend line, but I still like what I'm seeing here. So we'll see. Yeah, so good risk to reward trades here today.
Are you back trading a bit more into the war time frame? More of, or because I think you're positioned more into more swing, but now we're looking at 1 minute again.
What I figured out is prop firms is just not for swing traders. The swaps and the it's just not there. I mean, if I'm gonna be trading on my personal account, I bought Nikkei on the breakout. And if I was gonna do that on the prop firm, I mean, the overnight swaps on the indices are just, it's insane.
So high,
and then if you talk about gold, right? If you talk about commodities, oil, gold, silver, the swaps, and especially the over weekend swaps, is just, it's almost impossible to do it profitably. And even if you do and you're profitable, you're probably giving like 75% of the profit you're giving back in swaps. It's just not worth it. I mean, if you look at AUD and CD, I've been holding this for 2 months, been holding this for 2 months on a personal account. I'm up 5% on the year only on this trade. But then I had to close the trade on the prop firms because I was paying more in swaps than I was making money on the trade. So obviously, as a swing trader, the way I see it is that there's an ecosystem in my trading. You got prop firms, risky low time frame trading, personal account, brokerage, swing trading, bigger position sizes, little bit more risk, but slowly, right? And then thirdly, long-term investment, right? So what I do is, not what I do. Sounds like I'm making a shit ton of money from prop firms. I'm not doing that at this point. It's not going super good. But like, what I'd like to do is take the money from prop firms and then 25% into broker and then 75% into long-term investments, right? Because what I love about prop firms is you're just risking the cost of the challenge, right?
Yeah.
So if you're able to buy a challenge and then get funded and then get a payout, it's such a good deal. It's such a good deal.
Yeah, true. Okay, interesting looking at you at trading Nikkei. I was actually looking at the chart. I rarely look at the Japanese index, and I was paying a little bit attention to it, and
you have to now with everything that's going on. I mean, it's just damn, it's just insane. This type of price action is crazy. We're coming down into the level now. Is this the retest? It looks very good. It looks very good. I would recommend everyone that go all in on Nikkei right now.
Definitely. I do pay attention a lot to the yen pairs, but that's actually the Japanese index. I don't really pay much attention. Again, the conditions, as you mentioned, the spreads and the conditions are not as great to trade on a daily basis. So it kind of goes on the bottom of my list, to be honest, of the assets that I pay attention to.
Definitely. I mean, if you're active, if you're actively trading, if you're trading in lower time frames, I mean, if you're happy going lower than 1 hour, you're going to find so many opportunities on, on the forex pairs that you don't really need indices, you don't really need the commodities unless you're trading, strategies specifically for those markets. I mean, if you're looking for trades on the lower time frames, you get the whole list of the majors and the minors and all the crosses between them. With insanely good spreads at the fivers. So, but then of course you got gold. You probably want to be trading gold. It's a no-brainer. If you're not trading gold, then you're doing something wrong.
Yeah. All right. Yeah, what I'm looking at, for example, I was looking for the reversals on the yen as well. Starting to potentially look for some sell opportunities. on the I'm going to bring my charts in here. So price actually is playing out quite nicely at around this bottom. Again, how this movement was exactly because of that election that we had, the results that we had this weekend in Japan, and I was trying to see if price would manage to hold this double bottom at around this level. Last week price was around here. We mentioned that this was a good level for price to start slowing down and potentially start showing some bullish momentum, at least to see some buyers starting to be involved after this move quite steady to the downside. And there you go. We basically had a little bit of manipulation. We start breaking a little bit above this structure, still respected this last supply level. And now we fake out those with, again, those news over the weekend. And now price looks like is trying to challenge again above this size. And if we start breaking above this size, I think we can start rally from here. I think this is already enough of a pattern, of a reversal pattern to start moving to the upside. I was looking more into this drawing, so still maybe taking a little bit these lows, get a little bit deeper and go, but apparently price just kept, this was enough apparently, this low managed to go slightly below these lows in here. It was enough maybe to collect that liquidity and start pushing to the upside. So me looking at this is basically me trying to find short opportunities on the individual yen pairs, and then we'll be talking about euro yen, pound yen. Dollar yen has already dropped quite a lot because we had a negative dollar. Basically, dollar was moving to downside since last Friday. So the dollar yen move had already happened last week. Now it's just basically a continuation more than anything. But then when you're looking at euro yen, maybe CAD yen, even AUS yen, and so on, those happen a little bit over the weekend. AUS yen is a bit more of the bullish one. So if I was about to short one, I wouldn't be shorting really AUS yen. AUS yen just continues also to break new all-time highs. At least I don't have any data on the left side. And the AUS still looks a bit stronger. So AUS yen may stay a little bit more to the upside. A pound yen already retested really close to the top and didn't really manage to get involved in anything. Again, these tops have been created somehow either close to the closing of the session or during the Asian session, which has been really hard to trade. I'm not trading at that time of the day. And meanwhile, and after that, price is just moving down. I'm looking for the pound yen, to be honest, to get closer to this range again, at least close to these lows. I think price can be trading and is trading within this structure. So yeah, I think I'm a bit more looking for shorts in here. Again, I don't trade trend continuations, but if anyone trades trend continuation setups in here, I'll be looking for price to get a little bit close to this low. So maybe that's an opportunity. Euro yen. This was a drawing I made yesterday. This is what I wanted to see. Unfortunately, price hasn't really gotten into this level just yet. Yeah, again at midnight 30, basically price just peaked in here and start moving to the downside. I think there's maybe potential for price to push to the downside as well, but we'll see if price will manage to go a little bit higher before moving to the downside. In addition, with euro yen, I'm looking also at the euro index, which maybe can go close a little bit to your euro dollar long. I think you're looking for longs on euro dollar, which is I would like to see this euro index moving to the upside. Okay, so basically this drawing that I have in here in green is basically what I would like to see. Maybe price bouncing from this level and going higher until getting closer to this previous structure, and then maybe from there could go lower. And why I'm mentioning that, because if the euro index actually wants to go higher, maybe with euro dollar as well, maybe the euro yen could hold a little bit more at around this level and only make that move to downside also when you have this alignment with the euro index. Okay, so if euro index by any chance is about to do something like this, maybe euro yen can still hold a little bit or range a little bit around this level until eventually maybe makes the final move. So that's a little bit of analysis or hope on the euro yen. And then you can look at CAD yen as well, just so not the price is holding a little bit. But CAD yen, looking at a higher time frame, I'm actually even looking for price to go a little bit higher before a bigger potential sell-off opportunity to appear in here. The yen pairs have been quite interesting, and if this yen index does indeed hold this double bottom in here and starts moving higher, we're going to have more opportunities to look for those shorts on the yen pairs, and maybe the Nikkei can continue to rally as well in that aspect. We'll see. Yeah, that's something that I'm really interested this week. Yeah. What else? Yeah, someone was asking in here this SK forex trader. Tell me the EMA number.
I think
Was it
it's
for you?
yeah, I think so. The moving average I'm using is the 20 and the 50.
All right.
That answers it.
Okay. So there you go. You have that number. And someone else was asking about the dollar card. Where I saw dollar card in here. We had Raj asking, "Hi, your views on USD card? I entered one at 135560 and dollar card. What we have on dollar card? So we went 135560. So that's basically at today's bottom. If I just share my analysis on dollar card, it can be a little bit of a tricky one. Okay, in the sense that I can see why you're looking for longs, in the sense that price is basically at this strong level of support for the last 6 months, since November, basically. Or even more, that's less than 6 months, sorry, 3 months. However, on the other side, I could see a potential downside on the card. Okay, so basically price came out the back in here, took out the stops and started moving to the downside, created this low, price bounced a little bit, maybe the 50% retracement from the stop to this bottom, also retesting this previous structure here, and now it's moving lower. And it did manage to take this low. Okay, so price actually did manage at least to take this inside low that we had in there. But we are still respecting this bottom at around these lows. But if I zoom in now a little bit, what we had, so we did manage to take that one on the left side that I mentioned. We're still respecting the demand before that. But we never really managed to break structure. If the way I look at it, I didn't really see any structure being broken. I would have liked to see the stop being broken to start looking for more longs opportunities. We didn't really do that. Now, within this level, within these lows, I think there's maybe two levels that price can still bounce from. One is maybe where price is already reacting, which is maybe at the base of this level at around here. Okay, maybe the other one, it will be literally at the extreme, a little bit underneath. I think there's maybe still a fresh level left behind somewhere around there. But before looking for longs, personally, I would like to see a bit more of a shift of the market. Just the same thing that maybe happened either as price was slowing down in here and went higher, or as price was slowing down in here and eventually turning. Okay, a little bit of a base. I think at this point, price may just range a little bit before maybe going higher, if that's the intention. Okay, if that's intention, then be careful, because price can also just come back to this level and just continue to push lower as well. Aside from that, I could see eventually dollar card could even take this most recent low and get a little bit deeper into this level, 1344, something like that, or then eventually continue to push lower and just follow this. 1 second, just follow this routine that is happening in here.
I'm going to take a quick break. I'll be back. I
Okay.
know that LJ is supposed to come on, but he's having some technical difficulties. So I'm just going to take a quick break, and then I'll be back in just a bit if LJ doesn't show up. Okay. So I'll see you guys.
Okay. No problem, John. Thank you. Thank you. All right. So yes, I'm a little bit in doubt in here. I was super long, as you guys know, 2 weeks ago, at the end of January, to look for longs on dollar card at around this level. Okay, the one that I actually missed by a little bit, my long opportunity. But right now, I would like to see a bit more of confirmation that price actually is ready to turn, and because I didn't really see a proper break to the upside, that makes it a bit more in doubt in terms of the long opportunity. Also depends on what type of targets you are looking for. Are you looking for longs in here, but with the stop loss kind of to protect the structure in here, or it's a bit more of an intraday setup with a potential trade like this? So it depends also what you are looking for within this structure. But yeah, we will see. We'll see what will happen on the card. I'm a bit more in the waiting mode right now on the card. Any other pairs, guys, that you are looking at? Anyone else? Grand Andrew, pound. Did you manage to get short, Andrew? I was looking at the pound. I was looking a little bit higher. Okay, I was trying to see if price would get a little bit higher. Maybe it went into this fair value gap. I got really close maybe to this small fair value gap that there is maybe around this level. Okay, I was even looking at this supply level all the way in there.
This is working.
LJ, you are on, man. Everyone can see you. You are live, LJ.
Yes.
Welcome.
Okay, good. Good. How we doing? How we doing, Pedro? We're in.
How good?
We're in. We're here.
How good, man.
Give me 1 second.
No problem. But yes, I'll continue looking at the pound. I was looking for pound to go slightly higher, to then look for those shorts. Maybe price could fake out these tops a little bit in here. But at this point, is moving to the downside, and I'll be careful. We have this trend line, so maybe price can bounce a little bit from here, or maybe a little bit closer to these lows, and then try to go higher. The question mark that I have on pound is if this low is that relevant or not. And by relevant, I mean if price actually is ready to just continue to push higher from these lows, or price actually is just making a bit more of a shift at around this level and potentially could just continue. If we don't really break this top, I'm going to be a bit more bearish, so I'll definitely not be looking for any longs in here. If you start taking this top in here, to be honest, I wouldn't be looking for longs in here neither. Okay, unless maybe price actually end up taking this top altogether. That would be maybe a different story. But otherwise, I would actually prefer maybe to see price getting a little bit closer to this structure before looking for longs. But for now, I'm looking within this range. Basically, this actually I can extend this a bit more between this rectangle, the red rectangle that I have in here. I think price can be bouncing in between these levels today, and we'll see which direction price will then go afterwards.
Very good, very good. How you doing, guys? Good to see you. How we going? Good to see you, Louis.
I'm good, man.
Theola, Sam, how we doing, mate? How we doing? And yourself, Pedro. What trades
good,
have
man.
we taken this
I'm
week?
still looking for at the end pairs, man. End pairs have been reacting over the Asian session, so it's been a bit hard to trade them. But I'm still looking. I'm still looking for potential shorts on the ends. Not so much on dollar yen. Dollar yen already made a lot of the move because of the dollar, but the other ones I'm still paying attention. Euro yen, for example. Aussie yen a bit more with cautious because Aussie looks quite strong still. Not really looking to short long term Aussie yen just yet. But yeah, the end pairs. I'm curious about the US indices now that we are back at the highs again. Because I've been reading or hearing about that, or listening about that. It looks like many institutions are trying to dump a lot of what they have. And if they're doing that, maybe this constant retest of all-time highs is maybe just another way to continue to get rid at better prices. Yeah, I'm just curious. I'm just curious to see what may happen now that S&P is back at the highs. We do have this interesting super level, so I do like it. But I like also where price ended up reacting last Friday. Okay, last Friday I like where price ended up reacting from these lows. So it doesn't really make it totally kind of bearish for me. On that sense. But what are you looking at? And just one point, like on last Friday, basically we saw many tops or bottoms being created, and all of them, they were created exactly at around the same time, okay, between midnight to 12:30. And we saw it on the euro, we saw it even on the indices, we saw even on Bitcoin, we saw maybe even on gold. Like we saw that correlation somehow. The algorithms went aligned and just literally traded and created bottoms or tops at the same time. What is your take on that? Like, is that market? Is that an idea? Like the algorithm running? How the institutions or many institutions kind of would create exactly at the same time or within the same interval of time the same move?
Yeah, well, so there were a number of assets at like certain key levels, both from price
That's true.
support, certain levels, as well as a bunch of like pivot points for that day. Fib extensions, a whole bunch, as well as if you looked at some of the downside protection for certain options, barriers, that kind of stuff.
Okay.
So we definitely had like a cluster coming in there on the Friday. So no surprise that, to be honest, even before that, going into the last like 2-3 hours, we had that further dump into Friday, and that was probably unwarranted per the news we had, right? A bunch of selling going into the weekend. We did have some weekend risk with, potential Iran escalation. We did have the Japan elections going on. They were pretty clean sweep, which was very well telegraphed beforehand. But that plus the prior days and the prior 2 days, 3 days of that sort of downward trajectory, because we didn't get an exact single piece catalyst. It was like a basket of multiple pieces all put together. So going into the Monday, when you have one of those kind of aspects, like no surprise, you get further selling. And we found the base because yes, it is very much oversold. We had very indiscriminate selling in stocks, hence all the indices right down. A lot of very high quality stocks, even within the SaaS players, the software stocks or correlated type entities. Everything just got sold across the board. So we even saw gold down, stocks down, currencies down, literally everything, bonds as well. So it was very indiscriminate. It was very much a cascade of sort of margin calls, that kind of type thing, defensive positioning going into the weekend. At the same time, once you step back, look at it all, a lot of stuff is on discount. Right.
Yeah,
so
it makes sense. I agree. I think it makes sense. I think exactly makes sense.
Yeah.
I was actually speaking exactly at the same time, like the behavior of the way the candles or kind of the price moved, kind of with a quick spike at around that time, and then kind of the reversal, which tends to be the price action behavior of a reversal setup or trend. It's exactly that. Price so it's going down slowly, and then all of a sudden there's a big a quick spike. The bottom is created and reverse, and that quick spike had happened at around the same time, kind of between 12 to 12, which is usually actually, if you think about it, most of the retail traders are actually not trading at that time. Like no one is trading at midnight UK time, basically. Then no one is doing that. Basically, the market is just closed. It's about to open. No one is trading at that time. But it's exactly at that 30 minutes interval that out the top of the bottoms and it were created. Even in crypto as well, Bitcoin kind of that spike down also happened at around that time as well. Exactly at around this level. Midnight or whatever on Friday, which was just funny. Like, and again, you just see the alignment of whatever algorithms the price behaves, or the institutions as well, or the way they position themselves or whatever.
The other thing is you get into like end of week type squaring as well. So once the market actually closes, like obviously all the actual like prime brokers, that kind of thing, actually square the books then at the end of day, right? So that does tend to be a cascade after that. The effect, potentially they have to go into futures markets to buy or sell either side depending on their books, etc. So that's why the same deal when you see end of market during Asia, during London, going into New York, and then after New York, every day you get that. There's that further bout of activity, which is book squaring as well.
Yeah, it's just interesting. All right. So, what is your take on the US indices and kind of in general? Because we can even talk about crypto so in a bit, but because I don't know if you follow this Twitter account, No Limit. I think it's No Limit. His name, his account.
Who?
No Limit. I think that's his face. It's kind of a smile, just a drawing smile. A tweet account.
Novi Mit.
Very.
Like NO.
No, yeah,
Sure.
no. Wait, 1 second. Let me just bring in here the X account.
I only follow like a very select few people on Twitter. I'm only very occasionally on Twitter.
Yeah, it's this guy. I can just bring it in here. I think actually you'd be interested on seeing his
no
posts.
limit. Right. Okay.
Yeah.
Right.
Do you follow him?
No, I don't.
He has
No
interesting takes in general. He has been now, which in the last few weeks, he has been just completely bearish on everything. He was bullish way before that, but now he's literally just completely bearish. I think you'll have some fun reading some of his takes on a daily basis. I think he's well positioned as well. I think he's well positioned within the industry. But yeah, for example, he was one of the ones saying that based on his contacts, that many of these institutions actually try to dump as much as possible of what's going on at this point. Even of course, looking at the price valuation of many stocks that are way too expensive comparing with indicators and expected the price earnings that they have at this point. So what would be like what's your take on this situation on the US indices and potentially also the dollar or the devaluation of the dollar?
Yeah, I was just trying to find. I did have some screen caps from some other stuff.
I'm going to share these with you.
Did I put them in?
Just going to share these with you. Yeah.
God, dude, I've created too many folders. Too many documents everywhere. I brought it up last week. What folder was it in? When I was talking with Dirk. So anyway, the point is we had some of the lowest cash levels overall, right? Since going all the way back to like 1999, 98 type thing. Cash on hand for institutions. So we're also like primed for some kind of rollover, right? In terms of everyone's pretty much fully invested at this point. Once you run out of buyers, all there's left is sellers, even if the picture is like pretty right. So that's why last week, even though the sort of Anthropic piece that kicked off the catalyst, or it furthered the catalyst, I guess the initial point was the new Fed chair with Kevin Walsh, right? That being slightly more hawkish, that kind of thing for the dollar, for the Fed overall. We saw gold and silver obviously come off massively on the back of that. Again, that was not like a direct catalyst, but just everything was primed. It kind of just put the slight prick in the bubble and it all fell apart, right? So same deal last week where we then had this kind of mini freak out with the whole SaaS company, software company type aspect, their valuations, and then how that runs into private equity valuations, which there are certain companies that are public with their private equity valuations, private equity holdings, I should say. And we've seen that massive kick down, which then bled over to other public SaaS companies and the rest. Now, I think that's a bit overdone. Again, it becomes this thing with the whole AI type system where people think it's, on one hand, you've got either it's going to kill everything immediately. Other people think AI is a bubble and it's overblown altogether. And then you've got some people kind of in between, right? And we keep sort of pinging back and forth between either end rather than getting kind of in the middle. So right now we've had either AI companies so powerful they're going to destroy every single SaaS company, right? So that's what we had, drawing everything down. But at the same time, you've got people saying it's a bubble and it's useless and there's no point to the AI. It's overblown. Which is it, right? Those two things right there are kind of in conflict to a degree. So it's one of those inflection type points where it's just very murky. A lot of uncertainty. It's very hard to project the future for AI, all that kind of stuff. We've seen some things accelerate very quickly. Other things that we thought might have happened haven't occurred.
Yeah.
And it's just going to be more of the same. So I think we were talking about this last year where I was saying we'll get like the situation where everything's done, it's all over, back to, oh, we're so on, everything's great, full steam ahead, back to it's over, full steam ahead, it's over, full steam ahead. I think that will be very much the hallmark of this year. Now, obviously, with the indices as well, we've had massive year-on-year returns for some years now. Huge expansion after COVID, and then the stimulus checks and the whole inflation aspect through there. We are starting to press valuations on some companies, but then there's others that are now pretty discounted, right? And I think this is the exact problem that people are having, where just like last year and even the past 2 years prior to that, you could paint either picture both sides. Like you can either, same with the tariffs, you could see the good outcome, you could see the bad. You can see somewhere in between, but it's very unclear. Like they're all very like split, like 30, 30, 30. There's no exact, right? Now, I tend to then lean that obviously all these companies, these people's objective is to obviously move forward. So therefore, if you get pretty much an even split, you should actually go with the forward trajectory of the entity's ideal outcome, right? So that's still what I'm leaning on. I've been very skeptical about new all-time highs for both the NASDAQ, the S&P. I think the S&P potentially has better prospects this year. As we can see now, like the S&P is much closer to the highs. NASDAQ is like a bit further back. But honestly, like if we get another 10-15% for this year, got to say I'd be very surprised. The wild card, I would say, is the Fed. Obviously, after Trump's Fed pick, potentially being less aggressive in reducing rates might actually inversely actually be a boon to markets. Seeing there's more financial stability, we can actually run this train for a bit longer, and potentially it actually comes out as like a good thing.
Good thing.
So obviously, if we had someone reducing rates very hot, quick, fast, would have been like a flash in the pan, adrenaline shot. We see indices right the way up, but then probably looking for a major crash after. Yeah.
Exactly. It's a lot of uncertainty. A lot of uncertainty basically everywhere. Where is the value at this point? That's the question. Should you continue to buy at its prices? Should you kind of wait? Should we sell some to buy cheaper later on? Even when looking at the metals as well, looking at gold, the way it rose so quickly, even silver as well. Should you go to wait a little bit more, or just keep on accumulating for it to go higher? Then of course there's many people looking now at Bitcoin again. It goes between 60s and 70s. Where is maybe good value for investing? It's going to be it's going to be a moment where maybe in a couple of months or a few years from now we're going to be thinking, maybe I should have just put on risk at those price levels, especially maybe anything that starts to become a bit more devalue or cheaper. And everything else, we'll see with US indices how it's going to play out, and also all these AI tech companies that's quite still expensive at this point. It's going to be an interesting one. Basically, this conversation is more towards long-term investment than specifically just day trading. I don't like day trading; doesn't really matter that much. You're going to have your own opportunities, whatever it may be. I'm actually more thinking how position long-term on this cycle. If more waiting or start accumulating where we are now. Especially Bitcoin at this point. The US indices, I'm not buying anything at this point. But that was just more of thought process. And then of course we have dollar. Is dollar bottoming? Is dollar continue to move lower? That's the good question as well. Are you going to see euro or a pound continue just to rally? Up until what point? Is it sustainable or not? Is it China starting to be involved as well on trying to devalue dollar overall?
Yeah. So
on your point on dollar. Yeah.
Okay. So as far as the dollar, I think the dollar might actually end up pretty mixed this year. I think we'll kind of even potentially just trend sideways, unless the yen intervention actually really kicks off. I think we'll be pretty sideways. So part of that comes to the positioning for the euro dollar, right? We're getting up towards, not quite there, but we're definitely in the high range of record long speculation on euro dollar already. Every other time we've kind of reached these levels of positioning, we've tended to drop upwards of 500 pips. Right. So as I've mentioned a number of times, the air above 120 is very thin. Right. Now, as far as the macro picture, the backdrop, we should be higher. Trouble is, because we should be higher, everyone's kind of already in the trade. Everyone's already bought in. That's why the positioning is very long for that reason. Trouble is, you run out of people to buy, inevitably you're going to drop lower. The next portion is the dollar yen, which we have had some currency intervention talks. We did have that slight drop down, which was 700 pips, which was quite big, but it was very temporary. And I do think the eventual move down will come, but I think it will be much slower, even still, than people think. Just like we had last year, where we did have certain bouts of dollar yen coming off, but we didn't really like kick on. We didn't solidify that positioning. We ended up rallying right the way back up. We've had the Japanese elections go through. They very much signaled, I think the war chest that they had is about 1.4 trillion to deploy at currency intervention. So that is sizable. You do have to say that is sizable. But still, it has to come at the right time with the right broad conditions as far as the macro geopolitical central banking situation. I think this might take a bit longer. So from here, I would actually expect that we potentially get a bounce in dollar yen. And it'll only be once we're challenging those higher levels once again that we start to get that pressure coming in. Next portion of that comes in with the Nikkei and how the Nikkei continues to move. Because you used to have the Nikkei and the yen kind of hedging each other as like offsets. Now they're not quite offsetting each other, and so there's a rebalancing there as well, obviously due to the rate change with the Japanese bonds and the whole carry trade thing. The other trouble with the carry trade thing, yes, the carry trade has been very prolific. It's definitely a good trade to put on. A lot of the positioning for the carry trade, though, has been largely speculative as far as the depreciation of the yen itself, rather than actually targeting the carry on its own, right? Which changes the dynamic of the carry trade. You just happen to get the carry as like a bonus, but it's not the primary objective, which changes very much the dynamic and the characteristic of those players involved in the trade. So once this does kick off, we could see a very large washout. And obviously, like we're saying, with the indices as well, if we do see some kind of for the top, or there's some kind of capitulation in one of the AI companies or something like that, we see a massive drop in indices. I think that's exactly when dollar yen is on a straight path down below 140 very quickly, right? 135 even. So every period, we obviously always get like some kind of 10% plus drawdown on stocks. That's just like a natural back and forth, trading element that's very healthy. We haven't quite seen that for a while. We've had some of these like 5% dips, right, like we did recently, but not a 10% more extensive selling period.
Yeah, we had kind of in April, like March, April last year, when Trump announced tariffs, but it was such a V-shaped recovery that was quite aggressive on that one. I was just looking at the Davarian in here, right? The Davarian, it looks bearish to me at this point a little bit on the price action. After price again bouncing again between really close to 160. So we dropped those 700 points that you mentioned, and now where price reacted, it does make sense to me. Again, it was a bit of an overnight move, unfortunately, but it does look good to potentially start moving to the downside again. They basically retested this structure around here. They already retested this zone in there, and we had that that spike with the action over the weekend, correct? And price moving to downside. I would love to see it coming back again to try to get involved. I'm not involved yet in the year on the setup, but it does look that he could, if it wants, he could continue to go down, or at least maybe try to retest these lows again. Somewhere around here.
I would love to see it. I just don't know if we're going to get it. Nah, yeah, I don't know if we're going to get it. So had these. This was the dollar yen trade from last night, yesterday on stream that we had. So back down into this support, which came through nicely.
Mm-hmm.
I just question how much further we're going to drop at this point. I think the market is very much trying to call the bluff on the Ministry of Finance from Japan, and the administration in general. So I think it's going to need a further actual commitment. Obviously, the drop that we got was just from like a tout of the central banks trying to find certain rates of potentially, if they wanted to jump in, what kind of rate could the prime brokers actually offer, right? What's your liquidity position? Where are the books out? That kind of thing. So that very much spooked things and caused like a sort of cascade coming lower. Now we've recovered quite the way, like right up to 157, 60. That's a lot of distance. That's 80% of it plus. Trouble is with the euro up here at about 119, right? So last Thursday when we had the both the Bank of England and the ECB, I was talking about how I expect Christine Lagarde to talk very largely about the currency, which she did get quite a few questions on that, and they spent quite a good time in the question following period talking just about the currency. So once you have the currency coming up, it gives these like countervailing positions. So we have had inflation come lower for the euro. If the currency keeps going up, inflation should come even lower, which means thus there would be even more dovish per the central bank, which thus ends up in the euro coming down. And at the same time, you have positioning being very stacked already on the long side that I see potentially. Yeah, I mean, we've tried for like 10 years now, trying to establish like a hold above 120. Very short-lived every time. So I'd see things as a very sensible positioning to look for more downside on the euro rather than upside, and then hence the corresponding flows from that, at least to support dollar yen near term. I don't think it's going to run away exactly, but I don't think we're going to full collapse as I would like it to. With those,
I'm just curious. Again, within this range of the previous fall, all the way from 159, sorry, to maybe 153, a price can be bouncing in between that for a while, until eventually finds a direction. I would love to see a new midterm high, maybe retest 158. I would love that. But because again, the move in there on the variant was also caused a bit with the dollar itself, that fall. When looking at the yen index, we are holding that double bottom at this point, right? So it did manage to hold that. I'm just showing in here. Yeah, we did manage to hold so far this double bottom. at this point, and if you start breaking above this top in here, may start opening as well. Maybe the space for price to go eventually a little bit higher, and then all of a sudden we have maybe a further move to downside on the individual yen pairs. So yeah, and just monitoring as well the way price is going to be behaving around here. We could maybe even move like that, maybe retest this level and go again, maybe somewhere from around this level. Yeah, it's going to be interesting. The price action is not bad at all, the one that you are looking in here. But there you go. We'll see. Because on the euro, I like your idea. For example, I mentioned this, I think, maybe before you join. The euro index, I would love to see it maybe going a little bit higher, which could take a little bit euro dollar, maybe a little bit closer to that previous top, and then potentially we see the move to the downside. And that this for me it's my ideal scenario on the euro index, and then that will align also more or less with euro dollar, maybe getting a little bit closer to here, or actually just slightly take the top to then drop again. Still within basically the same structure that we have in here on the left side. We could potentially even just slightly fake out this top, which is kind of a quick aggressive top. And sometimes when you do have this type of just spikes up down, usually price can slowly get close to there, and then just literally take it, and from there the bigger sell-off may happen. So I'll be looking at that as well. But I would like to see the euro now moving a little bit higher, and we'll see from around this level, or even take the top, but depending on when euro index also gets to this level. That would be my main position. That I'm going to be looking at, and that can align with, again, just maybe the dollar finally can move a little bit higher. Where is the dollar at this point? Yeah, we'll see. The dollar could even, again, similarly, could even take slightly a new low, maybe getting a little bit even closer to maybe properly 95s or slightly 94s, and then I think around this level it would be nice to see the dollar moving higher. Yeah, I would like to see.
I think that's one of the things. The Dixie for some time now has been a very poor indicator in general of overall direction for the dollar, right? It's very mixed. It's very choppy. You've got the inverse flows from both the euro, the pound, which have had their own idiosyncratic elements, and dollar yen as well. Also idiosyncratic. So a lot of moving parts, all going back and forth. Hence why I kind of see the Dixie potentially for this year even staying in a bit of a range, unless somehow the Fed, basically what I'm saying is the wild card is the Fed trajectory. If somehow now we've built into a bit more of a neutral stance, or potentially Kevin Walsh being perceived as more hawkish, that actually holds the dollar up for a bit. Now, I do think, though, he's not going to actually be hawkish. He has very, very much has deep ties into the Trump family. They're good, like, family friends, that kind of thing. Though he has been very anti QE, all the money printing type central bank instruments that we've pumped out since the GFC, right? So I think he's kind of actually somewhat of a plant in that way, that he gives the perception of things not just going to zero as far as the interest rates and all that, but at the same time he gives that like steady boat picture because he's on the opposite side, though also very connected to the Trump family, that he's like the perfect happy medium pick. But I'm not sure if the market is quite pricing exactly how Trump friendly he might be. Right now, it might not be directly rate reductions, but it could be like further liquidity, further easing, further opening up of bank balance sheets, or some other kind of mechanism with that. So if we get that, then you could see the dollar coming off. But the interpretation is going to be very weird. I think it's going to be a very interesting. I'm very curious to see how this year pans out with that. Richard.
Yeah. Richard, welcome.
Sorry, there's a lot of stuff happening in the background. I wanted to be in a little bit earlier, but you know how it goes.
That's a good man.
Yeah. All good. Yeah. We have some here asking about pound yen specifically. I think he's looking at 211.793. So basically, I think he's looking for a retest from within these lows for a potential long. It could happen. Personally, my favorite level maybe to look for more longs, it would be actually for eventually pound yen to just come back into these lows and not just in here. We already had a good move down, price already retest almost all the way to the upside, and now we are retesting this level again, which could eventually lead into a continuation to the downside and to trade within this range. Now, something interesting in here is that we actually have, one second, we already have a little bit of a liquidity in here with this double bottom, so that can be a bit attractive to maybe collect some liquidity from anyone that was buying within this zone and maybe bouncing from this demand zone. If that was about to happen, or at least this is what I like the most for a potential long from this level. It's that we have a little bit of this liquidity and it's still a fresh flow in there. But I'll be cautious, or at least any targets I'll be looking still within this move to downside, basically at around 212.5 or something like that. Anything beyond that, I need to see this high being taken to see actually that price is ready to make another attempt to go higher. But I'll be, if you do find any kind of price action within this level, maybe look for a target within here. Maybe you can find an intraday opportunity. Bigger picture, I actually prefer to see eventually pound yen to get closer to here, and I'm just going to be trading either in here or trying to trade within these levels. I'm going to avoid anything else in between. But that's me.
I think if you're looking for longs, Euro yen probably is going to fare better, or Aussie yen. The pound yen is very difficult. So yen pairs in general, dollar yen is going to be very mixed with a potential threat of large downside. The other yen crosses probably have a bit more upside. Now, a bunch of them have already moved in that direction pretty confidently. AUD yen in particular is one of them. I think we're at some of the all-time highs for the past decade plus, 15 years plus or something. The thing with the pound yen is we do have the specter of, so first of all, the central bank, as far as last week with the Bank of England, we had like a 5-4 vote as far as reducing rates. So it was almost pretty neutral, right? We almost reduced rates, but it ended up staying flat, right? But we're very close to potentially reducing rates there. Plus, you have the specter of some of the political woes going on right now also coming into play. We saw some of that last night with the pound as well, coming off as far as pound dollar. So there's a lot of negatives still on the pound element of things. So as far as yen crosses, I would see pound yen kind of getting pulled in between. Generally, the yen index weakening near term overall, so thus pound yen higher. However, you have the pound component also drawing the index down. So it's going to be a bit more mixed. I would say the pound component is going to play a bit of a deeper role. So thus, just like Pedro was saying, I would see that lower end. That would be my target rather than seeing highs starting to be printed. So I would have a downside tilt overall for the pound yen.
Yeah, that's what I'll be looking for. Guys, I have to add out as well. I'll leave you with Richard. Thank you again, LJ, for this great chat and to always interact with you and to pick your brain on whatever is going on in the financial markets. Richard, I'll see you also on Thursday. Guys, everyone, actually, if anyone wants to join the Portuguese stream today, we are actually celebrating the 1 year anniversary since we started the live stream. So yeah, apparently we started 1 year ago. So yeah, we are doing some giveaways to celebrate that event. Nice. So yeah, it's going to be at 5 p.m. UK time. or 2 p.m. in Brazil, which is really kind of the 2 hours that we announce. But yeah, everyone is free to join. 1 year already, and it's just the beginning. Just the same thing with the Fivers. We are 10 years in, but it feels just like it's the beginning. With new faces, new projects, new everything. And actually, someone asked about this particular question, which maybe Richard can give some feedback or not. Who knows what's going to happen? But just to clarify in here, because this is a Portuguese question. Prince, we do have a Portuguese YouTube live stream of the Fivers. It's from Monday to Thursday. If you just write the Fivers Portuguese, you are going to find us for sure. We have around 4,200 subs at this point. So feel free to join us, subscribe, and Monday to Thursday. And we also have some interesting guests every now and then to join the live stream.
Pedro, right. How do you say congratulations in Portuguese?
Parabéns. Parabéns.
Parabéns.
Parabéns. With a P. Parabéns.
Okay. Yeah. Parabéns.
Oh, feliz aniversário, like happy anniversary. Just like Sam said. So feliz aniversário.
Feliz. I just know.
Feliz Navidad.
Yeah.
Exactly.
Anyway, thank you very much, Pedro. We appreciate you jumping in today. I've sent you a message, if you don't mind.
I'll take a look at it.
Ponder over that for but a second, and then give me your input. All right, guys, go and join Pedro this afternoon at 5 p.m. GMT.
Yeah, UK time. Yeah. It's GMT now. It's 1 plus minus 1 plus. I don't even know. It's UK time. Just say UK time, whatever.
5 p.m. UK time in the Portuguese channel, celebrating their 1-year anniversary along with the Fivers' 10-year anniversary.
Exactly.
Awesome.
Good, yeah.
Cheers, Pedro.
Have fun, guys. Yeah, cheers. All right.
See you, brother.
LJ, what's up, mate?
How we doing? I might just have to ask if I can take a sec. I gotta restart again. The whole thing is major difficulty. If that's all good. I'll try to come back.
Yeah.
All right. Give me a sec.
No problemo. Let's bring up my screen. Why? Why are you like this? Why do you not want to show me? I'm gonna stop sharing and then I'm gonna reshare. Because I think there is something. There's some. We've got some technical issues today with our streaming platform. There we go. That is just. That's just very annoying. It's just annoying things that have been happening today. Just very unexpectedly out of nowhere, stuff have started to just. Which way am I? Okay, this way. Which is kind of just taken up most of our efforts in the background. Yes, welcome to everybody that is here. Apologies for the tardiness, my tardiness today. Yes, let's talk about the 10-year anniversary event. So the 10-year anniversary event is happening next week on the 17th. That is Tuesday. So for everybody that is here, you are all invited. You are all welcome. Please have a look in the description box below. There's a link to this 10-year anniversary event. And this 10-year anniversary event is quite special for the Fivers. We are going to have $2 million worth of giveaways on Tuesday the 17th. So this is going to be a multitude of different accounts. There's the potential that we're going to have account winners on the day that are going to win multiple accounts. We are going to have keynote speakers. It's going to be the CEO of the Fivers, Sol. It's going to be Mickey, who is the CEO of Trade the Pool. And we're going to have Gil Ben-Hur as well, who is the founder of the Fivers as well, who's also going to do some keynote speeches. Then what we're going to have as well is we're going to have some awards. We have an award ceremony that is we're going to celebrate a few people along with the fivers. So it's going to be, let's say the person that's had the highest equity with the fivers, as an example, or it's going to be the community champion. So there's going to be a few awards that's going to be handed out on the day. So you want to be there for this specifically. It's starting at, let me just make sure I have the right detail here, because I don't want to give you guys the wrong information. It is going to start at 1400 GMT until 1600 GMT. So please come and join us. You'll see when you click the link, there's going to be a live event that you can join, and then you can add it to your calendar. So that's going to be next week, Tuesday the 17th. We also have a surprise release on the day. So we're going to be talking about something that the Fivers has been working on for quite a while, and it is going to be announced on that day. I'm not going to allude as to what it is exactly. You need to be there to find out what it is that I'm referring to. Is there any giveaways on the anniversary? Why is it not coming up? There we go. Yes. $2 million worth of giveaways. $2 million worth of giveaways. So imagine that. Just imagine. Do the math. How many 20,000K accounts is that? I'm not good at math, so I'm not going to do it. Yeah, we've got $2 million worth of giveaways on the day. So you have to be there. If you're not there, if you're not in the live stream, you're not going to be a participant and win your way to one of those accounts. So you have to be there. And then on top of that, we also have special offers on some other accounts as well, which will also be released on the day. We will tell you exactly which accounts has which discounts as well. That's why we haven't had one this week. So next week, Tuesday, be there. LJ, you're back.
And throughout the year, right?
Yes.
This is doing a year-long thing. So
yeah,
you guys, each week, each month, there'll be something new for you guys.
Exactly. So every month this year is going to be a giveaway month. We're going to do something every single month. So, yeah, we're just starting here. We're just starting in February. February anniversary starts, and then the whole year all the way potentially to next year, February again. But yeah, you guys have to stick around for that. And then the only entry criteria for any of this is just pitch up on the day and drop us like and drop a subscribe. That's all. That's all you need to do. So if you're not subscribed, sorry.
Easy.
Yeah, can't be a part of it, unfortunately.
How many subs are we at now as well? Like 97 and a half or something?
7,633 subs. So we are tantalizingly close.
Because that's the double bubble right there. Once we hit 100, we've got some other stuff stacked up for you guys. So the quicker we get to 100, on top of the other giveaways, double bubble, boom, right there. So if you guys aren't subbed right now,
become 4 million.
Yeah,
you never know.
Beautiful.
Yeah. Sam saying happy anniversary. Thank you very much. It's all because of you guys. It's really all of you here and supporting us, knowing that we try and give you the best quality A, content, and B, trading opportunities. So without you guys, we won't be here. So we're eternally thankful to everybody that has brought us to this point. But we don't want to stop here. We want to continue growing. We want to continue bringing you more content and continue bringing you just the best. Let's call it the industry minimum. That we want to be the ones that creates the industry minimum. If other prop firm is not doing what the Fivers is doing, then sorry, mate. You know, we want to be the industry leader.
Yeah. Oh, definitely. Like we're not already. Come on.
No, we are. But the thing is, there's no ceiling. And we want to continue breaking higher highs.
We're gonna set the level. That's it.
We're setting the bar. We're setting the standard in the industry.
Maybe we could even have. We haven't had one of my costume turn-ups for a bit. Maybe for the day we could have like a vote on the costume appearance. Let chat vote.
How about
it's going to be?
How about this? Next week, Monday, Wednesday, and Thursday. You can choose any one of those days and you can rock up with whatever costume you want in celebration. And then what I will do is I will go and find a suitable costume and partake along with you in this endeavor. Okay. What about that?
Do we need to do it like coordination, right?
We can coordinate.
Similar lines or like separate, you know?
We can. Let's,
like themed, you know what I mean? That's what I'm saying.
Yeah. I can only, like a Bonnie and Clyde. You can be Bonnie, I can be Clyde, or I can be Bonnie and you can be Clyde. I don't mind the dresses.
Yeah, because I was actually just trying to check the calendar, going like, because I might have to order something online in Australia. Which I'm just wondering if it'll come in time, right? That's another question. That's just like, we'll see. Yeah. We'll see.
Whatever I don't have, I'm gonna have to stitch. So
yeah. I'm thinking what costumes I actually have left that I haven't like tossed on randomly, because it's always been like a mishmash bosh of a bunch of stuff. So.
Your previous costume, the one that you had on with the unicorn glasses for the competition between, I think it was yourself and William, you and Will.
Yeah.
Oh, mate. Like,
I mean, that was good fun.
Brain.
That was good fun.
It was so cool. So cool. But so we can do stuff like that, definitely, you and I.
All right, we'll do it.
Awesome.
Yeah, awesome. Save the date, guys. Save the date. There you go.
Yes, please. And once again, if you're not there, you cannot participate in the giveaways. And I think that the giveaways is second to the value that you'll receive on the day from the announcements alone. There's a fair few announcements on the day, and then just a giveaway is just a bonus, don't you think?
Yeah, definitely. I mean, dude, you guys are basically getting it all right there. Right? So, turn up, big day, a lot of fun. I feel like there's more to give away, but we can't say right now. So that's the trouble, right? You know, it's got to be quiet. So if you guys come in on the day, we'll be very happy you did. Put it that way. So there you go. We did have some other questions. One for you, Rich.
Yo, Kumar, how are you? Raj Kumar. Hi, Richard. What is your intraday view on GU? I am planning on taking a bullish trade with a target of 137,000. So GU. Okay, so I have not had an opportunity to look at anything today as yet, apart from NASDAQ. So let me have a little gander here what I'm seeing on GU. So GU has currently got this higher end area of resistance, which we basically tapped into last night. Going down to the hourly, we had this very slowed momentum here going into today, and it seems as though we're drifting a little bit lower. Let's see if there's an area specifically that could be tested. Let me just clean up a little bit here. This was from yesterday's information. So let's have a little gander here. So we do have an hourly base right here. It's a very large base, and we've broken above, but we're trading within it at the moment. So I will go and find a nice little area there for us to potentially come and test. it is actually in line with that previous area of consolidation, which was a previous low as well. A little bit of an attempt lower as well. So where we are right now, we're almost dipping into this area. So from 1.3657 to 1.3642, there's a little bit of a resistance / support zone. So whenever price has come to it, okay, so you can imagine from, what is this, the 26th of January, this was the establishment. We started to push volumetrically away from it. We came back down to it. We just wicked a little bit lower than the area itself, basically touching this high swing over here and reacting off of it. I'll go and zoom in on that area just now. However, from this point, we started to push up a little bit. Let's say this. We started to push up from there nicely. We came back down to that support / resistance point. In this case, it acted as a support. We reacted off of it. We came back to it. We consolidated around it around the 5th last week. We broke through, attempted to come back, failed, push lower, and then eventually did come back to it. Little bit of indecision at that point, and then pushed through again. So it does seem as though this area over here is acting as a little bit of a support / resistance zone, although it all that well. It's breaking through and then coming back to it and then kind of like deciding what it wants to do at that area. So 136.57, 136.42. As it stands right now, we have an area of consolidation down here. It's a large one, but this was yesterday, well, Friday's end of day, Monday, Tokyo, and then London start, where we had a reaction. But we had a strong reaction and then, so push off of it, a retest over here, and then a volumetric push up. So from yesterday into today, we're still a little bit bullish. On the 4-hourly, this does feel like more than just a pullback because it's multiple 4-hour bearish candles at the moment. I can see us reacting here. I think I can see us react off of this area, potentially trying to push higher. But this is all going to rely on the fact that we've had this high point over here. We've established a lower high as well. So we need to now establish a higher low in relation to this area over here. I don't know if that is making sense, but the way that I'm seeing it right now is we're having a little bit deeper of a pullback. If we have a look at the fib, did I select it? Yes. Let's have a look at the fib. We still have a ways to go before we reach the 0.5 pullback. So we could theoretically come into this area and then react off of it, but we're going to need to see like a severe slowdown here and then a push higher. What do you think, LJ? Do you think that that is potentially what can happen?
Yeah, so I think I'm looking at, so I'll jump over to my screen. So similar deal. So for the pound, I think we've got a bit of a dip to go first, right? My screen loading on yours?
Yeah, no, it's there. Yeah, I can see it.
Hang on.
You're on pound, yeah?
Yeah, but as I'm moving it, is it moving?
Oh,
no. No, God. Okay. Let's see if I change asset. I'm now on the euro. Has it changed? No.
Nope.
Okay. Hang on.
Let's reshare, and then we'll see whether or not the resharing works. Like we said, guys, we do apologize. We've got some technical difficulties in the background, but we are trying to work on them. So I think LJ is probably going to say that he wants us to come down to 136.29 to 135.86. That's something that I think he might say. Not going to take words out of his mouth, but that could be a potential area, unless he is looking a little bit more higher time frame and looking for us to come down bearishly rather than bullishly. We do have this 50 EMA down here, which is an area that we could test. It's a potential area. This could also just be a short-term reaction off of the 50 EMA on the daily to try and push higher. So 50 EMA is down here at the moment. We are seeing a bullish trend from, let's say, what is this, the 22nd of January. We've had multiple pushes lower, but we have not broken down into this last area of consolidation, as well as we have at least significant attempts to push bullishly off of the daily. So in that regard, I would say that this could just be a very short-term pullback before continuation higher.
Okay. I think we're back.
Yeah.
Try this again. Sorry, guys. Many difficulties with the streaming platform today. So
here we go.
Okay, that's working. There we are. Okay, so from what we were talking about the sort of prior in the week, this was my initial target sort of area. We've pushed beyond that. This was the upper target, and then we've gone a bit beyond that up into that cluster through there, right? So now had this push down, I would ideally like to see, obviously this, we're resting right on that area that I outlined. Ideally, I would like to see some kind of move like that down and then heading higher. I think buying from this standpoint, there's definitely a large risk of further downside drop towards this 200 moving average around 136.40 and potentially down to 136.30 or so. So that's what I would see as far as the pound. You very much could get the pickup from here, but we've pushed a fair way from the 100 moving average. Normally when you get that, you tend to sort of continue. So we can see on the hourly, the 50 moving average also is rising through here and coming into that cluster. That's just where the bar closes are from the wick down last night. That seems as though like just a very natural pause point as well as a risk reward standpoint. So right here, you're kind of still riding the 200-hour moving average the way down. So buying in from here would be very risky. You're probably likely, maybe you get like one little push up, but then you end up lower overall. Similar deal with the euro dollar. We've stayed, we had the big run up yesterday. That long trade came out nicely. We pushed a bit further up through into 119. We've now consolidated these highs. At this point though, euro dollar being this high with no drop is a bit eerie, I would say, right? So euro dollar positioning overall is very fully invested. So we're going to have a very hard grind to get any further upside in the euro dollar. Hence the same deal like I was talking to you guys once we pushed 120, very thin air. We came down. I've probably said this like 800 times now. But the point still stands. We've still had further push into euro dollar longs, and yet we haven't really made ground beyond 120 at all. We've very much struggled to get back up there. So I would see, again, the euro dollar move lower, lines up with pound. And like I was talking with Pedro, I think from here, dollar yen as far as the yen intervention, I think that's going to take another push up towards 160 now that we have the election stuff out of the way for Japan. So most likely we've actually got a move to the upside with dollar yen. That's what I'd be looking for right now. So near-term dollar strength after the capitulation from last week. We did have that slight push through this level, but we have come into this area just here with that lower wick and these tops of this wick. And we've very nicely sat in here with a couple lows. So you've got like basically a triple bottom through here, which tends to imply we're going to get a dollar push back up, right? So overall, I would see euro dollar downside from here, pound downside, dollar yen upside, oops, And similarly with Aussie is kind of the only mixed one. Now, I must say, I wish I held that the long that I took when we were talking yesterday. I pretty much bought the bottom, but jumped out way early in the end. But I didn't expect we'd get that aggressive of a push. We actually broke the prior highs, which were, so at this level, so about 95. We only marginally, but it was a very, very aggressive push higher. So yeah. I think dollar upside is next on the cards. Put it that way. I think you're muted, Rich.
I'm muted, sorry. 1-0 for LJ. Yeah. So like I was saying with GU, it's we still haven't produced on the hourly, the 4 hourly and on the daily any we haven't created new higher highs. We've created lower highs and lower lows with a little bit of an attempt to try and push higher from yesterday, but now we've slowed down. We've come back into that order block area from when was this? This was Wednesday the 4th, so last week Wednesday, and we've significantly slowed around that area, trying to push a little bit lower. So I would want to see it push down to the consolidation that I had, or the area that I had down 134.520 to 134 flat. I would have loved if GU could come down to there. So I had like an area of consolidation over here that we had a very strong breakout off of, and then we had this base area where we reacted once and then a second time off of. I would like to see this get broken and then us working our way down to here, because then it will provide with proper downward flow. That's what I would like to have. I don't generally like this kind of action over here, where just as it looks like it's establishing a new upward trend, it breaks that trend and starts, falling lower yet again. So either have something like this or something like this. This higher low, lower high, lower low, higher high, higher low. It just doesn't. I just don't like it. So yeah, I agree with you. Definitely, we can definitely come down.
Yes. So the same deal with the pound situation with the political sitch as well. Central banks, both from Bank of England, ECB, we've had the shuffle about and people digesting the new Fed chair, potential trajectory as far as that, the new Japanese prime minister, or continuing prime minister, but she's taken the lower house, right? So she's got more control. And then we did have the capitulation last week with the whole SAS kind of freak out. Just we were due a bit of a correction in general, right? So we've got that flushed out, which is good. But yeah, we definitely are. Put it this way, I can see many reasons for the downside across each of these pairs. I can't see much reason for propelled upside as far as any kind of catalyst, for pound to push higher, euro to push higher. Aussie dollar is the only one with the commodity aspect and potential further rate increases. However, I think already the market is starting to call bluff on that, just like we had the big downdraft. Yes, part of that is because of the high beta aspect, which came down with the with stocks, US stocks coming off, the risk off aspect. But yeah, path of least resistance from where we are is probably to the downside overall. So I'm just trying to bring up some of the other research pieces that I had. I'm just trying to find the folder. Where are they? Okay, well, we'll go with these two. So, yeah, so like Zeisler was saying, so interesting as I have the opposite view on these pairs. So this was, first of all, this one. So what I presented to you guys yesterday. So the thing with the euro positioning is the longs have increased to 24 billion by Feb 3rd. 2023, longs exceeded 25 billion before a rough 112 to 105 euro dollar drop. Same back when we had the 122 to 95 cent fall. We established a record of 31 billion back in 2020. Right, so anytime we're kind of getting up here on those established longs, pretty much we got everyone that wants to be long euro dollar basically in the trade already. So same deal with this. Euro dollar fell from 125 towards 108 after longs reached 23 billion in 2018. Right, so we got ongoing situation of that, further fueling potential for a correction. So this comes down to just a positioning type thing. Very much the general macro picture would say that yes, euro dollar should be higher, just like I had, which you always get those blow-off tops. So like I said for you guys, I think I've still got it here. That was my Q1 target. We did actually reach that perfectly within the week there, very nicely. But the thing is, with euro dollar, you then, or any currency asset in general, you always have the positioning aspect. Just like once gold, silver got too top heavy, naturally you're going to come down just because there's no buys left. So as far as seeing further highs from here is probably very, very difficult. So you're much more likely to see something like that, and then potentially even a move back down to 116 or so, rather than up into 120s again. So it's just something to keep in the back of the mind overall. Similar with some people watching silver. Let's get rid of all this mess. We're looking for this. This was the top end thing. Again, this comes down to positioning, flows, size of inputs, all that kind of stuff. We're looking for move up into here, some kind of top, draw right down. We did get that very nicely. Now expecting another move up to 100 plus for silver at this point would be very, very unlikely. Right, we might get like a tap around the 100, but a sustained positioning above that, don't count on it. I'd rather take positions on gold for further moves higher. That definitely has the overall backing, right?
Yeah. Gold has been a bit slow today, though.
I think most things have. I think we're in a bit of a consolidation. We're kind of just in like a bit of a neutral zone after the recovery of last week's capitulation. Euro's eventually drawn back up. We've had the ECB. We've had the Bank of England. Same with Aussie here. If we go down to like say let's go even to a 1 minute, right?
Yeah.
Like, what are we doing?
Very much up and down.
72, 74. If we go down here a couple of hours ago, like 65 to 79, that's like the peak of the movement. But that's also after yesterday's massive run higher. We just got that general retracement. So the past little bit, very much just oscillating in very tight kind of spectre. Even for the euro, had that downdraft here. It's still only like 10, 15 points, the euro. But everything has slowed down in general.
We're waiting. That's the worst thing, I think. It's the wait. You can see something's building, but you have to wait for it to confirm.
Yeah.
Got a question here from Wesley for LJ.
What's this? Hey LJ, options charts probability for NAS. When do you mark that level, and when do you refresh it? Just interested in using it as a confluence on indices. So generally around this time of day. So if you go to the site, so optionscharts.io is just the main one I use. Right, you just go to optioncharts.io, you go to index. If you guys are trading the S&P, you can look at the S&P. I typically trade the NASDAQ since that's the biggest mover these days with all the big tech players. Just go up here to option charts, and then you go to probability distribution, right? So you can go to expected move, which basically shows the same thing, but it's a little less clean. You put in the distribution, very easy to see, 25,255. So that will shift a little bit going towards the actual date of expiry, so up to the couple hours before. But normally once you get to about this time, it should be pretty stable, right? Most players are sort of taking those positions, that kind of thing. If you check this, 3 or 4 hours before, it might have a slight variance of 10 points or 15 points either side, depending. But yeah, so around this time is when I'll generally check it, and then it tends to stay pretty much stable from there, right?
Yeah.
Then I'll tend to mark it out on the chart. So if we go back out to the 15, put that stuff back on. So you can see today we're pretty much right there on the level.
Yeah, 255.
So these are the kind of days, when I don't really like using it as a indicator. Potentially if I'm seeing like a very bullish signal, like to be honest, this actually looks like we might get a run up towards these highs.
It does.
I would use that as like a base level, and I'd look to see that level actually supports our price. So kind of like yesterday where we had the level basically through here, right? Just by that support turn resistance / either side kind of area with the gap there. We did dip down like I was looking for. Either we get that press up, dip lower, either come back into this level, or we meet basically a relative double bottom. We did get the relative double bottom. People coming in to buy up stocks through there. We saw the push higher and the break up into the higher resistance band that we had outlined. So today I'd be looking for this level to hold again relatively, and then a push through. So you might see something like that, and then a drive higher.
Yeah, unfortunately, yesterday with NAS, it just didn't present itself clearly earlier in the day, because it had already been trading around that like options expiry area, and the same thing again today. Also, kind of still just trading around that area as well. So it kind of like puts a pause on the idea of you've got something to aim for. So you can't just aim for the options expiry. If you're looking to trade towards it, you have to kind of like look a little bit more left to see, okay, we're already there. Like you said, do we have something that can be supported off of? Do we have something that it can be resistant against to try and force it to go lower? But in general, I have found that when trading NASDAQ, when it has a day like today where it's really consolidating, the whole of Tokyo session is consolidating, the whole of London session is consolidating, it's best to just wait. It's best to wait for the New York session to open up, have its initial volatility. It's going to probably either push bullishly or bearishly, dip down, imagine. So assume it dips down with open. It takes up some liquidity at the bottom, and then it starts pushing higher. So if the expectancy is to push higher, awesome. don't trade the open itself. The open itself is going to have major volatility. It's going to go in one direction, massive wick, massive candle body, and then it may just turn around. So I generally avoid the open, and I give it like at least 15 minutes, 10 to 15 minutes, just for that initial volatility to kind of like subside. And then I start looking at directional movements. Then okay, so if it's going to go bullishly, it needs to start building a bullish structure on the 5 minute or lower. And if it doesn't do that, then I'm not going to look for buys. I will then in turn look for sells. But then the same thing, it needs to create a bearish structure after the open. Otherwise, I can't trade it. It's either going to be sideways or it's going to be too volatile for my intraday trading style. Let's rather put it like that.
Yeah. So I typically say when you're trading basically at the options level, it tends to be like just like we had with this, where you get like a explosive, either it's the upside or the downside.
Yeah.
Right. So yesterday we had right to the upside like that. Today, this is where the level is. So you'd potentially look at like a upside trade, a break of these highs, and go back up to these tops through here, right?
Yeah.
Now, conversely, if that breaks down, you put a sell order through here to trade back lower. Now, obviously, the risk reward to the downside is probably far less than to the upside. So you might even just wait for something like that and then look for a full push. Right. So you got to also observe the general market structure as a whole on top of where the options levels are. So last week we had these options levels where we were trading far below the options level, right? So that ended up being a really good entry through here to even just draw to the options level. And then the idea is that if you then get a break and run going into New York, you can keep holding it, right? Up to wherever the next technical structure to the left of the chart is. And same with the next day, we had the options level down here and we're sat just above. So you could then look for that pull down and you either trade it to the options level right here, or you could trade it right lower back into support of the prior structural levels to the left of the chart. Right. So that's pretty much how you want to do it. It's not going to present a trade every single day, but it does have a very, very high success rate and input rate, which is very nice. Like we call it 80% plus, which is very rare to find
NASDAQ
in like a
solely. And by trading NASDAQ solely, you get to see exactly these moves as they start printing up. And I feel like I have a pretty good success rate when it comes to NASDAQ. So I got a trade this morning, a very, very quick buy into yesterday's high point. Let's just see if I can
bring it up.
Yeah, but I need to first. I need to just. I didn't mark your.
That's right. I'll go back to mine for a sec.
No. We can do it here. So
I was just going to say. So the two kind of trades I'd have for this is either wait for that dip lower, buy back into here. This trend line through here is actually a very longer term line. So going back to December, and that's basically the area we've been trading above, right? So that's kind of the breakpoint area, and hence once we did hit that on the recovery, we closed there for the weekend, gapped above it, came back in, right back above. So it's probably kind of hard to see on the 4 hour there with everything, but
so I'm going to mark up my trade of last night.
I would say with this, most likely you'll get a break of here of the recent highs rather than a pullback, and sort of take that kind of a a trade up to the relative prior structural highs back last week, that would be my preferred trade with this structure. So
awesome. So, all right, I can bring mine up and then I can show you exactly. I'll show you my trade of last night and then the trade of this morning as well. So it's the same idea that we just spoke about. Richard, fellow South African, greetings. Simply Mentor Facts, what's up? Yeah, I have a very distinct South African accent. Apologies if it's you know, like grating your ears. Nice to hear that accent.
bloody Saffers, honestly, mate.
Yeah, man. So many of us. Well, we're thankful. We've got 32,000 traders from South Africa that trades with the Fiverr. So
just get better at rugby.
What do you mean? We should get better at rugby. We're literally the best, mate.
Can you guys donate some players to the Wallabies, please?
We can give you some coaching staff.
We need some help. That's actually one of the biggest things is all the Australian coaches end up going to coach England, South Africa, Argentina, whoever it is. They get all of our plays, all of our everything. And then they go and play us.
Better contracts and they'll stay.
And we just get dominated. Oh, it's ridiculous.
It is ridiculous. But
the number of Wallabies coaches that have gone on to take other teams to like a World Cup instead of us, it's wrong. It's wrong.
It is.
No.
It very much is. But it's one of those where it's unfortunately the reality of the industry at the moment. Let's get back to the trade from yesterday.
Yeah.
Yesterday, we had this coming out of Tokyo, this slow downward descent, and then at some point, we actually started volumetrically pushing lower. All right. So I remember taking a sell somewhere over here on the stream account yesterday, which worked out fine, which was nice. I did cut it a little bit short, but kept to it. However, so what happened was we came all the way down into an area where we had recently had a base. So for everybody who knows the way that I like trading, I look at bases. You have a rally, you have an attempt to break that rally, and then you have a continuation. And this is exactly what we had here. This was from Friday. So this was coming out of the London session of Friday, going into the continuation of only New York. So we had a base. We had a break of that base, and then we had a retest and then a continuation higher. So the idea was you want to see whether or not price is going to come back to that point, which is exactly what it did. Now, it came all the way down into this area, and then it attempted to break higher, failed, attempted to break lower, failed, and then started to push up. So this downward channel basically that we had, like even though this was the initial downward channel out of Tokyo, we did break that channel over here. We did break back into it at this point. So I was waiting for New York to show me whether or not it actually wanted to continue pushing lower. So as we were coming closer to New York, we had this downward push over here. So I just had this area marked up down here as the last port before price tried to push lower. So this was the failure point of trying to push price lower. What happened with the opening candle basically just wicked into that area, just took up a little bit of liquidity here at the bottom, and then started to push volumetrically up higher. So what we had was a high swing over here that got broken, and a low swing down here, which is this line, if I just move this out of the way. So you had the low over here, and you had the high over here. The low just got wicked. So because the low got wicked, I don't see it as, I see it more as a rejection rather than a continuation push through it. So we had the rejection, and what we did have is we did have the close above the recent high. So all I'm waiting for then is, now I know that we are most probably going to go bullish, because when we had the attempt to push bearish, we had this massive wick rejection at the bottom of a recently established low area, which, as you know, also aligned with that previous area from Friday. And anyway, so now I want to see structure be created. So what are we looking for? We're waiting for either a higher high or a higher low to be created. So there's the higher high. So you already have the reaction at the bottom. You have this push higher, which breaks the previous high. So this is automatically a higher high. So now all you're waiting for is just a higher low. Higher low gets created here. And then you have this candle, this bullish candle over here, which is the signifier of price continuing higher. So what do you see? You have a reestablishment of a rally. You have the base, which is that attempt to try and push price lower again and then failing. And then you have the continuation of the rally on that candle. And then all I do is I just enter on the close of that candle, looking for a 1 to 2 RR trade, and that's exactly what I got. Got in at 25,082.62. Slight delay, as well as a little bit of spread. And it never once came back into drawdown, basically. What it effectively did was it had a break-even bounce, and then it just continued on going higher. What I could have done, and which is something that LJ and I spoke about previously, was having, let's say, effectively your trade split in two. You have one runner, and you have the one that you take according to your rules. So my rules is 1 to 2s, static, take profit, and stop losses. What I could have done was have a double entry, or have, for argument's sake, this entry reach its take profit and then have another order sitting and waiting at a break even with the intention of running. That was another thing that I could have done. Or thirdly, what I could have done was I could have split this entry of mine into two by taking out half of my trade at this high point over here. So let's say I was in one lot as an example. I take out half a lot and I let the other lot just run. But then I don't adjust my stop loss at all, because you can have these break-even bounces. So in that case, I could have left this one to run, but I'm just not comfortable holding a trade like that, because it's not something I've tested. I haven't had the opportunity to like really go and sit down and do the maths to see whether or not it's really, like if there's any like validity to it at all. So that was yesterday's trade. That was a good one. And then today, this morning, what we had was, if I just move that out of the way ever so slightly, we had the low, which was created by Tokyo. So pink box is Tokyo. As we came out of Tokyo, we tried to test that low. We wicked off of it and then started pushing up a little bit. Along with this initial move up, we did break that previous high swing, which was the high, almost the high basically of Tokyo. So Tokyo did eventually break and we did eventually break and close above, but then we rejected immediately. Price then started to push down ever so slightly, and I thought to myself, you know what, I think we're probably going to hit exactly this area over here and then react off of it. It just seemed very slow, and I thought to myself, you know what, I'm going to try and buy into this previous area of interest that I had all the way towards the left, which also kind of, if I just draw up this for you, also coincided with that base area over there that we had a singular reaction off of as well. So, oopsie. So high point, a new push lower from yesterday, base area, price tried to break this re-establishment of a potential downward push. Price did come back to it literally at the open and then reacted lower. So I thought, okay, if we're going to be stuck here, there is a potential that I could try and buy back into that area. During London session, I do 1-to-1s or 1-to-1.5s. This ended up being a 1-to-1 trade, which I took on the 15-minute, not on the 5 though. So if I can just move that out, then you'll see it. It'll make a little bit more sense on the 15. So you have the re-establishment of a rally after a reaction off of an established area. You have the base, and then there's the candle that proves the next follow-up rallying segment, let's rather say. And then on the close of that candle, got a little bit of slippage. Once again, also I confirm, okay, it's closed. I have a look at my terminal. Okay, it's definitely a bullish candle. Okay, get ready, draw all of my lines, and then enter. So there's always a slight little delay, and then you get also spread as well. And then, yeah, this was just a 1-to-1 trade that I took. I could have had my stop loss a little bit tighter, and it could have been a 1-to-2, but that's just I just don't trade that way during London. But yeah, those were the 2 trades from yesterday going into today.
Brilliant. Would you? So if you've taken your 2 trades today complete, that's it?
No. So I've got one trade. I've got 2 trades for yesterday, and I've only got 1 trade for today. So
okay, because I'm wondering if we do get the break of this, like break and run, would you join that, or would you wait for your typical candle setup?
I mean, we are reacting effectively off of this last push area. So if I bring this something like that, and just take into consideration the last candle. Wait, maybe it will be a little bit more clearer on the 5. Yeah. So if I just take the last 2 candles before we had this real attempt to push higher, and I just wait for price to come back down to it and see whether or not we're reacting off of it. Right now, we are reacting off of it. We have had quite the bullish push now. So what I would want to see is I would want to see price break above this. So 25,324. I would love to see price break above it and then try and push down and see if there's an area like maybe over here where price can come to retest and then push higher. But it's getting closer and closer and closer to the New York Open. So the likelihood of us having that volumetric push now, I think, is less.
Yeah, fair.
So I would rather wait for New York to open up, and then once New York has opened up, so New York opens up over here. I would rather wait for New York to open up and then just see what it does from there.
Yeah, fair. Definitely agree. It's going to depend on retail sales, right, coming out, which I gotta say, I don't have a broad barometer on that today. You got weather effects, all sorts of weird stuff right now. So, yeah. How are we doing, Griff?
What's up, Griff?
I'm doing good. How are you guys?
Going strong, brother.
Yo, strong. What is good? How are we doing, people?
How we doing? How we doing?
I've just moved into my new place, so the background's a bit different. And I was thinking about you, because my Wi-Fi, I get like 80 megabytes per second, and I was like, I wish I could just send a couple megabytes Will's way.
Jeez.
Yeah.
Dude, at the same time, you've also got a nice snazzy haircut as well.
Oh,
looking.
I was about to say, did you get a haircut?
Yeah, I got a haircut too.
New Griff, new gaff, new trim.
Yeah, get a bit of everything. Yeah, I let my hair grow really long, and then I just get a haircut like every 2-3 months.
Where did you move to?
I had a haircut when I came out of Hong Kong, but then I may just go back to growing it. Can't be asked to get a haircut while I'm out here.
Sorry, Griff. Are you still in Wales, or did you just have you moved to a different country now?
I've moved to Wales. So I was in London before.
Oh,
I was going to say,
okay.
I was going to say, I'm sure that I remember
Other way around.
Yeah, so I grew up in Wales, moved to live with my wife in London. Now we wanted to buy a house, so we bought a house in Wales, and I've taken her with me back to the homeland. But we bought it like a year and a half ago, and we've just been renovating it for ages and ages. And we've moved in now just because we're so excited. But there isn't central heating or anything, so it's really cold in February. We've got all these plug-in radiators until we can get proper heating. But yeah, we're basically just camping in our own house, and it's really fun.
Love it, man. Green Caddy Cymru, come on.
If you look at like the jersey or the who coats that jacket that you're wearing at the moment, it looks fluffy as all hell. Like
this is all you need.
Yeah, unfortunately, myself and LJ can't join you with the fluffy jacket gang because it's boiling hot here in South Africa and it's boiling hot in Australia.
That's crazy. I can't even comprehend.
Yeah. So I was on FaceTime to my brother earlier, and it is piddling down with rain. Like, it is super wet and like really cold down in Wales at the moment, or down in Pembrokeshire, part of Wales. I don't know what it's like up with you, Griff, but I was saying to him, he was wearing like full on like waterproofs top and bottom. I said, yeah, give me a minute. Let me just go out onto my balcony and chat to you on my balcony in the warmth with my t-shirt on. He was like, I hate you right now. I was like, yeah.
Too good.
No, you can send me a couple degrees Celsius, and I'll send you.
I'll tell you what. Yeah, let's switch. You send me a couple of megabytes of Wi-Fi. I'll send you a couple of degrees of sun.
That sounds like a great deal.
Dude, I will make that deal.
If only we could actually do that, because it's a win-win.
Yeah. We'll do a share plan.
Yeah, family plan.
Will, how did your gold trade go this morning?
Really good, mate. Really good. Actually, I was bringing up my trading view, but let me change my mind. Let me bring up my MT so I can show you guys, because EU didn't go as well as it could have, which is a shame. Let me just bear with. Which it was annoying, but like I said, I didn't mind it too much due to the fact that. Why isn't he doing that now? Come here.
While we're waiting for Will, Griff, with you moving and camping and just enjoying life at the moment in the North Pole, with your frigid weathers and non-heated flooring, have you been in a trade recently?
I should have been, Richard, but because I've been so busy moving, I missed it. And of course, it was
the one time.
Yeah. Normally, I'm not too strict because I'm unlikely to miss anything. But there was a trade. Hang on, let's see if I can share my screen. I haven't really had a proper chance to check the charts. It's just been so hectic because it's not like a finished property. There's still so much to do. So I've just been attaching doors, painting. You know what I mean?
Oh yeah. Do I know how you feel?
Suggestion for you, Griff, if you want.
Say again, sorry.
I have a suggestion for you if you want.
Yeah.
Okay, so the suggestion is you invite myself and LJ here, dying from hellishly hot weather. You invite us, and we go and put up a door for you, and I don't know, maybe paint a wall, something like that, and
buy yourself some time in the cold.
Yeah, just so we can experience snow.
That would be a lot of fun. And maybe that would be another good exchange. I pay you guys to come over here, and then I buy myself a couple days of builders, a couple of renovation partners.
Cheap labor.
Yeah.
Exactly.
I mean, I don't know how cheap flights would be. Doesn't sound cheap to me, but it sounds fun.
Either way, any of you guys in Wales right now? Griff doesn't have doors on his house, so he's free to rob. very easy entry, guys. So, just saying.
There's an opportune moment is ripe for the taking.
He does very well with his trading. He's probably got a lot of trinkets around there. You guys can,
I've just I spent like a whole day just setting up my desk.
Yeah. Dude, no, that's
so
honestly, that is actually one of the worst things. Anytime you move, setting up your computer system, your desk, screens, everything. Biggest pain in the world, I swear. Honestly.
Yeah, God, the cable, plugging it all together, putting it all together is fine, but the cable management, it took me like 3 hours to try and hide it.
Yeah.
I only had cable ties and like some sticky tape as well. I was not equipped this time. Normally it's quite fun, you spend a day doing it. It's like playing a game, but this time it was not fun because I felt like I was wasting time.
Not a fun game. It's not a fun game. It's just raw punishment. It's like, come on.
There's this game called Mini Motorways. It reminds me a little bit of that, and I like Mini Motorways. And I don't mind doing the cables, but yeah, because I just had so much more to do, like doing like cable runs and like cable ties, I was like, this is so not a priority right now, but I just had to get the cable management done, otherwise I could not sit here happily.
Yeah.
Dude, there's nothing more stressful than bad cable management.
Oh,
even to look, it's just stress. I hate it.
Or just bad Wi-Fi, right?
Oh, dude, bad Wi-Fi is the worst.
Dude, that's the worst. Yeah. Bad Wi-Fi is actually legitimately upsetting. Like, I don't get upset by many things, but bad Wi-Fi stresses me out to the point where I get emotional over it. I'm just there like, there's no excuse for this in 2026.
The way that I see it is that like my generation of people, I'm 38 now, so my generation of people, we experienced life without internet, we experienced dial-up, we experienced slow internet and like fast internet. So the thing is, like what we're experiencing today is like, you can imagine that dial-up sound where you had like, I don't know, like 56K upload speeds and whatnot, or download speeds. So the thing is now, if you have like, I don't know, a 1 terabyte line or a 1 gigabit line, let's rather say not terabyte, 1 gigabit line or like a 500 meg line or something, you feel super spoiled. And then if it just drops to, let's say, 1/5 of that, and then people lose their minds. And it's just like, wow, look how far we've come. What first world problems do we have? Oh no, my internet speed is only...
when your career is depending on it, it's a bit different. If you're gaming, then yeah, fair. But when your career is on it, I feel like it may be a bit different.
Yeah, we've gotten so spoiled and soft when it comes to internet. So just the slightest inconvenience, and we're like,
It's very true.
Yeah, I feel you, mate. I feel you.
But I suppose the trouble is like the demand on download is so much more, and then also even back then it used to like you get massively slowed, but still work, but be really like painful. Whereas now it tends to be 100% or it's just failure.
Zero.
So it's very binary. It's like
it works.
all good or death.
Yeah, there's no happy medium, unfortunately.
Yeah,
exactly. So. It's not like, oh yeah, it's working, but it's really slow. That doesn't happen.
Yeah.
The question is, it's not working. Why? Why is it not working?
Yeah, exactly. Stephen, hey William, what's good, Stephen? How are you doing? What is good, my man? Bam. No, not this one. Where was the Kanban comment? There it is. William looks like he's just woken up from a 5-day bender and doesn't know what day it is.
Typical
Fair.
William behavior.
Literally. Yeah, I've just got out of the shower, man. It's my evening shower routine, which is like it's like the sweet spot, because once I get off stream, I have some food with the missus, and then we just chill for a minute, and then I go to bed. So I don't have time to do all the evening wind down prep. So I do it before the stream. And it works quite well. So yeah, apologies guys. You've got like sort of shower mop head, Will. So
Let me just wind down before I go to work.
Yeah, you got like wind down before I go to work, Will. My body is wound down, but my mind is wound up. So speaking of being wound up, I don't know if you guys can see my MT screen okay?
Yeah.
But oh man, EU was a frustrating little shite today.
Dude,
so my gold trade that you asked. So again.
Walk us through it. Why was it annoying?
So you asked me about my gold trade. Now my gold trade was really nice.
Yeah.
Gold. I had this area here, nice consolidation zone. We broke and closed above it. Carried on, broke and closed above this high here. Mwah, chef's kiss, perfection. Again, you know what my break and close strategy is. I had it here. I, closed on this candle, opened, had a bit of a pullback, instantly opened it up on that area there. Also waited for the pullback here. Got the pullback, entered in again on the scaling of the break and retest, break, close, and retest strategy. So I'm in on 2 trades here. We took about $200 out of the market, I believe, on gold on this big move up here. Then we continued to break and close further above, but I didn't like this wick. So I wasn't keen on the wick on the 5-minute. On the 15-minute, it looked even less. Like it looked even more grim. So wasn't interested whatsoever, because now on the 15-minute, it just looks like a massive consolidation zone. And as you guys know, I like to see 15-minute confirmation as well as the 5-minute confirmation. So that as confluence. So that just didn't happen for my re-entry on gold. Now, let me just get my history back up. Now, as you guys know, I banked $350 on this. Now I've got a net close for the day. So far, we have got news coming out in about an hour, 9 minutes. So probably won't trade, not sure yet. Shouldn't have lost $60. This really wound me up, and I'll explain why in just a second. But my gold trades, I took $30 from the first initial one, which was a 0.15, and then we had a 0.2, which took $220, which was this beautiful one down here, which was the break and retest. Now, Euro is a little bit different, a little bit special. So we had this break and close above, pull back. Beautiful price action this was. Entered in here, entered again just because it was a nice price action and I wanted to get in on a second order. And then we continued on up, and I thought, you know what, screw it. We've taken $84 and $48. It was like we were looking around about a $400 move across the 2 pairs and the 4 positions. We ended up closing for like $360, and I think I paid like a couple of like $10, $20 commission on it. So we ended up banking like a net of $340, $350 on it. So pretty happy on that. If you guys want to go rewatch it, it is this morning's open of the stream, all live on stream with you guys. Then we got the break and close above. It looked fantastic, by the way. I wasn't keen on this move here. Didn't like that. So I was like, right, okay, I'm fine with that. I'm staying out. And then we got this candle close here, which broke and closed above all of this. So I was really happy with that. And I thought, you know what? If we can pull back in a slow and steady manner, like if we can dribble back and like looking at the price action and the candlestick characteristics, we've got very bullish candles and very slowly bearish. Okay, hang on. And slowly bearish, almost stagnating bearish candles. So I was pretty happy. And then we got this big wick here and a rejection. I thought, nice. And then we got this last one down and it started rejecting. I thought, screw it. Yeah, let's do it. Went to open up a 2-lot position, which I should have initially had. Ended up opening 5 lots. And I was like, right, well, why has it done that then? Why? Like I haven't used 5 lots in about 12 months. So I ended up closing it almost immediately. But of course, this tiny wick was minus $40. Paid $20 commission because it was a 5-lot move. So for I think it's $4 per round lot and 5 lots in, so $20 commission. So ended up losing about $60 on that just for idiocity. Re-entered the trade with 2 lots, which was then pay. Oh, what's going on? There we go. Which was paying $8 commission, which is a bit more like it. And then we ended up taking a $76 loss. And like I said to you guys, my stop loss was under here. My discretionary stop loss was a break and close under this level. What did we get about 10 minutes later? We got 5 minute. No, we didn't. 5, 10, 15, 20 minutes later, sorry. 20 minutes later, we got the break and close under. Closed on the open of that candle because that is my rules, guys. You know, if I get a break and close under, it's an invalidation. Therefore, it's my discretionary stop loss. I'm out of the trade. We ended up wicking again, wicking one more time, moving up and giving me a break-even exit opportunity. However, it was just, you know, I exited before that happened for a good reason as well. But nonetheless, you know, it is what it is. So I took out minus $76. So in real terms, I should have only had a $76 loss losing trade today. The $60 I shouldn't have lost. So I shouldn't have had $136 loss. It should have only been 76. But, you know, look, if you fat finger the market and you don't concentrate when placing orders, that's what happens. You know, you make mistakes, you're going to pay the price for them. However, we are still $350 above the 97K, which means for today we've made $219. And if I get my custom period up for the past 10 days, so for February, we are up $385. So, I mean, we're up for the month so far, just about. Which is pretty cool.
Nice.
Probably won't. Yeah, probably won't place another trade today. We'll see. Maybe I will, maybe I won't. I can't see it, but we'll see how it goes.
Yeah, fair. I can see that. I think, the thing, Euro's pretty weird right now. I think we might tap lower.
Yeah.
First of all. So, yeah. I mean, I think that's fair. I'm probably going to be waiting till retail sales at this standpoint as well. The only thing I like that I'm seeing is basically the NASDAQ. Potentially with where we are. So, like I was saying to Rich before you guys jumped on, like we're now pushing up, potentially looking to break relative highs from last night, very late New York, right? So if we get the push through from there, then potentially take a long back up to this cluster to the left. The options level is down here for today. So either a break on that and go long, or else a dip lower coming into New York and then look to take some longs from there. Outside of that, I kind of see euro dollar potentially coming down a bit first before going higher. And then the same deal with the pound. We just had this tick higher just now. We had a good shoot up. But again, each point we're kind of failing to actually kick on.
Yeah, I'm glad I didn't buy the pound earlier because the pound would have just ripped my stop loss and then moved back into profit. So yeah, the pound was a bit annoying. So I'm glad I think I picked the right pair with euro because I managed to bank some profit out of it. But you know, it was nice. So I think I did it on TradingView was my my analysis. You know, we got this really nice consolidation. Could have been buying from there, but it wasn't great on the 15 and the 5. I think I wanted to be buying, if I remember rightly, around. Where was I looking at buys from? I believe it was around this level. I'll bring my trading view up in a bit. And it just melted, and then we had this move here and just pumped back up into my break even. So I would have been caught up in the pound, and I'm glad that I didn't buy it. EU, I'm glad that I caught this move. EU was a lot smoother, a lot more textbook in my opinion. But I don't know what it's going to do now. I want to wait for high impact. Same goes with gold. Want to wait for high impact. You mentioned about NASDAQ. NASDAQ looks beautiful on the 15. Like really, really nice.
Like as far as all the majors and sort of general larger assets that we look at, like NASDAQ is pretty much all I'm really seeing now is like standout.
Yeah.
Yeah.
Yeah, I think NASDAQ right now would be.
What's that, Will?
Go on. I was just saying, I think NASDAQ at the moment would be the only one that I'm looking at.
Yeah. So I think NASDAQ today is probably going to be my next number one. I think gold overall, we seem to still be consolidating. I don't know if we'll actually break the highs. I think we'll get a dip lower first before moving on. Yeah, similar deal. Like euro dollar, not too convincing. Aussie dollars had a massive pump, probably due for consolidation. Pound is kind of mixed with some of the political stuff going on as well. The same deal with dollar yen. I do potentially see higher moves for dollar yen, but probably only after we actually, where we are now, meeting some of these lower support areas before driving higher. Probably what I'd say. Which aligns with basically euro dollar coming back down, pound dollar as well, back into support before reloading. Aussie dollar has had an absolute ripper from last week. We need a slight pull down before moving up. Unless NASDAQ absolutely breaks and tears, which you'd see Aussie dollar getting dragged up with that, pretty much. So
yeah, I'm just looking at euro yen as well. Euro yen, dude, it's sinking. Like I don't know what's coming out in the euro at the moment, but the euro seems to be, I don't know, weak at the moment. Especially euro yen on the 4 hour, especially. It's like pulling back and it's actually dropping below that consolidation.
So I think euro yen is just aligning with dollar yen, right? So it's just the yen appreciation overall.
Yes.
Same with even AUD yen has had that same pull down. So yen pairs across the board are appreciating right now, right? So it's more the yen story rather than euro.
I like the look of euro dollar for buys, though. I think it could be setting up on the 1 hour like a larger flag right now. If we were to break the low we formed at 4 p.m. on Monday and form an immediate retrace, I think that could be pretty good for a buy. I do like these kind of larger flag patterns on the euro pairs.
Wait, hang on. Show us, Griff. Where's your chart? So I want to see what you're saying. Because hang on, from Monday.
Let's see that.
This low here on Monday. So if we.
Oh right, like end of Monday. Sorry, yeah.
Yeah, sorry. So if we just, of course, me saying Monday 4 p.m. isn't really helpful for you. It's probably like early Tuesday morning.
That's when I was thinking before we like ran higher. And that's what I was saying. It's like, where's the flag? Yeah. Okay.
Yeah, so if we just break this low and then key part is the rejection, if we get a really clear rejection, that's something that I would be looking out for because I haven't had a trade on EU, which is nuts, since September of 2024. I don't know if you can see along the side there. These are all my trades. You can see it's fairly frequent, quite often, quite regular. And then 2024, it started getting more infrequent, and then 2025 just nothing, not a single setup. But these flags, larger flag patterns on this pair, I found that they tend to work out quite well. Same with GU. I don't know what it is, but when you get this kind of pattern, it does like to continue, in my experience anyway, on the hourly.
Nice. Dude, yeah, hang on. Since 2024.
Yeah, September 2024 was the last trade I took on EU.
Brother, what?
I know. I'm working on it, LJ. I'm working on a new strategy because I'd like to trade.
Because I was just thinking, like, last year we had like we did have some big momentum moves on EU in particular, right? So yeah, that's surprising. I thought you would have caught like some of that on on the way from like 104 to 117, kind of somewhere, right?
Yeah.
Dude, that's crazy.
It's just not formed the patterns that I'm looking for, and I need some new entries, I think.
Yeah, fair. God damn. But yeah, so
how does it make you feel when you're not getting entries? Like, do you feel frustrated by it? Like, do you think, like, do you feel like, oh god, I wish I had an entry right now, I want to be in the trade? Or
because
are you like,
there are so many like close calls where I nearly get a setup, and I'd love to enter. Sometimes I want to enter just because it nearly set up, but then I wouldn't be following my plan. So yeah, unfortunately, there's nothing I can really do about it. Like, if I were to take the trades because there are setups forming, just none that high probability enough for me. And yeah, if I started taking those, I'd just be losing money. So it's better just to do nothing in the case of EU with the strategy I'm trading at the moment. But yeah, once I've settled into my house a little bit, I'm going to be able to have more time to kind of develop some more volume profile strategies is what I want to do. I think I mentioned it before. And LJ, you've spoken about volume profiles, I think.
Yeah, fair enough.
That's fair. That makes sense. Because I know a lot of traders get frustrated that they cannot enter a trade because of their plan, whereas a lot of traders actually love that they cannot enter. They're the complete opposite spectrum. They love the fact that they don't have to enter. They're like, yeah, it's like according to my plan, but actually it's not 100% according to my plan because it's super close, but not quite so cool. I don't have to enter a trade today. It's almost like I speak to a lot of traders, and it's almost like they see entering the market like they don't want to, like a chore, like they have to. It's like literally like going to work, like, oh, I got to enter in the market today. And I'm like, dude, really? Like I love being in the markets. I love the high stress of being in the market, but they just they want to get it over and done with. They want to be in the trade, stress out the trade, and they don't want to even think about the market. Then they're like, screw the markets. I don't even want to look at it now until until whenever.
Yeah, like give me that cortisol. Come on.
Yeah, it feels good to be in a trade, and now for me, it feels good to be in any trade, winning or losing. Because it feels a bit silly to not be getting involved when the market's moving so much, just because I'm following this plan, which is perhaps outdated now, because market conditions do change, and yeah, I need to adapt with them.
Yeah, that's where I think it's good having like a couple of different sort of regime profiles per se that you can like deploy when you see that shift, right? So you can always still be in stuff, but you can still rely on it being robust, right? And just knowing which regime you're in. So
yeah, that makes sense. Having a couple different strategies to use depending on the market conditions, and that's why I feel like expert advisors don't work like super consistently. It's because it's just it's literally a robot trading, and it can't see when the market conditions are changing. So if you're an experienced enough trader, you'll know when to turn that on and off. But then at that point, it's what you're saying where you need to know when to turn your strategy on and off and switch to an alternative one.
Yeah, that's the thing. I've never liked them as well, because you got to babysit them, basically, right? Unless you're running like some mass aggregation algo, bunch of computers, you've got ridiculous amount of data from like commercial data, that kind of stuff, like a large hedge fund type thing, where you can let it kind of run in the background a bit more. Plus, often that's in stocks. There's a lot of hedging aspects going on. But typically, if you're doing it yourself, as like more of a retail trader per se, yeah, you always have to babysit it. Which I'm like, at that point, I might as well just trade myself.
Yeah.
Like,
I think the best traders do. It's more discretionary because you get to bring in your own experience, and you're kind of making you get to utilize your experience in your decision making, which an EA can't do.
Yeah, not unless you have, like I was saying, some mass aggregation library of like background data, coded everything really well. Yeah, I mean, you're going to have to pay massive amounts for that. So you got to have like a big bankroll to get that going to begin with. So
yeah, 100%. Dude, I'd love to have an EA. Like I used to think to myself, like when I say I used to, like this is even like late last year thoughts. I used to think to myself, I don't think I'd ever want an EA. I don't think I'd ever want an indicator or an algo or an expert advisor, because I like the idea of trading myself and placing in the markets and all that good stuff. The more I think about it, the more I think to myself, you know what? I managed to find a proven profitable edge and algo it, like turn it into an EA. Dude, I'd use it. Like, the more I think to myself, like, man, the issues that I've had trading in Hong Kong with the Wi-Fi issues and just all sorts of like traveling around and the faff of being on my phone, if I could have the main hub computer back in the UK in my office trading, all I have to do is open my laptop, make sure it's running okay and there's no bugs in the system and it's all good, and then it's just chipping away like a couple of $100 a day. Sweet. Yeah, that's fine by me. Like I'd so do that. But then the issue comes that, well, like what you guys just mentioned, is it possible and is it really realistic? Because the amount of data that you'd have to have back in it, and you'd have to 24/7 babysit it.
yeah, because the thing is, until you're taking like $100 a day, and then all of a sudden the algo, you're like minus 7K on one day, and you're like,
I was gonna say, it crashes out and blows the account.
How does that happen?
Yeah, exactly. It's like, oh, sick. And then you're like,
Yeah.
well, this was pointless. What have I been doing?
The whole of January just got
two-
wiped out in a singular trade. Thank you, EA.
Yeah, exactly, man. Yeah, exactly that, and then you just start from scratch again, and then I can't see it being viable at some point. Yes, maybe, but right now I just can't see that being a viable option. I'd love to do it because the idea, we're all lazy, and some of the best traders are lazy traders.
Speak for yourself.
Let's. Yeah, fair. Okay, fine. I'm a lazy trader. Like I try and keep it as minimalistic as possible. And if you said to me, well, you put in the hard work and develop a system and we'll turn it into a complete automated AI, I'd be like, hell yeah, that sounds good to me. I'll put my 7 years of experience into one AI system and then poof, I never have to work again. I get to go out and explore and travel and do all sorts of wacky adventures, which I'm pretty much doing now anyway. But, I get to do all this without having to, fumble about on a computer and stress myself out trying to enter and exit trades. An AI does it for me. That would be super cool. And I think anyone would say, yeah, I'll do that.
Yeah, for sure.
My big problem is still also the fact that you can't just leave it. There has to be some level of human interaction with your EA. It's never going to be fully automated. Yes, you can automate entry and exits and stuff like that, but let's say there's a sudden event that you did not plan for, and your EA is just like, well, criteria met. Let's enter a trade, and it's just like, whoa. So you need to be there to kind of oversee just to make sure. I don't think it's ever going to get something like you can just completely leave it.
Yeah, you got to baby it either way, which at that point, just trade manual, and then you can walk away.
Yeah, unless you're not using your strategy. If you're not using your strategy, you don't mind babying it.
Yeah.
Wesley saying,
Yeah,
I reckon that trades gold. It passed the phase 1 in January, and now it thinks it's better than me.
I love that.
Yeah, Wesley. Mate.
I guess.
Even the EA has developed an ego in trading.
Yeah. Dude, I'm going to have to say bye. I got to get some food. It's pretty late for me, so I'm going to cook some dinner. Got to take a nap, and then I will see you guys in the Discord later, I think, with Akram covering Victor's session tonight. So if you guys are there, I'll see you there later. Ciao for now.
Sounds good. See you, LJ.
Thanks very much.
Peace out, guys.
Have a great
Yeah, mate.
Cheers, LJ. Yeah, so Victor is off today. So I'll be covering his segment this afternoon with Samir, and we have Dave, who is our futures content lead, who will be joining us this afternoon. So guys, do stick around for that. EU breaking out.
Also, 200.
Hello.
Say again. EU, yeah.
EU breaking out. Yeah.
Ooh, I was just saying about an entry here.
You especially, Rich, you especially, my man, would have quite enjoyed, I reckon, a nice drop-based drop sell opportunity there.
On EU.
Yeah, on EU on the 15 minute. No.
If it wasn't in this like flag consolidation at the moment, I probably would have. But it did on the 15-minute did make a drop-based drop. But like I said, the only issue is it didn't establish a new trend. So we have the highs over here. So we have this flag that is. This is on the 15-minute. We're making higher lows. Okay, well, this was a higher high in relation to this one, but high, lower high, lower high. Yes, we do have a drop, a base, and then a drop, but I would have preferred if this was more of a rounding. So price working its way up and then kind of like slowing down and then showing the potential that it wants to continue pushing lower, and then there being a drop-based drop there. Yeah. But unfortunately, it's kind of like sideways action. So there's no real... The very first criteria is not there, and that is reaction off of an established area. And there's no reaction off of an established area just yet. Now there is.
Yeah, that makes sense.
This break that we're getting is now an established area. So now I need to see whether or not it's going to come back to it and then re-establish a new downward trend, and then I can potentially get in on a sell.
Yeah, no, that sounds good. Yeah, that makes complete sense. If I was to sell, it would have been on the open of that first candle after the drop.
Oh, on this one, yeah, this candle.
Yes, yeah, the close of that candle, the new open of the next candle. That's where between there. That's where I would have sold. Yeah, bang on there. Stops at the perfect, and then I would have gone for either a 1-to-1 or a 1-to-2. Probably a 1-to-2, because a 1-to-2 looks like it would be a nice
stop loss there. I'm assuming, just above the.
No, I probably would have gone with the consolidation high. Yeah, I probably would have gone there. The way it closed and the way it moved down quite nicely.
So that is a 1-to-1. Like nice open area over here to come and test. And then there's the 1-to-2, same, still within that area. So it's probably going to come all the way down to this base, because that's the last time from yesterday where we had a back and forth. So maybe the news can drive it down, because the news is coming out in like 30 minutes or so. 45 minutes. What are you looking at, Griff? Are you in this?
Yeah.
You're like, yeah, let's do it.
I was looking at a buy on EU potentially, but it's dependent on a strong retrace in the next hour because we've just broken underneath this low. Let me zoom in a bit. You guys can't see what I'm looking at. We've just broken this low. So if we get a strong rejection candle right here, I've actually got a magic candle drawing thing. 1 second. Up candle. There it is. So if we get something like this, the more like kind of engulfing, the better really, because it shows a shift to the upside. I'd love to see that. This would be a perfect flag trade for me, because on EU and GU, these larger flags where we kind of get an impulse and then we get a flag low and we range for a while and we kind of form this larger flag and then we get this rejection. They tend to work out really well on these pairs specifically, as opposed to like a really small type flag. I find that these work out really well on EU and GU. So yeah, if we get this, that would be great. So I'll have to remember to check the charts in an hour.
Just keep an eye. And then obviously the news might just activate that movement. So
yeah, it's in about 40 minutes, right? So hopefully the candle at the end of the hour doesn't look too crazy, because you know, a news candle, it could give you something like massive like this, you know, and then I can't get involved anymore. So yeah, I hope it doesn't make too much volatility.
Yeah.
But yeah, perfect for starting momentum.
Yeah, that's the dream.
It's not
the dream
massive.
you can hit without extending too much, you know?
Yeah.
Sorry, Will, you were saying?
I was just saying, it's not massive news. You know, it's nothing overly extreme.
I mean, it's called retail sales and retail sales, so like you kind of like want to see whether or not your economy is you know, still consuming. You know, there's a consumer.
Yeah, of course. But I've never seen, you know, retail sales, in my opinion, from what I've experienced, hasn't really been a massive driver.
Fair, but I feel like it is more of like a diagnostics tool for a larger issue. So yeah, so it's going to inform regardless, I think.
Oh yeah, no, 100%. It's definitely one to look out for, especially as a fundamentalist. If you're interested in your fundamental news, that this is actually quite an important one. But as a technical analyst, I feel like it's one that's not really taken. It's still a red folder, of course, but it's not the most highest of impact newses. You know, it's not. It's like the sort of like medium scale on the. It's like a low to medium on the Richter scale of earthquakes of high impact news.
Yeah, but I think it's still one that needs to be taken into consideration. So
it's still one that needs to be stayed clear of course.
Yeah. Do you remember years ago the unemployment claims was not the market mover. It was CPI. And then unemployment claims became like the non-farm, like employment change.
Uno reversed on
all of a sudden was like, whoa, what is this volatility? And then you know, so you have market changes, and especially if the small little adjustments that just catches you off guard.
Yeah, absolutely. Yeah, no, yeah, that's fair. Like I remember CPI was just one of those absolute petrifying news events. It's like the CPI and NFP, even now, is still one of those ones that's just like, nah. Yeah, I would rather not. It's like tomorrow, if it's going to be like an NFP Friday, like I know it's NFP and I know it's Wednesday, but if NFP Friday has anything to go from, tomorrow morning it's going to be crap. Like tomorrow London morning is going to be crap, and it's just going to be flat price action until New York, and then New York is going to be crap because it's going to be super volatile after the like post NFP. So it's just going to be trying to recover from that. So truth be told, like that's why I don't trade NFP Fridays at all. Like I like to trade the morning, but then I started realizing there's no volatility, no volume, there's nothing coming in on the morning. Then the afternoon was absolute garbage, and then by the time the market settled down a little bit, the market was closing. You know, so that's what I hated NFP Friday. NFP Wednesday, not sure how that's going to play out. I don't know what to think about that. What about you guys? What's your thoughts for tomorrow?
I'm going to try and get a trade in on NAS if it presents itself in the morning, and then I will be cautious around New York Open and just kind of like see whether or not the news had established a new trend and then New York session continues that same trend. Then I'll probably still trade it. I mean, it's well enough. It's long enough before the New York Open that I'm in any way not going to trade that section. So the last, let's say, hour and a half to almost 2 hours before New York session opens, I'm in any way not trading NAS. So I'm waiting for the next follow-up. So to me, it's not really going to impact me in the moment. What about you, Griff? I remember you saying you don't really care about the news events.
No, I never really pay much attention to it. NFP is the only day that I do not trade. So I won't be trading NFP. But all other news events, I don't put too much weight on them. I will consider it in regards to prop firm accounts, where maybe there's a rule where I can't open trade around news. Otherwise, I don't pay attention to it at all, to be honest.
I mean, to be fair, if you're only looking at the hourly and you don't really care too much for, like, let's say like lower time frame moves and like lower time frame volatility, that like sudden candle is not really going to do much for you, because you're going to wait for that hour to close out in anyway and then make a decision. So
yeah, on my time
have
frames,
enough time after that news event. So
yeah, exactly. Yeah.
Where did William go? William has decided to leave. He's left us alone.
Oh, he's back.
I got banana milk.
In the candy store, mate. Like, you look so excited. Like, oh, look at this.
Dude, I am. Bro, she just came in and was like, I heard you talking on stream yesterday about like banana milk and all. So she got me banana milk. One absolute legend. I have the best partner ever. Oh, so good.
So speaking of partners, did you guys notice Alex in the background earlier?
I saw her briefly, and I saw you drop off, and I thought, I see. I was like, yeah.
Normally, she's really good at not like jumping into the scene and whatnot, and then she's just like nonchalantly, she's coming into the office, goes and drops down. She looks at me, and I was like, oh, let me just remove myself quickly, and she's like, oh,
honey, you know that I'm dreaming right now, you know, right?
She was like in her own little world, just yeah.
Yeah. So like, I have a rule that I don't care what I'm doing, where I am, who I'm with. There's a handful of people that if you call me, I'll answer. Like, I don't care what I'm doing. Like, I will be in a meeting with the king himself, and I'll answer the phone to these people. And wow. So my partner,
high up people.
Yeah, like, you know, showing the severity. And so anyway, my partner's on that list, and she called me just now, and I was like, "Is everything okay?" She goes, "Yeah," and then she starts ranting about something. I was like, I was like, "Is it an emergency?" She was like, "Oh my god, you're streaming! I'm so sorry." I was like, "Wow." I was like, okay. Like, usually, a bit like you said about Alex, you know, your wife is so good at knowing like when you're working, when you're streaming, when not to bother you. My partner, Cece, she's the exact same, but just every now and then they slip up. You know, she calls me up just to rant about something. She's like, "Oh no, I'm so sorry." I was like, "No, it's fine."
Yeah, today was just one of those scatterbrain days. It happens.
Yeah. Absolutely, man. We're all allowed our bad days. Even our partners. They're all allowed our bad days.
It seems as though we're having a little bit of US pairs, major pairs volatility now leading up to the news, because AUD USD has had quite the long wick down on the 15-minute and kind of like retook everything back. If I can bring mine up, you can see it. So just this little bit of volatility down here. 15-minute just wicked down. I don't know if anybody can see that properly. So that is just a very long wick in relation to the previous movements. EU, the same thing. EU also started breaking lower. GU, same idea. Started pushing a little bit higher, but long wick above, long wick below on the 15-minute. NZD, same thing. A sudden push lower, long wick, push back up. So there's something's prepping. Same thing. I don't know if there was news. Let's see. Nothing. No news whatsoever from Forex Factory, at least. So maybe this is just in preparation for. Let's rather say, this is in preparation for potentially the news coming out. It's 1-0 Griff Rich versus William.
What did I just hear about Rich versus William?
Griff and Rich versus William. It's 1-0, mate.
Was I muted again?
You were muted. I saw your mouth moving and there was no sound. And then you kind of like leaned forward and I assumed you...
I muted myself there. Thing is though, like so this mic is amazing because it's muted, which is fantastic. It is great. But usually when I'm streaming, it's here because I'm always looking at the screen, so I can see when it's lit up. Now, because I can't see when it's lit up because it's not in my eye view, sometimes like I'll turn it off just so like there's no background noise. Like if my missus is pottering around doing something, or if I'm typing on my keyboard, I don't want background noise, so I'll just mute myself and just sit and listen, and then I gotta talk, and then I'll forget that I've muted myself. So yeah, my bad, guys. Like I was saying though, I was about to say, guys, has anyone checked out gold? There could be a fantastic point where gold could be looking at buying up.
So before you start taking a look at gold, I'll have to shoot off. I'll be muting myself for 1 week, and I'll unmute myself again next Tuesday from 12 till 1.
As long as you remember to unmute yourself.
Yeah.
Thank you, guys, Griff, for joining us today, mate. We really appreciate you.
No, thanks for having me. It's nice to talk to you again, and I'll see you guys next Tuesday.
Also, Griff, big congratulations on the house, man. That's fantastic news.
Well, thank you, Will. I appreciate it. Thank you both.
Down.
Not much a pleasure.
See you guys soon.
Bye. Cool, Griff.
So, gold. We
gold,
have this higher...
It's a really nice zone.
Say again?
I said, yeah, the gold. This looks like a really nice zone at the moment.
So we have this higher time frame area that I marked up a while ago already, where we've just started pushing lower, pushing lower. But when we try to push, my apologies. When we do try and push higher, eventually we do plateau a little bit, and then we have these little attempts to try and push price lower, which the whole of today, effectively, we've been stuck between these two. Well, let's say this is the lower end of it, but we're technically stuck here the whole day so far. So it's a very tight range at the moment. We're waiting for real input from the market to try and build up. And I think I remember saying this yesterday. I think it was with LJ. If you notice the way that gold moves during Tokyo, it's a very good signifier of what the rest of the day is going to be like. So if you have a very consolidative day, like there is a push up, price comes back down, it tries to push up, but it's generally stuck between like two areas during Tokyo. The rest of the day for London is going to be relatively the same until you get to New York, and then New York is going to either push higher or push lower. But generally New York is then the one that kind of like breaks that little bit of sideways action. And it's the same thing we're having today. Today is having, once again, we had the open, it pushed lower, came back into that last area where we tried to put, or where we had the daily open from. And then we just kind of like got stuck in this range. So I'm expecting New York, once it's opened, for us to either start breaking lower or start breaking higher, because that's just the trend. That's just the way that it goes. If you have a look at how gold moves when Tokyo is very volatile, or let's not say volatile, there's volumetric movements. The daily open, it pushes lower, but the whole Tokyo session is very large. It's chosen one direction, and it's followed that direction the whole day. And then generally, you have the follow-up for London and New York in the same direction as what Tokyo has established. Same thing here. Tokyo is very bearish. Come back into like the midpoint basically of it. It reacts off of small little base areas on the 15-minute, and then it generally starts pushing lower. New York once again starts pulling back, continues lower. And you see this happen time and time again. Now, obviously not with 100% certainty, but in general, if Tokyo is moving volumetrically, there's a small little segment of London that is consolidative, and then you have New York that happens to move volumetrically yet again. So today is one of those slightly consolidative days where we're just waiting. The whole of yesterday, same thing. All of this consolidation, we eventually broke out of it and then retested, but there was no upside. There was no real like follow-up movement. We basically made this M structure after breaking these tops over here from yesterday. And this is where we're currently stuck right now with gold, is the fact that we're stuck in this range right here between, let's say, 5,009 and 5,066. That's kind of like where we're kind of like stuck at the moment. So I don't know whether or not I want to trade this as a breakout. Because overall, we're still stuck.
What is it, sells to the downside?
Now, what I mean is like I don't feel like this specific movement that we have here is a movement, is a breakout.
Yeah, I get you.
Yeah, but it's only because of this area over here being so consolidated.
Man, like you said, gold, it's a weird price action at the moment. Yeah, it's a weird time to be trading gold. I fully agree with you. It is in a consolidation, especially when you start moving up the time frames, like going from the 15 to the 30 to the 1 hour to, and you start compressing price down and start realizing that actually it is in a dead ass consolidation zone. Like if you're going to go into the 1 minute and the 5 minute, yeah, you're going to see a lot more price action, of course, because there's going to be a lot more movement because you're opening price up to a lot more variety and a lot more volume over a small space of time. You're just really zooming into what's happening on a smaller time scale. So you're going to get a bigger movement. However, a 5 minute I feel is a nice little sweet spot, but I don't know. I think when you start looking at, like, even if you're trading the 1 minute, I feel like you've still got to like zoom out and look at the overall range. I think when you're looking at the overall range, you're still going to be able to identify that market zone that you just marked out above, that is the top of the consolidation. This is the top zone of consolidation. Yeah, there, bang on. And then if you look at the low of the consolidation, you've got that zone there. It literally bang on that zone. Now, everything in between it, which looks fantastic on a 1 minute, optimistic opportunists would look at that and think, yeah, this is a great trading practice on the 1 minute time frame. However, you've got to remember that 1 minute time frame trading is really high risk due to the fact that, like Rich has just marked up there, you've got top zone, bottom zone, everything in between. I like to personally call garbage price action. The reason I call it garbage price action is because it's within two areas of interest. It's interested in this, it's interested in that. It's not interested in anything here. It wants to see what happens here and what happens here. If it can touch here and move above, there we go, buys. If it can come up to here and then start moving down, it's reacted to this area and it's reacting in a direction of opportunity. Now, everything that happens in between it, not interested. However, when you go into the 1 minute time frame, you can get really sort of wrapped up and distracted, should we call it, by large moves because you're so zoomed into the market. It's not actually a large move. You're just super, super close up.
I mean, to be fair, if you were on the 1 minute and you were looking at this area as the lower point, basically, and you waited for some sort of break, so that low area over there on the 1 minute, the close of this candle, it's the first time that you're getting volume, really pushing it in one direction after, let's say, multiple, my apologies, multiple kind of like movements here and there. So once you start actually breaking through that, you kind of like assume, hey, it's going to carry on. And fair enough, on the 1 minute, this was a $14 per fine ounce move. If you took that entry there and you just kind of like, well, not 14, $12. So 120 pips movement on gold. And this was easily a 1-to-1 that you could have had. Or if you just took the whatever your criteria would have been. There is still movement on the 1 minute. However, if I'm going to trade the 1 minute, it's going to be scalping. I'm not going to be holding a trade for long. So obviously fair. The idea is lowest time frame with the lowest type of trading, which is scalping. But on the 5 minute and up, when you start looking at it like this, you will notice that this breakout over here needs to have some sort of continuation before it can even be considered as a strong break.
Yeah.
Because once again, higher and lower point. Yeah.
It doesn't mean that the 1 minute isn't valid. It doesn't mean that we're slamming the 1 minute and saying it doesn't work. It's just think about an ADHD child who's just finished a massive bag of sugary sour Haribos after finishing a 2-liter bottle of Coke, and then just send them out into a park and watch them whiz about. It's unpredictable. Who knows what they're going to do? They're just going to run about and do all sorts of crazy things. That's gold on the 1 minute time frame. Doesn't mean it's not reliable. Doesn't mean it's not safe trading. It just means you've got to be very careful that you're not in an area of uninterest. You got to make sure that it's reacting to an area of interest. If you're using it as a confluence, or if you're using a higher time frame as a confluence order flow, 100%. Then why not use the 1 minute time frame? I can't see why it wouldn't work, because you're confluencing it with something. But just be careful that you're not getting wrapped up doing sole analysis on the 1 minute time frame.
So
I can.
Yeah, so this is EU. EU is definitely starting to present, on the 5 minute at least, the potential for a base to be formed, right? So we have the new establishment of a downward trend. We've got 1 or 2 candles that are providing that resistance to try and push it back up again. If this candle closes as a bearish candle and it doesn't have a large wick above and below, and it looks like it solidly wants to start pushing lower, then there is a potential to have a sell, because it is showing the idea of the drop-based drop. The only issue with this is that you have news that's going to come out exactly where this box starts.
16 minutes time.
Want to go and play around with that idea for a sell during news? I don't want to. Even though it does look like there's this idea that it could start presenting with a downward trend. Now, the same idea with gold as well. Like, even if gold had created another, this candle over here presenting a possible push lower by at least being down here somewhere, I could have gotten into it as an example. But once again, this is a reaction off of an established area. It needs to break, then come back, and then reestablish. It can't be done in the middle. Otherwise, you're just playing around with like you said, two areas of interest that it's just hopping between. Now, if I go down to the 1 minute, there's no base. Because the base itself here was created on top of the area of interest.
Mm-hmm.
So there's no base to work from, even on the 1 minute. Like, even though you're looking at the 1 minute and you're thinking to yourself, yeah, this looks great for a sell, there's no base for me to work from on the 1 minute. So the 1 minute, the 5 minute, yeah, it's a lot of movement, and it's a lot of like price action. Okay, now we're building bullish trends. Now it's more of a bearish trend. Oh, we're bullish again. There's just no basis for me to work from. So I just ignore it as much as I can.
Yeah, absolutely. You know, it's just proof is in the pudding when it comes to higher time frame or top down analysis. You know, just be very, very cautious, shall we say? Very cautious. Yeah. However, we have got Padson saying, I have a funded account that I will make my biggest profits from news. This is very interesting because I also know a lot of people who make their biggest profits from news. They use personal accounts. They use personal accounts because there's no rules involved. Be very careful. You've already got a funded account, so you clearly are very careful and you clearly know what you're doing. However, for anyone else out there that thinks that they can do the same, be very careful when it comes to news trading, guys, as that is a violation. So please be very careful. 2 minutes before and 2 minutes after high impact news, do not place a trade. Other than that, go nuts. Let your heart go wild. Also, Zed, I have not ignored you, my friend. I did see you coming out here. Hello, the Fivers. Good morning, everyone. How you doing, Zed? After a month, I passed my evaluation phase today. I started in January the 10th, 2026, and passed today. Dude, that is literally a month. That's 10th to 10th. Or was that? Yeah, you started. Yeah, January 10th. Dude, that's amazing. Well done.
30-something.
Congratulations.
30-something odd days. It's really good. It's very good.
Yeah, well done, man. Oof,
so even Prarita is saying, very true, gold is just sticking to VWAP. My setups are not working today. Had two SLs. That's unfortunate, my friend.
Yeah,
it is one of those things, though. It's part of trading. Is you're going to lose trades. And no singular, well, none. No singular strategy has 100% win rate. It's just not. There's just no efficacy to it. It can't happen, unfortunately. Well, it can happen, but the likelihood of it happening is so astronomically low that I don't think that there is one that exists that has 100%.
It can happen. It does happen. Hell, it's happened to me. I think I had a month long win. No, I had 2 weeks. 100% win rate for 2 weeks straight, trading every single day. But then I lost. Then I started losing. I went to a little mini losing streak. You know, it's all a case of winning and losing and probabilities. 100% win rates do happen, but they're just not sustainable.
Exactly. Just it might work in the interim, a few days, maybe a few weeks, maybe even 1 or 2 months. But there's going to come times where it just doesn't work at all. So yeah. Sarah asking, what if we are already in a trade and some news is supposed to come out? Will we still be in a trade, or can we still be in a trade? So the way that the 2 minute, or let's call it the 4 minute news rule works is, if there's news that's coming out, I'm going to go on to the 1 minute chart to illustrate this. If we have news coming out at exactly 15:30 my time, so that is 13:30 GMT. Okay, this is when the news comes out. I've already placed a trade somewhere over there, and my targets are up over there, my stop loss is down here, and it still hasn't played out. So if this news event were to sweep my stop loss, it's not a problem. If this news event were to sweep my take profit, it's also not a problem, because you've already established the trade, as an example. Okay. The problem comes in when you want to place a trade 2 minutes before this news, which is 15:28, or 2 minutes after, so 15:32. So these two other red lines. Wait, let me change the line color to black. Yeah, let's do black. Just to illustrate the idea. So the red folder news is this red line. The 2 minutes before and the 2 minutes after is the bracket in which you're not allowed to place a new trade or have a new trade be triggered. Meaning, if I have a limit order or a pending order sitting down here, if price were to move like that and then the news event comes and then all of a sudden it tips in and then it push up, that's going to be a problem because you're not allowed to have a new trade trigger or be opened during these 4 minutes. 2 minutes before the news and 2 minutes after the news. But like I said, if you've entered a trade somewhere over there and it's still open by the time, and this news event were to trigger your stop loss down here or trigger your take profit up over there, it's not a problem.
Yeah, literally that. 100%. If we are already in trade and some news, because I research. Okay, yeah, that's what you've just answered. Scribbleton, I am actually on a losing streak on gold. I tried to short in an Asia session from 50.20 to 49.70, was stopped out around 50.36. You are not alone, brother. I also lost, making me hesitate a bit more to enter. So this is super interesting. Don't let it scare you off. Don't let it make you hesitate, my friend. If you're hesitating, it could just purely be because you're taking a loss and it's psychologically taking a bit of a toll on you, which is absolutely fine. However, the other contrary to you hesitating could be that you've just said yourself here that you tried to short in Asia session, suggesting that maybe you don't usually take a trade in Asia session. So therefore, why are you taking the short? Just because you see it as a valid trade doesn't mean it may not be in your valid session. Therefore, it may not actually be a valid trade. Your session times still matter when it comes to validity in trading. So just bear that in mind, Scribble. Maybe take a look at the idea that maybe you need to back up your trading sort of confidence, like back it up with a bit of data on the Asia session, if that's not what you used to trade in. If it is what you used to trade in and it was still a valid setup, dude, have confidence in yourself, brother. You'll be fine. Honestly, trust yourself. And if your strategy ends up being a losing strategy, you go through a losing streak and it happens for like 6 odd months, bro, it happens. Don't stress about it. Just tweak it. You know, we've all been in that situation. I have just come out of that situation as well. Sarab saying that I had a mentor. He was in the green for a whole 6 months. Not a single day in loss. 6 months. Absolutely fantastic. Still had a loss after the 6 months, though. Not sustainable. Not 100% win rate.
Yeah, that's kind of like what I was like alluding to. You can have periods where you have a winning streak, and it might feel like you are not going to lose ever until you take a loss. And then that's the thing is like no strategy is 100% foolproof. So it just doesn't exist. There was a question earlier. I think it was Enzo. Yeah, this one. How many FX pairs do you trade? Do you find it beneficial to trade one or a few exclusively? What are your thoughts on this, Will? I know exactly what your thoughts are, but for the chat, what is your thoughts surrounding this?
Oh, man. So originally, and probably still now, limit your pairs. Limit your pairs, master one. And, you know, you can... I proved yesterday that I could have had, I think it was like a 5.5 hour return day yesterday, just on Euro USD. You know, and that was risking, theoretically, 1% per trade. So if I held to a full TP, which it would have actually hit TP in the end, I believe, I could have had a 9.5 hour day yesterday alone, with one pair being Euro USD. So you can quite easily get fat off one pair if you master it, understand how it moves, understand the technicals, the fundamentals, get to know absolutely everything about it and develop a relationship with the pair itself and learn to trade that and have a highly profitable strategy. However, there is part of me which does like the idea of exploring the idea of other pairs. Now, I'm not objecting the idea of exploring other pairs. The only issue is when you explore other pairs, you open yourself up to a whole new idea of risk management. Rich has a fantastic saying when it comes to his risk management. Best of three is me. I'll let him explain it in just a bit. But when it comes to the risk management strategy, and when it comes to trading one pair to 10 pairs, when you trade one pair, you could trade it once a week, you could trade it once a month, you could trade it once a day. You can have a strict strategy according to your risk management plan, which can encourage you and help you evolve your trading to be optimal. However, if you have 10 strategies, 10 asset pairs that you're trading, you've now got to divide that risk management by 10. Now, therefore, if you're going to be looking at all those different assets, maybe gold, or let's just call it commodities, indices, and currencies, you know, you've got those three, and you've got like 10 altogether, then you're going to be looking at those and thinking, right, okay, that may not happen on that day, that may not happen on that day. And then in the end, in the long run, you may find that you're actually risking a lot less and rewarding yourself a lot less just by trying to spread yourself thin over 10 asset classes or over 10 pairs instead of just focusing on one. Now, a lot of people say, oh yeah, focus on one because, you know, you're going to be distracted by 101 pairs. No, let's be honest. Some of them can move very, very similarly. You can find correlating pairs. So you can do the work. You know, you're not an idiot. You can quite easily be able to learn how all 10, 20 pairs move. Not rocket science, you know, and you can set alerts and you can spend all day analyzing if you want. Now, what will potentially impact you is your risk management. And like I said, in the long run, you may find by being a smart risk manager, you're actually cutting potential gain due to trying to lower your risk. So you're allowing yourself to trade all 10, 20 pairs, you know, so you've got to take into consideration that you may end up having 5, 10, 20 trades open in one day. So therefore, you've got to divide your risk by 20. And therefore, if you only have 1 or 2 trades that day, you've still got to take into consideration you may have another 18. Therefore, by the end of the month, you may have been cutting yourself out of a significant amount of reward or risk, but reward that you could be putting into your account and potentially into your payout. That's the only thing that I hate about multiple asset trading.
I agree, especially if you are, let's say, a little bit green when it comes to trading, or if you struggle with attention, or if you have a little bit of an impulsive nature. So you see something here, and then you're like, oh, yeah, I should get in on this because it's starting to, quote unquote, prove whatever it is I'm thinking. And then you decide to enter, and then all of a sudden, oh no, it took me out. And then you're like, okay, no, that's fine, that's whatever. I'll jump over to this one, and then you see the exact same thing, and you're like, oh yeah, let's get in here. You know, I know it's a stupid example, and I'm using it to kind of like prove my point. But if you're going to be focusing on multiple assets at once, you're not going to give a singular asset the attention that it deserves. So I have found that for myself, when it comes to ensuring that I give the attention that the asset deserves, I will look at a singular asset to trade. In this case, it's NASDAQ. So NASDAQ, I can have a look at exactly how it moves. I can remember the patterns. When I come to the market, I know if I'm going to take a trade, it's going to be on NASDAQ. But not only that, I don't get like enticed by other pairs. So I can have a look at gold and I can be like, oh man, gold looks great. I want to take a trade on gold. But because I've made that conscious decision to only trade one, which is my focal point, I don't trade the other ones. I don't get the FOMO because I've been receiving really good results on NASDAQ. So if I have my focus on one, that one is giving me everything that I need. So I can understand if you have, for argument's sake, a strategy that requires you to actually look at multiple assets and you trade, let's say, once every few days. Like you're looking for a trade, for a swing trade, maybe on several pairs. That makes sense because you're going to be like Griff that doesn't get a trade for months. And then something happens in his life and he misses that one trade that actually like aligns exactly with his strategy. Then it kind of like helps to have multiple strategies. Not multiple strategies, multiple assets to look at. Because if you miss the 100%. One, there's potentially another one to look at. But if you're intraday and you're jumping across all the charts, you're going to miss entries. And then you're going to get in late, or you're going to feel like, oh, I've missed the move. Okay. So my suggestion is if you're intraday, focus on one. Bring your focus down.
1 to 2, 1 to 3, something like that. You know, keep it small, keep it a handful. Another thing I find as well is that if you've got a massive amount of capital, and usually I'm going to say if you've got a massive amount of capital, because not many young, green, inexperienced traders will come in with like $1 million to $10 million in capital. So if you've got like a significant, huge array of capital, then trade all the assets under the sun. Because when I spoke about risk management and dividing all those trades, you could have 0.01% of your capital at risk per trade, have 20 trades open, all of them could hit stop loss, and you've only lost a tiny amount. You know, you've not lost that much of capital. However, if they all hit profit, if the risk to reward is in the right direction and in the right way, then therefore you're booming with your capital, you know. So there's a positive expectancy. And, you know, I've watched hedge funds talk about this, and they've spoken about, you know, they've slagged off and slated retail traders and said, you guys, you know, you talk about only trading 1-2 asset classes. That's absolute bullshit, you know, all this lot. When actually it's like, well, hang on a minute, because you and your 15 other traders in your office all have one massive £1 trillion, you know, pool to pull out of. We got $100,000 account to pull out of. We're not in the same boat. You're on some mega cruiser. We're on a dinghy, you know. So we're not in the same. We're not in the same stratosphere. So they can look down on us and criticize our risk management strategy. But remember, he's got a risk manager and he's got a financial analyst and a fundamental analyst. We've got our one single brain trying to do all of them at once. So, you know, cut yourself a bit of slack and give yourself a pat on the back, because you're actually doing what an entire trading floor does on a daily, but you're doing it as one person in an hour. So, you know, give yourself a pat on the back on that, and remind yourself on that BlackRock and all these massive, Rothschild, HSBC, all these big institutions, you know, they have got trading floors with like 20, 30 university students who have got an ultimate array and vast experience in these financial markets, and are still being taught, even when they're on the trading floor, how to trade. And they're being taught their entire career how to stay up to date with trading. You're relying solely on your motivation, your own teachings, your own research, and your own findings. So just bear that into consideration. Guys, we don't like it, but we're not in the same league as these people. So take that into consideration when you in hedge funds talking about how rubbish we are that we trade one asset class. Different industries. Well, same industry, different stratospheres.
It feels as though somebody came and I don't know, mate, pissed on your battery or something.
I came in the mid of a I think I'm assuming the topic was trading one asset class. I'm just assuming.
Yeah.
And Will got very, very passionate about these JP Morgan.
Dude,
BlackRock,
it's a passionate topic of mine. It is a passionate, because it's such an important topic that.
Yeah, I was listening in the background. You just mentioned.
Yeah, man, it's a passionate topic.
Yeah, I listened. You mentioned a very good point. Like if you have a huge sum of capital, then definitely the risk should be diversified. And if you're a trader like me, or a trader like a normal trader, I think one asset class will feed you in a very good way.
Mm-hmm. Absolutely.
What's up, Samir? How are you?
I'm good. How about you? How about you guys?
Not too shabby. Now that Will has finally ended his rant, he seems to have calmed down. Rage has left him.
He's taking a break.
Sorry, guys. Apparently, that was a rage bait for me. Apparently, that was a trigger.
Hedge fund people.
Little did I know.
There was a question here from David Offor, saying, how do you track the pairs you trade? There's a fair few ways. If you are using MetaTrader to trade, you can have your market watch open with only the pairs that you trade, and then you can have a whole list of the trades here underneath at the bottom. So let's say hypothetically I'm looking at NAS, GU, gold, and US JPY. I can have the arrange windows to have them all aligned up here, let's say like that. Then I can see all of them, and then I know which ones I'm trading. Now, if you're doing it from MetaTrader, you can have the symbols on a watch list on the right-hand side, and then all I will do is I will just pick one. In this case, it's NASDAQ, or if I have two, I will have NASDAQ and gold as my focal point. And then what you can do is you can change your layout. Now, this depends on whether or not you have the premium version or not, and what level of premium version you have. Generally, if you have the free version, it's only the one. But if you have the paid one, you can have multiples, in which case then I would have one of them be gold and the other one be NASDAQ, and then I can just keep an eye on them like that. Or alternatively, what you can do is you can literally have multiple windows open for TradingView, and having each window have a different asset that you look at. Now, another thing that I know a lot of people do is, for argument's sake, they only keep an eye on the change. Let's say they're looking at all of the major pairs. So they'll only look at the change amount. So you'll, come on. Why does it not want to add? Oh, okay. I have I have an issue here. But anyway, you can add the information on the side, whatever it is that you're looking for. And then that segment will show you, okay, let's say you write on percentages. I want to see it move a certain percentage before I'm going to start considering entering or having a look at it. So if US CAD hasn't really moved, so in this case it's like 0.4 or whatever, I'm not going to bother to really go and have a look at it, as an example. So there's multiple ways for you to track the pairs that you're trading. It just really depends on what it is that you're looking for and how you want to bring that information forward. And then Scribble saying, I really enjoy these streams. Thank you, guys. Thank you very much, Scribbles, for being here. Praritan is saying, data is delayed. And then Zeisty said, I've noticed something very weird on MetaTrader 5 with AUD. USD first didn't hit my stop loss, and then after a minute while it was on profit, the wick just changed and my stop loss was hit like magic. Asking, is it possible to have a delay on MetaTrader 5 or something? Yes. So MetaTrader here at the bottom, way at the bottom, you can't really see it with the way that it's currently, but there is a traffic, and it's in megabytes, and you have ping and packet loss and stuff like that. So remember that the information, as this data point is receiving it, there's a delay. Information comes in, it plots it, and then fresh information comes in and it has to replot. So it's going to continue to do that up until it doesn't receive data. And sometimes what happens is you have a little bit of packet loss, or the data feed itself is disrupted, or you have large volumes of data that's coming through suddenly, like a news event as an example. And then the news feed is happening so quickly that the plotting doesn't happen as quickly as it normally would have. And then what you will have is you would have these little sections down here where all of a sudden the price is here, and then you just see it like kind of, hop around like this. It like literally just jumps up and down, up and down. That's as it's receiving the information, tries to plot it, and then there's new information that's being received. So yes, there is a little bit of a delay sometimes, first and foremost, and secondly, you can have these sudden sporadic movements out of nowhere. So even though initially your stop loss wasn't hit, it was probable that there was the delay, which then eventually it hit your stop loss, but to you visually you're only seeing this wick suddenly moving, but the data was probably already plotted, or received, let's rather say, and then the plotting just didn't happen. I don't know if that makes sense, but that's just generally what you can see. Remember, it's just data that you're receiving, and then your MetaTrader plots that data for you. Jalab is asking, hey guys, what is the profit split with the fivers? It depends on which account you have. We have 3 different accounts. So we have a high stakes, which is probably our most popular one. And it's probably let's say the middle ground based one that we have. It builds up, but generally it starts off at an 80-20 split. So 80% of the profit goes to you, the trader. 20% of the profit goes to the company. You can build that account up until you can scale it, is what I mean, up until a certain point in which you can have a contract with the fivers where you get 100% of the profits, and you get the contract where they pay you to trade for them as well. So then it's literally 100% for you, 0% for them, but then you get more capital to trade with. So then it's beneficial for the company. So that's the high stakes. When it comes to the bootcamp, which is our 3-step phase, it starts off at a 50-50 and then moves up to a 75-25, and then eventually will get to an 80-20. So it depends, but I think the initial one is with the bootcamp is 50-50, and then immediately after that 75, and then 80. So generally around 80. MGN is saying some of the MT5 delays are also caused by the current main build issues. Yes, with the update that we had a few days ago where they introduced the way that plotting is done and drawings are done. So the drawing thing was a big problem where you couldn't even have your position sizer up. It just lagged till high heaven. So it could be with that as well, as MGN is saying.
Just real quick, guys. So I have got 10% on my phone right now, which I'm using to put data to hotspot into my computer. I'm gonna have to jump onto the Wi-Fi of the building. It should be okay. If it's not okay, if it's really bad, then I'll hop out. But just to let you guys know, I'm gonna drop out for a second and come back in.
Awesome, mate. No problem. So this question from Kveloso. Wow, I just butchered that. Is that trade management indicator free in MetaTrader? Yes. So this is the position sizer from earnforex.com. It's free to use. You are allowed to go to the website, download it, and use it on any of the Fiverr terminals. Once again, it's free to use. I know that I use it. I know that Jonathan uses it. I know that Victor also uses it as well. Go to earnforex.com and look for their MT5 or MT4 position size EA. Just follow the instructions to install it on your MetaTrader 5 or 4, whichever one it is that you're using, and then learn how to use it. Go through all of the settings, understand how it operates, and then yeah, it's free to use. I honestly don't want to not use it. I only want to use this this position sizer now. It's so awesome. It really works. Samir, mate, like what have you been up to?
So today I'm not going to be trading, as I mentioned a couple of times. Tuesdays are not my days. I have broken my plan, to be honest, in past, but now as I have a live account here and there, so I am already up, few percent on that account. So I don't want to make any mistake that can put my account in risk. So today, Tuesdays, not for me. So I'm not going to be trading. I have made mistake in past, so I'm just relying on my data. I'm not going to be trading on Tuesdays. But yesterday I took a beautiful win on US 30 with our stream members, our chat, our viewers. We was discussing about the move that I was planning to catch, which was longs on US 30. As I have shifted my focus on US 30 alone. I'm just trading one pair or one asset class. So maybe you can pull up my charts. I can explain my thought process, like how what I was seeing. All right, this push to the upside, I was waiting for this, and the reasoning behind this is very simple. If you go to the 1 hour, we just broke out of this kind of a consolidation with a very good impulsive leg. First thing, very interesting, like we make and push bullish. It was my thought process. I was like, okay, we just want some kind of pullback. And I was drawing some areas here and there, like this was a fair value gap, all these areas, just to see if price make and take support from this area. And if you go to the 15-minute, I heavily rely on EMAs also. This is 200 EMA. Price is above this, so my bias for the day is bullish. So I just now I want some confirmation. This was one trend line that I have drawn on the 5-minute, and this was another kind of a trend line. So I saw this was a fair value gap. Price is starting to respect this area. I was like, okay, 15-minute is bullish, 1 hour is bullish, 2 hour fair value gap seems like it is getting respected. Trend lines are there. Price is taking support from the trend line. So now my mind is like, where can I place myself in bias? So I saw this small consolidation. So I was like, price show the impulse. Now it is correction. We may can get another fuel which can take the price higher. So I just took the trade somewhere around here. My stop loss was this area, and I was just targeting 1 to 1, something like this. I don't know. I just take took some profits at the top. Price never went there, so it was just luck. So I didn't knew price is gonna do this, so it was just luck. But if if I rely on some technicals, yeah, there was a kind of a resistance area on the 1 hour from where price rejected. But yeah, I just secured 1 to 1. I just aligned few technicals that I know that I see on a day-to-day basis, and I just waited for my confirmation. I waited for the price to give me some kind of signs that it may can continue to the upside. So I think the waiting game paid me well yesterday. I am up 2% on my The Fivers live account. So today I'm not going to be trading, as I mentioned. I don't want to risk, my profits, or I don't want to make mistake that I made in the past, because I know Tuesdays I'm not going to be having a very good win rate. So now I'm very strict on my plan. So in past, I was being lenient here and there. I still, uh, you know, do some things here and there. But now I think if I want to break that barrier or that ceiling, the only way is I follow my plan to the T. I don't make any mistake, not even 1%. That's how I think I can break the ceiling. What do I mean by that? I want more payouts, more funding. I think that is the only way I can achieve that, which is just following the plan, which I have made for myself. And Tuesdays again, not going to be trading. So yeah.
Awesome. I just want to answer these two questions, one from Oliver and one from Prarita, saying, hey, I have the same position sizer EA as Richard, but when I employ it on MetaTrader 5, the platform freezes. What do I do? And then the same thing from Prarita also saying that there's lag. Okay, so this is what you do. I'm going to bring up my screen. Okay,
Yep.
so it's very simple, guys. So do pay attention. This information is not really available anywhere. It was Mike. I don't know if you guys remember the mental wealth trader Mike. He gave us this information. So this is what you do. All right. So when you have your position sizer on, or when you bring it onto the platform. So what I'm going to do is I'm just going to go to my navigator. I'm going to click the position sizer and I'm going to load it onto the screen. What's going to happen is you're going to have this position sizer box that pops up. If you scroll down ever so slightly now, you won't see it all that clearly because of the size of this box itself. But when you get to the fonts section, so the very first section is compactness, and then just underneath that is fonts. On fonts, you will see what your stop loss color is, what your take profit color is, and stuff like that. Right at the bottom, it says labels font face. Now, if you open up this EA, it's going to be in Courier. So what you need to do is you need to change it from Courier to Arial. So Arial, Arial. And if I then say OK, no lag. That's all you need to do. So drag it in, change the font from Courier, which is the default, to Arial, and then it works perfectly. It should work fine. So that's the quickest way for you to fix that with this EA specifically. Now,
Have you found using this EA, your risk calculation, or you take the position in a quick way? Is this time saving, or you think it is the same if you calculate from your phone here and there?
So imagine this: if I'm going to take a trade, let's say I don't have a static lot size that I'm using, and I want to know if I place my stop loss down here, what would be the equivalent of 1% of risk? 1%.
I might be using it. Yeah, you can continue. You can explain me.
Yeah. So what happens is I can select here 1% risk, and then as I'm moving the stop loss, the information on the risk in USD is going to adjust. It's not going to adjust. The position size here is going to adjust accordingly, so that I'm always risking 1%. Okay, wait. I should first just do that. You'll see that 1% is $50.50, and the current position size is 1.3. If I pull it all the way down here, it drops to 0.68. So it's a nice way for you to not have to calculate what is your lot size in terms of risk. The other nice thing is you can give it a dollar value and say, okay, I want to risk $100 as an example. And then it's going to tell you your risk is 1.98, and if my stop loss is down here, my position size will be 1.3. So the way that I use...
What was the name of this EA?
It is the earnforex.com. Okay. I will send you a link exactly for it. If you want, I'll quickly do that for you.
Yeah, I'm just on the website. I have to, I think, download it maybe.
Yo, Dave. How are you?
Hey, Dave.
Good. Nice to meet you, Samir.
Nice to meet you. Same here. So First time here with Dave. So how are you?
Good, good, good. How about yourself?
I'm good.
You're good. I see. I've been hearing you talk a lot about not trading and staying disciplined and stuff like that.
Yeah, yeah.
That's good. That's good. That's I think that's one of the hardest parts of trading is the discipline part. At least for me, I tend to be very impulsive, so um, I usually use well, the platform we're going to use, which I can't disclose for futures, has some risk parameters you can set to stop you when you're,
Yeah,
breaking
I
the
have
rules. So
heard
that's
it.
going to be useful.
I think on the platform you can set like how much you want to lose that particular day.
Yeah, you could set how much you want to lose per day, which is what I usually do.
And
Because,
if you lost that amount or that percent in that particular day, can you readjust that in settings or you cannot change it?
yes, you can readjust it after, but you're going to be locked out from trading. Well, depending on what your risk parameters were, but once that gets activated, the point is you're not supposed to be able to modify it
Yeah,
until
yeah.
the next trading day. That's the whole point of having a lockout is to be locked out.
Yeah, that is a
Yeah,
good thing. Yeah, that is a good thing.
it's helpful. It's helpful. Sometimes you kind of the discipline kind of goes to the side after 2 3 weeks of being disciplined, and especially when you're trading well. It's funny how it happens when you're trading well, not when you're trading badly. At least in my case, I tend to get overconfident after a 2 3 week um, run of good green days after green days, and then you forget that you're not invincible, and the
Yeah,
market starts reminding you, and then you're taking those losses and paper cuts, paper cuts, paper cuts, and they add up pretty quick. So it's a good slap in the face when you hit that maximum daily drawdown and have to stop and think.
yeah. I'm kind of a one trade a day guy. So I know if I take
Okay.
more than this, I am bound to lose because the way I have seen myself, my results here and there. So if I break this thing, I know the results are not gonna be in my favor. So I try to just focus on this, which is one trade a day. And
Okay.
again, I have observed Tuesdays are not for me. I'm not gonna get good win rate on Tuesdays. So based on my data, I have came to a conclusion: just stop trading on Tuesdays. And this kind of realization has took many months, many yeah, just many months. I should not say many years because
Hmm.
I have tested quite systems here and there. So now I'm at that point where I know if I break my plan, I'm not gonna be getting to the next level.
Level.
So yeah,
Well, that's good. Interesting that it's Tuesdays. I've heard a lot of people say Mondays or Fridays. In my
yeah,
case, it's Mondays. I don't know if usually I trade small on Mondays. I don't know if it's because of the weekend, and since I trade futures, things are closed during the weekend, and I don't know if I'm excited. And usually I take more cuts on Mondays, so sometimes I have to take a step back. But that's good. That's good that you're doing that. I'm the complete opposite of you. I don't take a single trade per day. I actually take
yeah, yeah.
many. That's why it's in my case it's better to have a number based on my profits over a certain period of time. Usually it will be an average of my average profit over the past 2 weeks, and that's my daily stop. And that's when I know, okay, you've reached that number, you need to stop. But I'm taking multiple, 5 10 trades per day because I take a lot of feeler trades to
Okay,
kind of
okay.
feel the market and get in and out until the real trade, let's say, happens.
Hmm.
But maybe you never know. Maybe I'll try one trade a day
Yeah,
for a couple of weeks, see what happens, and
yeah.
maybe
You
I'll
can
come to
try
your
and
side.
yeah, you can try. Let me know how it goes. So you have been a future guy, or you have tried forex here and there.
I haven't tried. It's funny. It's the one thing I haven't tried. I've done a lot of stocks, from the small caps to the mid caps to the large caps. I did crypto for a while, did futures, went back to stocks, traded futures again. And that's where I've found my home. So I've stuck with futures, but I've never tried forex yet. So maybe I'll dabble a little bit.
Maybe I'll dabble in futures. I've been, seeing
Yes.
on social
We're
media
definitely
futures
gonna dabble in
trading.
futures.
We're
Yeah,
gonna convert you. We're gonna convert you to the future side.
yeah, we're
Yeah,
gonna
we're
be
all gonna be playing with the
future
futures.
traders.
Yeah.
What'd you say, Richard?
I'm saying we're all going to play with the futures. We're
Of
definitely going to
course.
do it.
Well, you're already trading NQ, so it's kind of a no-brainer for you.
Yeah, it
I'm
makes
trading
sense.
USD on forex. On this MT5. I know
Nice.
USD is some kind of, I think, Dow Jones
It's the Dow Jones.
on the
Yeah, it's
futures. Yeah,
YM in futures.
YM. Yeah, yeah.
Nice,
Yeah.
nice. It's interesting. You trade all the things I don't trade, Samir, but nice, nice. We're like the opposites. One trade a day, and then I do
Yeah,
multiple
exactly.
trades a day. You trade the Dow, I do not touch the Dow. So that's going to be interesting. But
That's
yeah,
the
I'm
one
open
thing
to it.
about trading that I really love is like you have such diversity across what you can trade, how you can trade, when you want to trade. It's just it's pretty cool. There's no one form fits all kind of like thing, you know?
Indeed, indeed. It's interesting also, I've traded alongside other people in the past, and it's funny how sometimes one person would be long, the other person would be short, and both would make profit, and then the opposite would happen. One would be
Yeah,
long, one would be short, and both would lose. So,
it
it's
gave me some
it's
flashback
interesting.
of the competition that we had. I think
Yeah.
Will was shorting, or I think no, Will was
He was
longs on
longing.
gold. I
Yeah, and
was
you were
short on gold. Yeah.
You were short on gold in what month?
It was recent month when everything was going bullish. I just got lucky. I think my
it
Oh,
was
technicals
in
paid out on
November.
that day.
So we had a traders competition for all of the hosts,
okay.
all of the guests on stream. So we were pitted against each other in a bracket format, and Samir ended up winning the whole tournament basically, and he
Nice.
did so
I
twice
did
of
it.
trading off of news. So it was
Really?
yeah.
Yeah, I
That's
just
good. That's good.
Yeah.
my technicals. I just got lucky. I think that was my day. That is my
Humble
analogy.
brag, humble brag, humble brag. You didn't
Yeah.
get lucky. You knew what you were doing.
No, in trading, I believe some days are yours and some days are not yours. So that's why I
Yes.
have came to this conclusion. One trade a day, just leave everything on market. If that is your day, regardless of your entry, your stop loss, whatever, even if you have the worst entry,
Mhm.
you can win if that is your day. That's just my take on on trading. I see
Interesting.
it that way.
I mean, it's interesting. It's a little what could I say? Spiritual way of saying the day.
Spiritual, yeah. You
It's
can
like,
say it that
well,
way.
if it's mine today, it's gonna be mine, no matter where I enter. But if it's
Yeah,
not mine, it's not gonna be mine. Well, that's good. That's good. Something maybe I'll try. I'll try in the future. Because when I think about my trading, taking multiple feeler trades and multiple paper cuts sometimes doesn't make sense. It's like, well, you drew down 25% of your daily drawdown just to find out that, hey, this is the trade you're supposed to take. So maybe another way is to just wait for that great setup and take that setup, and then take it like you say, hey, if it's my day, it's my day. If it's not, just relax.
yeah,
Yeah, there's like what do you call it? Like an external locus of control. It's like knowing that this is beyond my control. I'm not going to be concerned by it. Some days
Yeah.
it's going to be in my favor, and some days it's not. It's a very freeing feeling when it's just like, okay, well,
That's
the
why
day
I
was
said it's kind of spiritual, if you think
yeah.
about it. It's
But then if things go wrong, how do you know things are going wrong? Like, is it you or is it the universe that is screwing up at the moment, you know?
yeah.
So it's an
Speaking
interesting philosophy that Samir
interesting,
has got. Yeah.
interesting philosophy. Something that happens to me sometimes, and I get spiritual when I'm trading, is I'll accidentally um, either click the wrong thing or I'll click to get out of a trade that's not really working. Maybe I'm in a small bit of profit and it's consolidating. I'm like, okay, let me just get out because it's not the right time. And then instead of clicking, it doesn't get me out for some reason. And then back in the day, I used to re-click and get out, but now maybe I tend to wait and see what happens. And oftentimes it works. So I don't know. Is it the universe? Is it not? We're getting very, very spiritual on this Tuesday morning.
Yeah.
With trading was like, was it meant to be or? Yeah. So I would say 99% of the time it's human error.
Probably
1%. It's that 1% where it's, I don't know, it's grand design or it's like, I don't know, like
the trading gods.
Yeah, like higher power kind of like stuff. But 99% of the time it's just, here's the thing, you make a mistake. Let's say hypothetically, I decided to enter a trade somewhere over here as an example. And now, instead of me dragging my stop loss all the way down there, I drag my stop loss to over there and I just say, okay, trade. Technically, I've made a mistake because the idea was that I wanted to have my stop loss all the way down there. So I'm already going into this trade not entirely in control.
Yep.
So what's going to happen? The moment I realize, oh no, my stop loss is way too tight. What's the first thing that you're thinking? I need to get out of this trade.
Yeah.
Even though the analysis still is unchanged.
Just hold.
You haven't changed your analysis whatsoever, and you're still in the idea of long bias as an example. But purely because that initial step of ensuring that my stop loss needed to be down there instead of over here is going to make me feel like, I might need to get out of this trade. So the psychology is impacted by that small micro mistakes that you make. And the thing is, when people, they see these mistakes like small, like little, it's not really that bad kind of mistakes. But if you leave that and it goes against you, let's say I left it there instead of adjusting, getting out of the trade and waiting for the adjustment and then re-entering, price just decides, okay, no, it's just going to dwindle down and then just kind of like reach somewhere over there. I'm going to be absolutely livid because the decision that I made directly led to me losing this trade where I should have closed the trade out the moment I got in. Take that little, okay, paying my commission or whatever it is, take that small little L, re-enter when it comes back to my position or if the analysis still holds true, because those small little mistakes that you make in the long run can have severe negative psychological effects. That's at least how I feel about it. At the same time, it can potentially lead to people being perfectionistic, where I will only enter a trade if it's exactly on the dot, my entry point, no slippage, and if it slips by even 2 pipettes, I'm going to just close this trade because it's not going to go in my way. So you need to find like a very, very nice balance when should I decide to rather just close the trade and get in at a better price if something happened, I made a mistake, or you need to kind of like resign to the fact that you've made a mistake and just let it be.
Yeah.
So
no,
you
agree.
must just make that choice, make that decision, and then live with the outcome of that. So
I totally agree. I think once you click that, well, at least that's what I do. Once you click that buy button, and ideally you're using the information you have available to take the best trade possible at the moment. You might, once you enter the trade, sometimes you have that moment of clarity, where you realize, oh, I didn't look at this, I didn't look at that, I didn't look at this. But you have to be okay with the fact that, okay, I'm either gonna hold this trade, or I realize I made a mistake, I'm gonna take a small cut and then I'm gonna wait and re-enter. You just have to, I think, like you said, everybody has to find their right balance. For me, it's taking multiple test trades before I find my trade, because I'm okay with taking a few paper cuts just to find out whether I'm right or wrong. And in my case, that's what works for me. So for somebody else who's more of a perfectionist, maybe they'll have to, like Samir, wait for that perfect setup and take that one trade and be okay with it. But yeah, you're right. It's really finding the right balance and what works psychologically for you. It's very interesting. Has the more you trade, the more experience you get, um, the more psychology influences your results. You know, you once you know how to analyze charts, you have setups, you've back tested, you kind of know how to trade. Basically, you're not really. We're of course we're still constantly learning, but
Yeah.
I think in the end, psychology has a lot more to do with your results than the technical aspect of reading charts, etc.
Yeah, exactly. Even
Agreed.
Victor and me was talking on this topic yesterday, which was back testing and live testing thing. So I
Hmm.
believe the one should do the live testing more than back testing, because as you guys, I was talking about decision making and all these things. So spending time in the market, taking trades live, doing mistakes in the live market, and that way I think your decision making gets better. So the whole
Hmm.
point of trading is getting to that point where your decision making is good and you can take right decisions at the right time. And that will happen you have experienced when you have the experience of the live market, maybe 1 2 3 4 years. Some guys get profitable in 1 2 years, some takes a lot more time. So it all comes to that decision making things. How you can catch up to this thing, how well you can manage your emotions, as you mentioned, psychology.
Yep.
So yeah, there is a only decision making. You have to make your decisions better, and it gets better with time. When you spend a lot of time in the market, you know your setups, you have the inner confidence. Okay, this setup I have taken multiple times, I know this setup works. So these kind of things. So that's how I think the decision making things, it get better.
So for me specifically, if you're going to talk about back testing and live testing, back testing for me is a theoretical test. It's I
Yeah.
have an idea, and this idea I want to see if there's any sort of, you know, can this idea work? It's just a theory. Let's test this theory. So
Hmm.
you go and look for the information in history to see whether or not this theory that you have holds water. The live trading, or at least the live testing version of it, where you do forward testing on a demo account as an example, that is where you're putting the proof in test. So you're testing whether or not the theory that you've already gone and had a look at and said, okay, I've got the data. I know that in theory it should be working this amount of time. Let's see if in the moment that aligns with. Is that somebody's stomach that was just rumbling? Whoa.
Sorry, it's somebody that started a motorcycle. That's why I muted myself.
I thought
I
somebody
thought
started
maybe
a car.
No, I'm not hungry, guys. I'm not hungry.
So that forward testing aspect, I feel like both is necessary, but I don't necessarily need to do back testing all that much. It's only if I have a theory and I need to kind of like go and see if there's any validity to me spending time on this back testing on this idea. Sometimes you see the idea and then it's not worth it to pursue it. But you will only know that if you've done a bit of back testing. The other thing is when it comes to decision making, I've found that the best way for me personally to make a decision is if I claim ownership of that decision. It sounds weird, but like consider this. Something happens to me and I have to react. I feel as though that outside influence is the thing that has kind of like driven me to make the decision. So in some way, shape, or form, I'm not really to blame if something goes wrong, pretty much. So it's because of this outside interference that I was forced to make this decision, and this is now the outcome. So I'm kind of like distancing myself from the outcome. Now imagine if I'm the one that just takes ownership of that decision, regardless of what caused me to have to take that decision. If it's an outside force or an internal thing, I'm going to claim ownership of it. So if I'm deciding to take a trade, The moment I click that buy button, I resign myself to the fact that I made this choice. I looked at the market, I decided to enter. I'm not entering because Dave gave me a trade idea or Samir told me, hey, this is a good place to trade. I'm saying, me, Richard, I decided to take this trade and I claim ownership of it. So if it goes wrong, meaning it goes to stop loss or something like that, I'm just going to be like, you know what? I decided to take this trade. I'm just going to accept the loss because it was my decision. That way, in future, when it comes to having to make a decision, I will put pause first and I'll say, you know what? If I'm going to be making this decision and I'm going to claim ownership of this decision, let me make sure that this is the right decision to take. So you'll step back, you'll pause, you'll review everything and you say, okay, I'm happy with this. And then you enter again. It's going to force you in a little way to kind of consider the impact of your decisions, whether it was quote unquote your decision or not. I don't know if Dave and Samir you're following with what I'm saying, but the general gist
You
is
just completed my words. You explained it in a good way. I missed few words here and there, but I agree with you.
awesome. So yeah,
I do also agree. Yep.
Yeah, I just think that a lot of people will feel less like the world is beating down on them if they just claim ownership of the decisions that they make. You can only work on something, or let's say you can only address something if you recognize your part that you've played in it. This trade did not go in your direction. Yes, you took a trade based on a flight to fancy or a FOMO trade or a fear response or whatever. Just claim ownership. You made a decision. Now, the next time, are you going to make that same decision, knowing that you're the one responsible for that outcome? Probably not. You'll probably put pause.
Indeed. I think one thing that can, if I can add to that, and it's something that helped me, is I used to be very married to my trades. So because I claimed ownership of the decision, I was afraid of making the wrong decision. So once I took a trade, I would refuse to accept that, hey, that was the wrong decision. And then gradually over time, I stopped being married to the trades. And now I treat them like, I don't know if you guys play any sports, but consider it like basketball. You're practicing your jump shot. You're not going to be married to every shot that you throw. You might throw, I don't know, 100 shots in a day. If you treat your trading a little bit like that, I think it could help. Yes, you're taking the decision. You're assuming that I've made the correct decision. I've analyzed everything I need to analyze, and this is what makes sense in the moment. I assume it, and then you let it go. You let it go because the outcome is not yours. So treat it like the basketball that's in the air. You took the right position. Your feet are well placed. You released how you were supposed to release. You've tried that multiple times before. You're not hungry. You had a little bit of food before eating to have a little bit of strength, whatever you want to say. And then you're not married to the ball or the trade once it's in the air or after you've pressed buy or sell. And I think it helps. And it's probably why, oh, I see some nice movement. It's probably why I'm able to take multiple cuts in a day and it doesn't bother me anymore. It's because I'm not married to trades like I used to. So every time I enter a trade, I'm ready that, hey, this might be a miss. Same thing as when you're throwing the basketball. You're throwing it the best way you can, but it might just hit the rim and bounce out. It might, I don't know if it happens to you guys, but it rolls around the rim and then falls outside. You think it's going to go in. You think it's going to go in. And then it doesn't work out. So if you're not very married to your trades, and it can vary, I think it's probably easier for somebody who's trading intraday and taking multiple trades than somebody who's maybe a swing trader and, waiting days or sometimes even weeks for a trade to happen and taking it and it not working out. It's going to be harder for some more than others. But if you're not married to your trades, I think you'll do better.
No, I agree with that.
I agree with that. Yeah.
The thing is, we as humans, we don't like being wrong.
No.
We want to be right. And the thing is, you can't always be right, and you have to accept that. So you've made a decision. Now you need to accept the outcome. It's as easy as that.
That's it.
All right.
I see somebody's calling for gold to break out.
Yes. Alvin is saying, expecting gold can break out from 5057. So we're tantalizingly close to the New York Open. We've already got a little bit of a break above this area of consolidation, basically. We need to see if it's going to close above already another 20 seconds or so, and then this 5-minute candle closes, and then we can see whether or not it's probably going to be a close. The question is, what is the New York Open going to do?
Indeed. We're going to see what happens. For me, like I was talking about with Victor the other day, my inflection zone. So basically the point where, for me at least, I say, okay, we're back in bullish territory and not just moving sideways. This would be above 5100, more or less. So we'll see if we break that 50, 57, like the person said, and go above that 5100 area and see if we continue higher.
I mean, we're already above 50, 57 on the CFDs at least. We're on 50, 70 already.
Yeah,
So-
we're same here on the futures. We're at actually very close, 50.94. So
Yeah. So we're already like broken above that point. So the question is now whether or not this is the reestablishment or if this is just a sweep. Are we just going to sweep these highs, which is yesterday's highs basically? Are we going to come up to 50.86, 50.077 or 50.77? Are we just going to sweep it? Just into it and then start pushing lower again? Or have we now established a new upward trending channel? That's the question. So you're saying 5100. So basically,
if we are able to hold above these levels, and I'm speaking in terms of, overall longer term, not fast intraday trading, just overall longer term, if we're able to hold above these levels, we might push a bit higher. Last time also I talked about the GSR, so the gold to silver ratio, explain a little bit what it was. And if we see that ratio above 67 heading towards the 40s, so the lower the ratio, so basically the difference between gold and silver, the more bullish we are and the closer we are to a top. When we reversed last time, we hit a ratio of 43. Right now, it's at around 62. A few days ago, we touched 73. So if we head back up to the 50s, plus we're trading above that 5100 area, I think we could see a little bit more upwards movements. But we'll see. The ball is in the air and the market will let us know.
Exactly. So as it stands right now, if the all-time highs is the high and this low sweep that we've had is the low, we've created a lower high in relation to this previous high point up over here. So lower high in relation to the high. However, we do have a low, which was then followed up by a higher low. So this higher low, now we need to see, like Dave was explaining, this break that could potentially happen up over here. Here by me, it's 50.91 basically, but I think with your futures, the difference between CFDs and whatnot makes sense. So the idea is you still want to have this kind of like bracket over here, 50.90, 5100. It needs to close above. It needs to create a new high, or at least a higher high in relation to this previous lower high. So the idea is that you want to now from this bottom point down here, you want to create a new high in relation to this, then a potential, you could have a potential pullback from breaking above. It could also just be on the lower time frames that you see it, but the idea is that you want to see a break, you want to see it close above, potentially come back, either retest this high point, or maybe there is an area down here where you had like maybe somewhere around 48,900, 4,900, something like that. That price could potentially come back down to, and then re-continue its upward push yet again. And you kind of want this structure until you eventually retest the absolute all-time highs. But this can take a while. This can be a few days. This could be a week. This could be a month. We don't know. But what we do want is we want to see this lower high, this previous lower high swing. We want to see this broken and closed above, and then potentially either retested and then continue higher, or break through and then fail to continue lower from here. We want to, this we don't want to see, if that makes sense.
Exactly. I definitely agree with that analysis. I think we also want to see the velocity of the move. So how strong are we going to be able to break that level? Again, it's an area. I said 5,100. You said 5,094. It's never an exact number. It's always an area to remind everybody watching. So we'll see how bullish the candles are, how much displacement there is above that level. And what would be very bullish, a very bullish sign to me, would be a break, a hold, and we wouldn't retest much lower than that. I think that would be a sign of maybe panic buying or exactly. So something like that would be a very good sign of bullishness for me. So we'll see what happens. We'll see what happens after New York Open.
Yeah, no, I agree. We are very close to New York Open. I just want to get to this question quickly from Pali, asking where can we get the position sizer? It's not in MT5. So there is a link. If you just scroll up in the chat a little bit, here is the link for the position sizer. It is at www.earnforex.com MetaTrader Expert Advisors Position Sizer. If you just follow this this path, this link, you will be able to get to this position sizer over here, this one, and you will be able to follow the instructions to install it. And just like I said, just make sure that you understand what it is that you're using. So read through everything. There is a MT5 version and there's an MT4 version. Just make sure that you have the right one, the right version. The newest version, I think, is 3.13. You can download it. It is for free. Familiarize yourself with it. Test it on a demo account, see whether or not it works for you, and then there you go.
Right.
I'm just gonna download this position size calculator that you gave. But you guys was talking about gold, so I don't trade gold, but just for the analysis purposes, I just saw the weekly candle and it looks promising for a bullish move. So yeah, I'm not a gold trader. It has not given me that much that much edge, the way you want to say it. So just for the analysis purposes, I do think we can continue to the upside. This might be a fuel that can push price higher, which was a deeper pullback we saw on gold. So yeah. What about silver though? I think it also melted crazy. Okay. So what
Yeah,
are
so
your thoughts on silver?
you wanted to say, Dave?
No, I was going to let Samir finish.
Oh, okay.
So what are your thoughts on this pair or this asset?
Do you
Silver?
want to bring your screen up, Samir?
No, I'm just asking Hugh. I think I'm really 50-50. I don't know if it will hold this area and will continue to the downside, or if it breaks this area. So I just want to know, what are your thoughts on this asset class?
You're asking me or
So,
Richard or both of
Yeah,
us?
yeah.
both
You
of
can,
us.
both of us, yeah, both of you.
Okay,
Jay,
I'll
maybe if
give
you want to, you can answer
uh,
him.
throw me under the bus, huh?
Yeah, go.
Okay. Well, again, I am really following gold to make my decisions on silver. So far, I'm just like you. I'm in a neutral area because how can I say, the response after that huge down move on silver has been less meaningful than gold. Gold, I could maybe share my screen.
Yeah,
One
you can do that if you
second.
want to.
Yeah, it's going to be easier to explain.
Explain.
All right, share my screen.
Okay, where is...
Are you seeing it?
We need to just confirm which one it is. There we go. It's the guest one. Yeah.
Yeah, yeah.
Perfect. All right, yes. So you see a lot of lines in my drawing, but if maybe I could do a split screen here so we can compare gold to silver. And then let's put this maybe on a 4-hour chart and this on a 4-hour as well. So we have silver on the left side and gold on the right side. So if we compare both assets just visually, you can see that the recovery of gold has been much stronger than silver. Let me get my marker. Yeah. So gold, sorry, has recovered, I would say, about 50% of the move. Whereas in the case of silver, we've recovered and we've stayed and we've made a new low, which hasn't happened in gold because in gold, you had a low and then you had a higher low. Whereas in silver, you had your low and a lower low was put in place. So I would say, in my opinion, silver is weaker than gold at the moment. So I'm more watching what gold wants to do, and I think whatever silver is going to do might lag gold. And like I was saying before, I'm also watching this gold to silver ratio. I know I keep yapping about
Is
it, but
this just me or is it everybody?
What? Hello?
I think there was some network issue from Richard.
From Richard?
Yeah.
Okay, so I'm gonna show you guys the gold and silver ratio
Okay.
that I use. So this is a daily chart. Let me put it actually on a weekly chart. So if we go way back when gold and silver when silver made its top back in 2011, the ratio reached about 38, and now it reached about 43. So basically, the lower this number, the higher the asset it's going to be. So right now, I would say in a consolidation pattern, we're around these 60s and 75s. If we're above 60, it's bullish. So I'm still, I would say, maybe 60% more bullish on both assets rather than bearish. I think we can see, let me go back to gold. Yeah, I think we can possibly see some more upward momentum on both assets. Is just that right now, if we compare silver to gold, it seems to be lagging in terms of momentum. So What we would want to see is for silver to break this level, then around here we'll encounter some resistance around the 90s. So maybe a pullback like that and a recovery all the way to 50% would make me pretty bullish on it. But right now, since we're in the lower third of this move right here, it's still lagging in my opinion.
Sorry, guys, my internet crashed out there for a second.
No problem.
So I missed half of your analysis, but I assumed from the end of your analysis that you do still believe that silver has a potential to push higher, but it is still lagging right now in terms of its potential to push higher.
Exactly. I mean, if we measure from here to here, from the bottom of the move when it went down, our inflection point, like it's written here, is around here. So we're in the bottom third of this move, whereas for gold, we've already come close to half of the move, and we're testing the 50% move. So I think gold is the more bullish asset and silver is lagging, but it might be actually an opportunity for more upwards momentum if we continue to the upside. So I think we just have to continue to monitor, see what the assets do, and the markets will let us know eventually.
Yeah, that's definitely the one thing that I take into consideration when trading is I don't try and predict where the market is going to go. There's no point for me to try and predict, because predicting, I just don't have all of the information. Let's put it like that. I have a good amount of information, but not all of it. So,
sorry, my screen dropped.
Oh no, that's okay. I'm bringing mine up. I don't have all of the information, so for me, if I see something's happening, it's more inference. It infers a certain thing rather than speculating. Mm-hmm. So I try to trade as things are happening, and I just make sure that my strategy is built around giving me the best probable outcome based on what is currently happening, versus me speculating what I think is going to happen and then trading based on that speculation. I know it sounds like it's the exact same thing, but in my mind, it's vastly different.
But it's so fun to speculate, Richard. We're speculators. We have to speculate.
Speculating is fun, but getting to know that you were right, just like that's where in the brain, just that nice happy feeling, that dopamine release just pops in. It's just like, look, you know what you're talking about. Whereas anybody can make a prediction and then, gold's going to hit 10K in February 2026. And then it's just like, okay.
Yeah.
Let's see if it happens. And then if it doesn't happen, nobody's going to go back to that person and be like, hey, you said gold 10K February 2026. So everybody wants to be right. That's just kind of like the thing. Yeah.
That's true. Speaking of being right, since we were talking about psychology and things like that, I remember another time I was trading, and I was trading with a friend of mine, and I was explaining what I was doing. He was a trader also. He doesn't trade anymore, unfortunately. But I saw the setup. I told him, hey, this looks bullish, but I'm going to short it. And then I shorted, and he asked me a question, which I'll never forget. He was like, David, do you want to be right or do you want to make money? And it stuck with me till this day, because there is a difference, believe it or not. And it took me a while to understand, but there is a difference. There is a difference between making money in the market, so accepting you have no control, and then wanting so bad to be right that you're constantly fighting it, and you want your idea to happen. Your idea might end up happening, but you're just going to lose a lot of money in the process trying to prove a point. So interesting anecdote. I've never forgotten that.
I think that when it comes to questions like that, do you want to be right and do you want to make money? Being right doesn't necessarily mean that you're making money.
Exactly.
Because I can say, you know what? I think this thing is going to hit stop loss. Congratulations, you're right.
You're right. Exactly. You just lost.
I think that makes sense. It's just like it really does. I just think that people are way too concerned with the outcome and not concerned enough with the process.
The process, yep.
So for me, the one infers the other one. So just because you're seeing good results doesn't mean that your process is as good as it can be. But if you've got a good process, you will get the results that your process inferred. So if your process infers that you're not taking this seriously and you're really not paying attention, you're not going to get good results. But if your process is built around the idea of good habits, good risk management, then the results will follow. So
no, that's true.
Simple as that.
I think traders have to become enamored, for lack of a better term, with the process and finding things out. And for me, it was, doing a lot of back testing and testing stuff while the markets were not, jumping all around, that made me fall in love with the process. I like researching. I like researching things everywhere, online, whatever. I'm very curious. So I think it's exciting when you test out an idea, you have the potential that, hey, this idea might work, and then you get the opportunity to test it out on the market. And the great thing about the market is you will get instant, unbiased feedback on, hey, is this correct or not? Because guess what? If you are right, if your strategy works, if your idea works, you will make profits. You will make money. The market will pay you for that research. But if you are wrong, if your testing and whatever idea you had doesn't make sense, well, you won't get that positive feedback. So that's one thing I really like about the market, is you get that instant feedback. Back in the days when I used to work in marketing, it was a big issue because you would make a campaign and you wouldn't know why it worked sometimes. You would have to wait 6 months to get feedback on whether your strategy worked and people were going to buy your product or whatever. We don't have that issue with the market. You have an idea, you tested it out last night. Today, you will find out, hey, does this make sense or not?
Yeah. I definitely aspire to that idea, but I'm also a forward-thinking kind of person, so I don't always care too much for the instant gratification.
Okay.
Because it's like, yeah, it feels good right now, so what's going to happen? Is this going to continue or what? I have that like idea of, is it going to carry on this way? Is the thing that I'm doing am I saying this correctly? Is the thing that I'm doing, no, you know what? Scratch it. My mind is just gone.
No, it's fine. I think you were trying to say that you don't need that instant gratification. You don't need that instant feedback that I myself appreciate. I don't know if I'm scarred from all the days of waiting 6 months to confirm whether or not my strategy was good. But that's perfectly valuable also.
Yeah.
I guess to each his own.
Yeah, that was more like to what I was like alluding is, I do like the instant gratification, but I like kicking against it as well, because it's just like, you know what, this can I carry on doing it like this? Like that instant gratification kind of like loses its like impact.
Got it.
Yeah, okay, cool. I just got another win, so what? And then you carry on with the next one. It's just like, I don't know if that makes sense. Anyway, I just wanted to mention to everybody. There's a lot of questions around the futures. Now, Dave here, just above Samir, is the futures lead for the YouTube channel. So when we do go live with the futures, you'll see in the description box down below, there is a futures YouTube channel. There's a link to that one. If you guys could go and start subscribing and start kind of like keeping your eyes peeled for that YouTube channel, there's going to be some interesting happenings very soon, I would
Very,
say.
very soon. Very, very soon. We have a lot of nice surprises for the community. Like Richard said, yes, please go follow the channel. Go watch me make a fool of myself. Make your comments. Feel free to say whatever you like. I've been trying to make educational content for the beginners. So for people who don't know much, or maybe even people who trade but who don't really understand futures, we're talking about tick values and what's the point? How many ticks in the ES? What is the ES? Why is it called? Why do we have a bunch of letters? Why is the NQ called NQH6, for example? What does the H mean? The 6 means, etc. And quick explanation: the H is for the month of March, and the 6 is for the year. So yes, please go check it out. And very, very soon, you will have all your questions answered.
So obviously Dave knows, and he's experienced, let's put it like this, the new platform that is coming along with the release of the futures platform, well, the futures program in general.
Yep.
He knows how awesome it is.
Platform
he knows
is great.
coming. So for everybody else, you kind of like have to just stick around. So I've been alluding to, or I've been trying to tell people, hey, listen, we've got this 10-year event that's coming on the 17th of February. Next week, Tuesday, 10-year Fivers anniversary,
Yep.
10 years in the industry leader, the literal best prop firm on earth, and still growing. I guess shameful plug, I know.
No shame, no shame.
On that day, we are going to have $2 million worth of prizes that we're going to be giving out. We're going to have keynote speeches from upper management, the CEOs. It's going to be Mickey. It's going to be Sol. We're going to have Gil Ben-Hur, the person that founded the Fivers. He's going to have a chat on that day. We're going to have awards for the community. We're going to have people come up and do little speeches. It's going to be awesome. And then on top of that, we're going to have announcements. Awesome announcements. So you will know exactly what is coming after that event and when it's coming. So please go, and in the description box below of this video, of this live feed, there's a link to the anniversary event. Go and register, or at least go and book it in your calendar for that day. Go and follow Dave's YouTube channel for the Fivers Futures. It's all going to make sense. It's all going to interlink at some point very, very soon. And I know I've been saying very, very soon for the longest time, but it's honestly sooner than you think.
Indeed.
Really, it is. So, yeah, go and prep so long for that, because before you wipe any sort of like smegma out of your eyes, futures will be upon us.
Yes, the futures will not be in the so distant future. Let's put it like that.
Here's a question from Barry for you, Dave. Will the data be included in the challenge price?
As of now, unless there are no changes, so don't hold me to it. But as of now, yes, it should be included in the challenge, the price of the challenge. So you shouldn't be paying for extra data on top of what you paid to pass take the prop firm challenge. So yes, as of now, it will be included.
See, isn't it nice to have Dave here? So guys, drop any futures.
Ask away.
Ask away. Just don't ask him when exactly it will be released or what exactly the name is of.
It's a surprise.
Yeah, those are surprises.
Barry said holding me to it. Okay. Okay,
Yeah,
Barry.
but as you can see, Barry is Oscar, who lives in a trash can and is a very big troll. So don't take
I
anything that
remember
he
this.
says to heart.
I remember this Barry. I forgot the name, the original name of this emoji or
Oh, the
whatever you.
character. It's Oscar.
Yeah, the character.
Yeah, it's Oscar.
That's
He's
from
Oscar.
Sesame Street, no?
yeah. He's from Sesame Street, and he's been living in a trash can for the last 30-something odd years. So that's his home. It's trash can Oscar. All right, so we've had the New York Open. Samir, have you been looking at anything specifically? I know you're pretty much just looking at US
I was
30.
looking at US 30. I have this paper trade running right now. I definitely would have entered this if, of course, it was not, Tuesday. And the reasoning behind is very simple. We had a trend line breakout, and the trend is established already. It is bullish. We had impulses to the upside. So my eyes is seeing it like this. This is impulse correction. And right now we are in the impulsive phase. If you caught a breakout somewhere around here, so definitely I am seeing another impulse, and then maybe we can get correction, and let's see what tomorrow's session is gonna do. But for today, I do think we have impulse correction, and right now we are in the impulsive phase, so we definitely can see another impulse till at least this area, which is 685 50685. I do see price can tap that area. So, and the entry pattern was pretty clean. As you can see, another impulse and type of correction, I would have entered somewhere around here. And stop loss placement can be below this low because it should be logical stop loss. If price break this area, it means this trend line is not holding anymore. We might can get a deeper pullback, and we might can even shift the trend. We don't know. So as of now, I'm bullish on this one, and my trade should have looked something like this. I know it is past this area, but what can I do? My risk to reward is something like this. So here you can go break even if you decide to take this trade. But analysis wise, impulse correction, market structure, it looks very clean. We had a fresh breakout, so definitely there are buyers interested in this particular area. So I do think we can get another impulse to the upside. And even if I draw some yeah, there is nothing to draw, to be honest. We just broke out of this beautiful consolidation, which we was, I don't know, we took like a month here. Yeah, 33 days we was stuck in consolidation. Right now we have broken this area, so definitely buyer seems interested in this kind of price action. So yeah, let's see if we tap this area or not. Looks clean to me for buys.
Awesome. What do you think, Dave? You don't look at US 30 at all, but
I don't. I was actually entering my NQ trade right now. That's why you lost me for a second. Let me look at the US 30 right now.
Well, you've spoken about entering a NASDAQ trade, an NMQ.
Yes, I just
interested. Let us know what your views are on NASDAQ or NQ for US 30. I have mentioned my bias is bullish. Let's see.
Sure. Let's see. Let's jump on the YM real quick right now.
Yeah, you don't have to bring up your terminal or anything like that, but you can bring up your trading view, and then you can maybe walk us through.
That's what I'm doing. Just 1 second.
You can share, yeah.
I'm still
too many screens.
I feel I don't have enough screens, actually. I made a video. How many screens do you need? I have 3 at the moment, but I think I might need about 6 to have every.
I think that's why future traders have, like a lot of screens.
Yeah.
Yes. The thing is, I use a lot of, well, now that we're live streaming, I'm also using the platform we're using for streaming, etc. So
can't accidentally.
And then I have actually I've been authorized to show it, but I'm hiding it.
Oh,
Yes, I don't want to
very
show it yet.
interesting.
I don't want to show it yet. Maybe I'll show it this next live. Maybe I'll show it Thursday. So we'll see.
Dave is a tease, guys. Dave is a tease.
Indeed. Keep it interesting. Interesting breaking out. Now you have me interested in trading the Dow Jones. So we have had a very interesting consolidation for the past 2 days. We had this huge up move there. The only place where I might have taken a trade would have been, so I used trend lines and volume analysis to usually take my trades. So analyzing the volume of the past few days, we have what is this yellow line here is called the point of control. So it's the place where for the past few days there's been the most volume traded, volume at price around this level. So combining this, so we have here what's called a value area high, value area low. The trade I possibly would have taken would have been seeing, okay, we are trading near this point of control, so near this area. We break below near what's called the value area. I probably would have started building my position around this. Let me do like you guys do. Let me try to find a quick quick arrow. Yes, I probably would have started building my position around here or around this pullback at the low of this consolidation here, because we are at what is called the value area, so where prices are theoretically cheap based on this volume profile here. And then I probably would have added as we broke out of this this pattern right here. So it's a combination of levels, somewhat of a trend, and looking at what the volume is doing. Now, taken in real time, I'm also looking at other indicators, market internals, so the tick charts, the fold ratio, and sometimes the VIX. I can gradually explain these in further detail, but that's where I would have entered. Now, exits, because the trade is not completed without exiting.
Yeah.
So to me, let's get the brush. All right. So I'm always taking my first, what I called my payroll exit at the previous high. So somewhere around here on the first impulse. This guarantees that, okay, you've entered with, let's say 3 contracts and you're getting paid for your trade. So you're getting paid for your work. And then the rest for me is, I call it the bonus. So let's find out if we're going to get some extra bonus for our work. And usually I do measured moves. It's a function of how much I'm risking. So I'm trying to do a 2-to-1 or maybe a 3-to-1 and basing it on, I need to practice more on TradingView to be faster. Basing it more on the previous consolidation. So if you look and I measure this, we have 1 measured move and 2 measured moves. So I am taking my profits. Like I said, first profits here, second profit would be around this area. And you can see many people are thinking the same way, because that's why you're seeing a lot of wicks on the candles, is people maybe entering where I entered, risking the low of the consolidation and taking their profits in this area. And I'm positively certain that around this level, which is the second measured move, we will probably get some wicks and some profit taking. So profit 1 is previous high, profit 2 is here, profit 3 is here, depending on the amount of contracts I entered. And that's the same setup I'm using right now on the NASDAQ. And actually the trade is looking pretty good.
So you
I
took a
want to ask
buy.
one thing. As you mentioned, you would have entered at somewhere around that area where there is a marker. So I wanted to ask,
Here.
as it's gonna be a market open, so
Market is open, yes.
so you would have entered the trade regardless of the opening hour or that opening bell.
Well, I would have taken that trade. So here it would be 8 a.m. my time and then 9 a.m. my time. So I'm entering 30 minutes before the market open. I usually try to enter a maximum. Is that correct? I won't enter any trade after 9 a.m. because the market opens at 9:30 here, because I want to give the price 30 minutes to show me what it wants to do. So if there was not much displacement, so let's say I entered my first here and added here, and then around the open we were still too close to my price, I probably would have exited, because we get some weird price action at the open. So I usually enter either interesting, you see there's selling now, we're seeing some red prints, so profit taking is happening at right before that second measured move, which is interesting.
Dave, I'm going to have to stop you there, my friend. We have, unfortunately come to the end of today's stream. It is 3 o'clock GMT. So for everybody that was here, thank you very much for joining us. Thank you very much for commenting, subscribing, liking, and just enjoying the day with us. Please come and join us again tomorrow. Any other questions that you might have for Dave, you can go and drop it into any one of the videos on his Futures YouTube channel, and then you'll see Dave again on Thursday. Anything last from yourself, David and Samir, before we sign off?
That is it.
Well, on my side, thank you for having me, and I'll see you guys on Thursday. Go like the YouTube channel for the futures. See you soon.
Awesome. Yeah. Thank you very much, everybody. We'll see you again tomorrow, same time, same place. Come join us again for another live stream, and then have a great day, and always ensure that you trade your plan. Cheers.